NDTV Profit. My name is Mihika Barve and you're watching All You Need to Know. Over the next half an hour or so, we'll tell you everything you need to know to start the day on the right note. Indian equities logged the worst week in over a month. Implied open, however, in the positive territory this morning. Muted quarter for HDFC Bank. Net profit rises marginally quarter on quarter at 16,512 crores. Misses estimates, provisions surge 3 times. Brokerages, however, turned positive on the stock. Wipro sees the net profit rise 6% on a quarterly basis at 2,858 crores. EBIT, however, declines 9% during the same period. Heavy selling in US technology stocks ahead of earnings this week. Nasdaq loses over 2%, S&P closes below the 5,000 mark, Nvidia closes 10% lower, wipes out $200 billion of market cap. And Hong Kong's Food Regulatory Board recalls 3 MDH and 1 Everest spice mixes after detecting cancer-causing ingredients. Let's get you a quick global check. Now, the US stock market came under renewed pressure with traders remaining cautious about geopolitical tensions. Furthermore, all eyes this week will be on the first quarter US GDP data, the Federal Reserve's preferred inflation gauge, and the quarterly financial results of more than half of the Magnificent Seven's cohort of tech megacaps like Alphabet, Microsoft, Meta Platforms, as well as Tesla. Then the Nasdaq closed more than 2% lower, followed by the S&P 500, which stood at 1% lower. Meanwhile, the Dow Jones did have some strength, closing 0.5% higher. When you talk about commodities, Brent crude prices opened lower near $87.07 a barrel after its first back-to-back weekly decline this year, as traders do weigh the potential next steps in the ongoing Iran-Israel conflict. Now, this came after oil prices surged 4% on Friday as Israel conducted a drone attack on Iran, which the Iranian foreign minister did not consider as a strike given its limited scope and lack of severity, and that's a Bloomberg report. Meanwhile, the US House also passed new sanctions on Iran's oil sector, which are set to become part of a foreign aid package. When you talk about the Asian markets, the early risers did open higher, partially recovering last week's slumps. When you look at the current rates, the Shanghai index down flat, just marginally down 0.06%, while the Nikkei and Hang Seng do show strength, with the Hang Seng around 2.10% higher. Now we're not joining by a global guest, and that is Mr. Phuc Hen Yap, which is the senior investment strategist at Standard Chartered Bank. Good morning, Mr. Yap.
Morning. Thanks for having me.
Yes. So up first, I want to talk about the interest rate cuts. You know, there are official statements as well as strategists saying that the rate cuts could be extended as far as the end of 2024, maybe even 2025. What are your expectations, and what does this mean for global equities?
Well, I think we published about a month ago now that our expectation was for 3 rate cuts this year, which was in line with the Fed's dot plot. But as you know, in the past month, what we've had is a very strong non-farm payrolls in the US. And also we had a inflation surprise in terms of the CPI print. Now, this was the 3rd upside surprise, right? You got January, February, March. So we think this actually changes things, and the market actually has repriced expectations now for 1 to 2. And we are actually reviewing as well. We're publishing at the end of this week our market outlook. So in terms of where the market is looking, 1 to 2 expectations. But I think it's important to note that the direction and the trajectory still, I think, is biased towards a cut. Question now is how much? And then we have to assess. We've got a PCE as well coming in. This is something that the market will be watching, and that's very important. So the narrative of interest rates obviously has got a very important implication for global equities. Expectation as rates come down, that is positive for equities, especially your growth stocks in the US. However, we're still maintaining a positive view on equities. We do think that unless a recession happens, generally pullbacks are healthy and a good opportunity for investors to average into the market. So we think that we're going through the earnings season now, and we do expect earnings growth to be still supportive, and earnings is still indicating its growth in the US. We're not heading into a recession yet, but that is something that we have to watch closely, any recession risk that comes later in the year.
Oh, thank you, Mr. Rapp. And one more question. Let's talk about India. How does India look to you as an emerging markets? What areas look more promising to you?
Yeah, we do like India. We think India is a buying opportunity at the moment, especially the India large caps. I mean, India has always been very expensive, although the medium-term story is well known and arguably one of the best structural stories in the region for the growth stories. And it's going through elections now, and I think the expectation is that if there's continuity in terms of the government and policies, that's going to be positive. So the pullback we see in Indian equities is an opportunity, a buying opportunity. We do like India large caps. We think there's a better margin of safety there. And within the sectors preferences in India, what we like is a bit of a barbell approach. We've got something defensive like in healthcare, but at the same time, we want something more cyclical like industrials and consumer discretionary. But we do see India as something that we like within the Asia-Japan region.
Thank you so much, Rapp. It's a little short on time, but thank you so much for joining us. Well, there you have it, maybe healthcare, industrials, or discretionary consumption. But let's shift focus to Indian equities then. The Indian markets did log the worst week in over a month. The equities, however, recovered a little on Friday after a 4-day losing streak. Now, HDFC Bank will be in focus on the back of their fourth quarter earnings. And the company posted marginal gains in profit and the NII in Q4. Harsh joins us on more key details on what the brokerages are saying. Harsh?
Well, yes, thanks for that, Mihika. Good morning. For context, your net interest income went up roughly 1% or so. After that, on the OPEX front, you saw a couple of one-offs, 1,500 odd crore of one-off on the OPEX side, as well as on the provisioning side, almost an 11,000 crore one-off on the provisioning side of things. There's also gains coming in from Credila. So there were 3 to 4 one-offs, which this quarter really was the highlight of. And thereafter, profit after tax improving just by about 2% on a sequential basis. And that's probably the number which has been arrived at after all of these one-offs. So that's something to consider. Now, in terms of perspective, your asset quality continues to remain robust. So your GNPAs have come off, in fact, by 2 bips on a lower, on quite a low base. So that's one positive. But outside of that, the one-offs and the manner in which the street will read that is what is key. Quickly moving on to what brokerages seem to suggest. Largely, brokerages are constructive or positive on it. Let me pull up something like a Bernstein. They believe that the provisions made are somewhat of a positive because asset quality has not been impacted as a result of this. NIMs and deposit growth were the key positives for them. The main concern will continue to be the lack of a meaningful increase in loan yields and the floating provisions, how the street reads into it, even though they were completely voluntary as per management commentary. So a couple of positives on this count, but there are also negatives on how the street will read into some of these one-offs.
Thank you so much, Harsh, for those insights. It will be key to see how the markets react to the earnings. But we now shift focus to the IT space, and we had Wipro that came out with its March quarter numbers on Friday. And the company witnessed a 6% uptick in profit, which met street estimates. And Rucha joins us with other key details on the same.
Thanks, Mihika. So, Wipro reported its numbers last Friday. Revenue was down by 0.4%, while EBIT expanded by 40 basis points. Net profit was up 6%. The key highlights are that the total bookings was down 5.5% on a total year basis, while net headcount was negative. Attrition remained stable. The management also mentioned that it is seeing green shoots in the Capco business, which was up 6.6% QOQ, while it also stated that the demand environment remains unchanged. Let's move on to what the brokerages are saying. While CLSA states that the demand environment still remains under pressure, it believes that the new CEO has a potential upside over the past CEOs because he knows what internal management is saying and the vision aligns with the founder's vision. So now we'll move on to the CFO of Wipro, Aparna Iyer, and what has she said on the guidance.
On pricing, the environment, in the last fiscal, that is for FY24, remained quite competitive. There is pressure in pricing because revenue is something that everybody is very concerned about. So the market environment is very, very competitive. There is pressure. That said, there are pockets where we are pivoting to high value transformation projects, or Srini spoke about how consulting is going to be at the tip of what we sell. There we are able to secure some premium. So the overall, I would say there is pressure in some pockets, especially in the efficiency led offerings, and we are able to secure premium in the newer technologies and newer areas and newer solutions that we are taking to the market. So overall, I would say for now, it is stable, right? As far as operating margins are concerned, you spoke about 19 to 20%. Like Srini said, first of all, we don't guide for margins, and like Srini said, we right now expect our margins to remain range bound. What we have done well, though, like I said, in a very, very tough revenue environment, we have improved our margins this fiscal by 50 basis points. This has happened on the back of the excellence that we are driving in operational rigor. We have several levers at play, including fixed price productivity, pyramid, the rotation, skilling, internal fulfillment. So there are many aspects that we are working on, and we are able to see results that are playing out in our margins. So we are quite encouraged. As we look ahead, we will continue to exercise these levers and also perhaps drive synergies in our G&A spends, with our acquired entities. So those are some levers that we've been driving, and we're seeing results. And like Srini said, we'll take it step by step. For a meaningful improvement in margins, I think the revenue environment needs to improve.
Well, that was the Wipro CFO stating that the revenue environment needs to improve. But we now shift focus on Reliance Industries, whose Q4's earnings are due today. Now, Street estimates that revenue and profits are likely to rise sequentially due to strong refining, retail, as well as telecom performance. However, the operating profit and margins are likely to be subdued. According to Bloomberg estimates on a consolidated and quarter-on-quarter basis, revenue may rise 5%. However, EBITDA may fall 4.5%, which could lead to a 180 points margin contraction to 18%, which was 19.8% the previous quarter. However, net profit estimates do seem positive. A 14% rise to 19,727 crores is what's expected. When you look at the segment-wise expectations, up first we have the oil to chemical segment. Now, according to a Morgan Stanley report, EBITDA is expected to reach its peak in Q4, the highest since June 2022, and this is despite the sluggish margins in the chemical segment, and they expect the gross refining margins to rise over $12 per barrel, and this is despite the reduced discounts on Russian oil. Then we have Reliance Jio, where expect strong numbers led by higher subscription additions as well as improved average net revenue per user. Now expect strong net UBS expects strong net subscriber additions at 10 million, and they expect the ARPU to be at 183 per month, and they expect a 3% quarter-on-quarter rise in EBITDA to 14,700 crores. And lastly, we have the retail segment where they expect a boost in revenue and operating numbers, and this is on the back and largely driven by higher footfall as well as store expansions that will drive the growth. They expect revenue to rise 22% year on year, which will be mainly led by the store expansions that have been seen in the last 2 years, and they expect stable EBITDA margins at 7.6. We also had Jio Financial Services, who reported their Q4 numbers, and this is on a standalone quarter-on-quarter basis. Net profit was up 10.3% at 77 crores, where total income was at 140 crores, and there was a rise in profit which was due to higher gain in investments and the deferred tax credit that the company did employ. And in terms of business updates, the vendor financing has started, and the company is also going to launch home loans and loans against mutual funds soon. And lastly, they've tied up with 29 companies for their insurance business, and they're also conducting top-level hiring for their asset management company. And with that, it's time for a quick break, but do stay tuned. We have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Good morning, viewers, and welcome back to NDTV Profit. You're watching All You Need to Know. Now, let's shift focus to the stocks that could be in focus today in trade today. And Puneet brings us the host of stocks that would be in focus on the back of earnings. Puneet?
So we're tracking HDFC AMC as the first stock on the back of good earnings reported by the company. Total income is up 33% compared to previous year, coming in at 851 crores. This is much above the Bloomberg estimate of roughly 724 crores. On a net profit basis, the company has reported a 44% growth compared to last year, while the board has also recommended a dividend of roughly 70 rupees per share. And the second one we're tracking is in the IT space, Persistent Systems. Now, the earnings were quite good compared to the previous year. Revenues are roughly 4%, while the other IT majors have reported degrowth, while the EBIT margin is down 8 basis points, coming in at roughly 14.4%. Net profit has gained a 10% growth compared to last year, while the attrition rate also came down by 0.4%, coming in at roughly 11.5 versus 11.9 on a quarter-on-quarter basis. The third one we're tracking is Irida. The results were really good on the back of strong growth. The total income is up roughly 34% compared to previous year, coming in at 1392 crores, while net profit is up 32%, and net NPA numbers have also come down 24%, coming in at just a little under 1%. Finally, for FY24, the outstanding loan book has grown 27%, coming in at roughly 60,000 crores. So strong numbers there. And finally, Oberoi Realty is could be buzzing on the back of Q4 update. Now, it saw bookings roughly of 1,775 crores, while for FY24, the total booking number is 4,000 crores. Do note that this is a drop of roughly 54% compared to the whole financial year booking of last year, which was roughly 7,000 to 8,000 crores. So these are the few earnings as well as business update that we're tracking right now. Back to you.
Thank you so much, Puneet, for those details. We have some more key stocks to watch and trade today, and we have Anushi joining us with details on counters like Ramkrishna Forgings, Laurus Labs, and more.
Right, so first on the list is Ramkrishna Forgings. Now, over here, they have announced on hold for their supply of components to the US firm, which is believed to be Tesla over here. The stock had rallied about 6.5% on the back of this news on from 18th of April onwards. So now, what's to see again going forward in trade today? Next on the list is Ultratech Cement over here. Over here, the board has approved a brownfield capacity expansion with an investment of about 504 crores. Now, with this proposed capacity will come in place through by FY26, and the existing capacity right now stands at about 147.3 million tons per annum. Third on the list is Hero MotoCorp. Over here, they've opened a new assembly facility in Nepal in partnership with the distributor CG Motors. This facility will have a capacity of about 75,000 units per annum. Again, 4 products have been introduced for this, wherein the local assembly will take place in Nepal. Last on the list is Laurus Labs. Over here, company's Andhra Pradesh facility clears US FDA inspection with 0 observations, which was for its Unit 1 and Unit 3. Again, this was the re-inspection which took place, and the capacity, if you have to look at the total capacity of Laurus Labs, that stands at about 7,500 kiloliters. So these are the 4 stocks which should be in focus on the back of these news.
Thank you so much, Anushi, for those details. We now move on to the primary markets, and ride-hailing app Ola Cabs is aiming for a $500 million IPO and is in talks with several banks over its initial share sale. Now, let's bring in Saloni with more details. Saloni?
Yes, Ola Cabs is planning for about $500 million of IPO and at a valuation of about $5 billion. Now, this is at an initial stage, and the lead bankers are yet to be decided, which will be decided after they have a formal pitch in the next 2-3 weeks. The company aims to file the DRHP in the next 3 months, and it also aims for a festive period listing. Now, for context, Ola Electric and sister arm already filed a DRHP in December. However, it's yet to receive SEBI's nod for the same. So both Ola Cabs and Ola Electric listing is likely to be happening this year. Just to give some understanding of the financials, Ola Cabs loss narrowed in FY23 to about 1,000 odd crores from 3,000 crore in FY22, while its revenue also rose significantly to about 2,000 crore in FY23 from 1,200 crore in FY22. We are yet to get our hands on the FY24 number, so we'll be vouching out in this update for the viewers as well.
Thank you so much, Saloni, for those details. We now shift focus to the FMCG space. Now, just days after the Nestle controversy, Indian masala companies MDH and Everest have come under the scanner of Hong Kong as well as Singapore food regulatory bodies. And let's bring in Sessa with more details.
Right. So the food regulators in Hong Kong and Singapore have warned people against using 4 products from 2 big spice brands, Everest and MDH, over the presence of ethylene oxide at levels exceeding the permissible limit. Now, ethylene oxide is a pesticide that can cause cancer, according to the US Environmental Protection Agency. And thus, while its usage is allowed in agriculture, consuming food with high levels of this pesticide may lead to health issues, including an increased risk of cancer. Following a routine surveillance program which led to this discovery, both Hong Kong and Singapore have banned the sale of 4 curry spices, which includes 3 MDH products that are Madras curry powder, mixed sambar masala, along with Everest's fish curry masala. Now, they have initiated recall of these products imported from India and have also advised consumers against consuming these products. While investigations are still undergoing, according to the pesticide residues in food regulation, an offender is liable to a maximum fine of $50,000 and imprisonment for 6 months upon conviction. So we are still awaiting responses from both MDH and Everest, while FSSAI is also yet to comment on the issue.
Yes, thank you, Sessa, and we will bring you the key updates from both the companies as soon as we get them. But shifting focus, US hedge fund Jane Street's law school against rival Millennium Management. Now, this is regarding a secret trading strategy which involves trading in the Indian derivatives markets. Now, as per reports, Jane Street has sued Millennium Management and 2 former employees for allegedly stealing highly valuable, unique and proprietary trading strategies. Now, lawyers of Millennium and 2 traders told the US District Court that the strategy was deployed in Indian markets, with reports citing that the lawyers of the defendant are saying India is lucrative. But with that, viewers, it's a wrap on this edition of All You Need to Know. But do stay tuned. India Market Open coming up next.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. You know, we are the, in many ways, we actually are the generation which is going to build the country. You know, our parents spent their whole life building roti, kapda, makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money. Hello and welcome to India Market Open. It seems like it's been fortunately a peaceful weekend when you look at Iran and Israel. Crude is under control. The pullback rally back home on Friday was very impressive. So it seems like we are off to a good start to the week.
Yeah, the strikes, if any, happen on Nvidia and not thankfully on the geopolitical
Like, did I miss
front.
something?
No, just that, and thankfully geopolitically all is well. I mean, not just from a market perspective, but even otherwise. You don't want this conflict to escalate.
It kind of on the show on Friday when we were all speaking, that's when it all sort of played out. But that was the fog of war, which now it's clear what has happened. Both sides have tried to sort of pull back and got positions where they can tell their constituencies that humne kar diya, so now no need to escalate, and the world is happy, everyone's happy. Let's hope it stays that way. So that sort of played out. Mixed cues, though, I would say, globally. And if you look at how the US was, NASDAQ was hurting. The strike was on Nvidia, as Neeraj was saying. So mixed trade on Wall Street, and NASDAQ was leading those losses down about 2%. What is seeming to happen is that a rotational play out of the whole AI drive is playing out. So you had stocks like Nvidia down about 10%. You had other players also hurting. SMC was down 23% on Friday's trade. in the US. So that's where the pain really is. This entire week is going to be about the mega cap results as well. So Microsoft, Alphabet, Tesla, how are they doing? Meta. By the way, Tesla really in focus and interesting to talk about as well. Elon Musk has postponed his visit to India, was supposed to kick off from today, saying he has to focus on all things Tesla, and rightly so, perhaps from a business point of view. He's had to cut prices of his key models as sales are dropping. So Tesla is hurting. Perhaps not the best time to come into a large market and say that I'm going to do X, Y, Z when you need to fix your ship at home. So yeah, Tesla numbers are going to be important. Bonds are hurting though, and 4.65% on the 10-year treasury. So geopolitical fears, though calm for now, remember it's still bubbling underneath the surface. So that's a wait and watch. Plus consistent Fed seniors and Fed official comments that are pointing to end of calendar year or early 2025 rate cut kind of timeline has kept the bond scenario a little iffy, I would say. Look at the pullback in crude, and that's reflecting really the relief that is playing out from de-escalation, at least for now, between Israel and Iran of tensions. It also brings to mind the question that what is the inherent demand situation if you can pull back 3% after a little of that tension eases. I would just say Asia is looking fine. We're looking like we're going to see a relief rally this morning, and that's really clear from our implied Nifty as well, that perhaps you're going to have a good morning and a good pullback, about 147 points perhaps up. Just I want to pull up the fund flows because I found this figure interesting. There was so much fear on Friday on what could happen next that you really saw volumes dry up almost, very, very tiny volumes. FIs were buying measly amount compared to what we see in the markets right now. But hopefully some of that fear has eased.
Yeah, and maybe the FI number has to do a lot with what HDFC Bank did on Friday, to be very honest. And maybe the options data. I was talking to some traders in Friday at a gathering that one of the investment banks had thrown. And the call was that the way the HDFC Bank calls were getting unwound, because there's so much of short position built in, that they had predicted, they said that we predicted at the start of the day, a trader predicted at the start of the day the HDFC Bank could see 2.5% uptick because of the buying that was coming on the screen. I don't know if this FI buying has got to do with that or some block deals, to be very honest. But anyways, the trade set up for the day. The good part was that while Nifty and Nifty Bank retreated until Thursday and Friday morning, two support lines, they respected those support lines, and which is a big positive. 22,000, the line in the sand for the Nifty. Remember, the call options were the highest at that point of time in Friday's session. 1.82 crore contracts written on Thursday, and therefore this was a big positive that the support lines were respected. And frankly, guys, if you look at what Nifty did versus what the EM index did or the Asia ex-Japan index did, quite brilliant, massive outperformance last week at a point of time when the whole of the world markets, because of the geopolitical stress, were coming off. Nifty stood resilient relative to almost all the indices. So that was a big positive as well on the index front. And you take heart from the fact that we'll start off higher today because Asia ex-Japan is doing well. And in terms of sectors to watch, one, the FMCG index, YTD, has lost 7%. It's a crucial week, this one, because there is Tata Consumer tomorrow, there is HUL on Wednesday, there is Nestle on Thursday. So three large Nifty FMCG staple companies coming out with results. Watch out for the FMCG index. If the commentary and not just the performance around demand from these guys is positive, that could be a big thing for FMCG stocks. So watch out for that one index. And while metals have got the global tailwinds around growth, somehow something tells me telecom still remains the sector to watch out for this week. The Vodafone FPO closing today. Bharti, what it has done the whole of last week, amongst the best performers. Indus Tower rocking as well, could be a very interesting pocket to monitor.
I'm going to add my favorite piece, which is defense. They might continue to do well this week as well. So that, remember, the PSU Defense Index is up substantially over the last couple of months. And even on Friday, before the market staged that recovery, your defense players were already leading the way in terms of buying at low levels. But let's just spend some time on this Big debate on social media regarding option trading, and I think it's got my attention because this has been happening for decades together. High frequency trading is a very popular algo trading mechanism which financial institutions or institutions with the power of money have very easily managed to have it work in the favor. But we talked to a whole bunch of analysts, F&O traders, option traders, and most believe that no matter who emerges victorious in this legal battle in the New York courts, it's not going to impact the Indian equity derivative market. It has kicked off a very heated debate, like I said, and market experts are accusing quantitative algo trading firms, quant algo trading firms, in misusing their technology or their power to, of course, skew the market against retail investors. But remember, option trading was never built with the essence of retail investors trying to make money off it, right? And unless there's any way to prove that this technology or these systems are built to deliberately sabotage unfair price discovery or work against retail investors, not much could be expected on that front. But just to put some numbers, and I think this is exciting, Indian equity derivative markets have seen volumes which are 400 times that of cash market versus what you see in other developed markets. In other markets, the derivative market volumes stand at 5 to 15 times that of cash market. India is at 400 times. So that just goes to show you the kind of play that's taking place in the Indian equity derivative market. Apart from that, these are, remember, powerful computers that execute trades. So they completely ignore fundamentals. All they do is have huge volumes and trades which take off or are executed in lightning speed. So that's what you want to keep in mind. Locally as well, so while you have the Jains and Millennium Investments of the world, locally you have the likes of Graviton Capital Research that actually is leading the way. But we'll talk about this at some stage through the day. But important in context of just marking it, because I think this was something that that press, social media was focusing on all weekend.
Samina, that was also because of what happened on Thursday and Thursday and Friday, and the move which left a lot of Indian option traders and retail traders hanging high and dry. And then this whole thing about Jane Street also having an Indian play is leading to the social media chatter. But tread with risk when you go into this space. No, I suppose.
Just my limited perspective out here is that we know that options trading has been around for decades, right? And institutions are making a killing. Just the fact that the tax advantage that some of these global companies now have and the access that they now have to the Indian markets in trading makes it a bit of a not so level a playing field, and that is where the issue comes in. Even for a Cat 3 AIF in India, subject to 39% taxation, but on the trading side, on the global front, if you have that tax exemption because of treaties done, it just makes it a not so level a playing field, which is what people have been complaining about now.
I mean, yeah, and I think the only one on the receiving end is retail investors, but there's nothing unfair in that sense.
The tax advantage is unfair.
Which is regulated, which has got nothing to do with a retail investor or an institution. And just to put, we've talked about the likes of Jane making $1 billion in profit. I don't know if you guys have heard about Graviton Capital Research. So they're a small Bangalore-based, I shouldn't call them small anymore. Their top line has tripled in 3 years. So they reported a top line to the tune of 3,500 crores. And these are prop books, right? So they don't do this on behalf of clients at all. And they clocked in a profit of 600 crores. This is a nobody. We don't even talk about players like these, but those numbers are significant. QE Capital to add to that list. So that I've got about 2 or 3 rather unknown, insignificant players in the algo trading space that have made humongous profits. So it's not just the international FPI players that are, making hay while the sun shines. It's also local players that have managed to do quite well. And remember, all these gains have come in when the broader markets have been flat. Just goes to show you the power of AI and computers and technology, right? So significant gains with insignificant movement on the benchmark. But like I said, we will delve in this a little bit more if it has any impact, but it was just interesting to mark this morning. But very quickly, let's move back down to what matters this morning the most, and that's going to be, I think, HDFC Bank. It did see a sharp run last week, so it's up about, 10% in the last couple of weeks. But what is worth noting is those numbers. They do seem like a mixed bag, in my opinion. On the face of it, it's a good set of earnings, but when you delve a little bit more into it, it seems like a lot of it was marred by one-offs. Brokerage is not disappointed, and I think that's what the street will take heart from. But a stock reaction is very unlikely, and that's largely because the counter already ran up quite sharply on Friday when we saw all those banking stocks do quite well. But just quick takeaways, the bank has delivered on two key metrics that mattered the most, which is NIMs and deposit growth. Asset quality remains solid. The main concern was the lack of meaningful increase in loan yields. They adjusted for one-offs, ROAs and marginally lower at 1.88, and profit was lower by about 7 billion rupees. But floating provision was completely in line with what the HDFC Bank has done over the last couple of years, so no surprises there, but neither is it an indication of asset quality. So watch out for HDFC Bank. We will do a little bit of a deep dive analysis with an analyst in a few minutes. Along with that, HDFC Asset Management, largely numbers were in line with what the street was expecting. Good numbers, to say the least. Wipro...
But brokerages are kind of not so bullish
not
on
so
HDFC.
Yes.
At 35 times
they
it's all priced in.
seem to be optimistic on HDFC
Really?
Bank, which I'm a little confused about.
No, the valuations.
Yeah.
Just that 35 times, is it all priced in? At least the Kotak note seems to suggest that, and I think the Morgan Stanley note also seems to suggest that. It's pretty interesting.
MK, on the other hand, doesn't seem too disappointed. So I think it's largely, again, not much of a reaction on earnings is what's expected. Wipro, once again, a weak quarter. Big promises. They've talked about how consulting revenue has going to go up. They said that the last quarter, and none of it was reflected in this quarter. Concerns remain. I think the big bet is on the new CEO, but a few more quarters down the line is what it's going to take to undo the sort of damage that the firm is currently witnessing. The stock, remember, will be one you want to watch out for. Brokerages on this one very conclusively maintain a sell. Some have even reduced their target price. So Wipro is not going to have a great day in trade this morning, guys.
What I found interesting is the new CEO, Srinivas's 5-point guideline for what he is going to change and what he is going to do. And what I also found interesting is that he's not rocking the boat too much. No big rejig structurally within the organization to effect that change. And it seemed fairly blue sky. Of course, Street will give him some time, to actually shake things up. Wipro's been through a lot.
Yeah.
But that's one common theme I see. We're going to do everything AI driven, and we'll be on top of it. We'll have to wait and see how they do it.
Yeah, but the only thing is that in a period of CEO transition, and people will relate this back to what Tech Mahindra is going through. There are changes for 2-3 quarters. Growth doesn't come. People will now attribute this to it. So the Motilal Oswal note says that in line of the fact that there is a CEO transition happening, it might be the lowest growing top tier IT company. So why buy into it?
But cause and effect, is that why the CEO is transitioned in the first place?
Yeah, but because there's a new CEO.
Yeah,
I mean, that's a belief. I'm saying that's a hypothesis that some people have.
Yeah.
It may be right, it may be wrong.
Yeah.
So, in terms of stock performance, while the earnings have been disappointing and brokerages are disappointed or seem to be remain disappointed, it's actually not done too badly in 6 months. The stock is up 18%. Infosys, TCS, LTI, Mindtree, and I'm only comparing to the tier 1 names. They've all actually been dismal. I mean, look at Infy's performance. If you can pull that up over a 6-month period, it doesn't look good. LTI Mindtree is down 14% as compared to Wipro, who's actually lagging its IT peers. Infosys over a 6-month period is down about 1%. TCS is probably a close positive. It's up 15%. HCL is down 15%. But Wipro is up 18%, guys.
Yeah.
So, since 2020, by the way, Wipro is the second best performing IT major.
So all said
it's
and
done well.
So
on the
valuations
bosses.
now is looking also better priced. Valuations are better. I mean, like everyone else, their headcount has also slipped this time. So all said and done, Wipro is one to watch out. Maybe relatively, it might not see too much of a drubbing, but we'll wait and see. Persistent is the other one. Since we're talking about the tech pack, set of numbers that came out, and the results have been seen as fairly positive. I would say those numbers on your screen. A beat on the top and bottom line, at least. Operating margins were hit due to higher costs, etc. The professional costs have also gone up. But their healthcare segment seems to have done this time. The healthcare vertical has actually been the driver for the last 3 quarters, was up 16% Q on Q. BFSI has recovered after 2 muted quarters, up 1.8%. So despite the drop in margins, 50 bips a year on year, you might see a decent kind of a response to a Persistent today. So that's that's one on the list in terms of earnings impact that you could see. JFS was the other one I found interesting. Now, Jio Financials, of course, in the news for a variety of reasons that tie up with BlackRock. What are they going to do? So their numbers are okay, not bad in terms of the data that we have. Total income up 5%, net profit up 10%, that's Q on Q. But what they aim to do and what they plan to do, that might enthuse the street. So they launched a debit card. They want to use AI to, make up for the fact that they are a late entrant and tap this space. They've tied up with 29 insurance companies. They've launched the voice box also, the kind that now, of course, Paytm, BharatPay, everyone has. So they've launched that also in pilot stage in Mumbai. And I think looking at the group, the stable they're from, and the kind of scale that they managed to build, JFS is one maybe which could see some moves today. Laurus Labs was the other one. So a US FDA inspection at their API manufacturing facilities at Andhra Pradesh has closed with 0 observations. So that has been a positive for them. And that inspection was 15th to 19th. You might see some of move in Laurus Labs. So a lot of the pharma companies have had news flow over the weekend, from Biocon to a Zydus to a Dr. Reddy's. And pharma has really been broadly an underperformer, but Laurus Labs, I think, might have a decent day.
Yeah, I mean, it's a big facility to not get to get 0 observations. Usually we've seen stocks react. I was talking to Varsha, and it's already contributing, so in some sense not a surprise, but the fact that there is 0 observations on a very large facility, the sentiment could be positive, you're right. So certainly a good stock to keep in the mix. Just a few from my end. GSPL, to my mind, very likely the stock of the day today, for the wrong reasons, of course. The tariffs, PNGRB has sharply cut the tariffs of a key HP pipeline in Gujarat, the network in Gujarat, by 47%. The note from Citi says that this tariff cut is 64% lower than the tariffs that GSPL was seeking. I mean, that is something, and which is why I love the lines that they have used in the note, by the way. I mean, not love it, but really they're just qualifying. Citi calls it a tariff cut, calls the tariff cut a setback of epic proportions. Well, let's see if we have an epic reaction to GSPL in the session today. And of course, watch out for Gujarat Gas, because GSPL holds 54% in Gujarat Gas. So the business doesn't get impacted, but there might be an overhang. So Gujarat Gas, but GSPL predominantly very likely to be that one key stock which will react negatively. Ramkrishna Forgings, and we spoke to the management on Thursday, wherein they spoke about an approval for supply of components to a US EV maker. They didn't name it, presumably it was Tesla. Now it's been put on hold by the US EV maker. The stock had gained in 2 days. Let's see if there's a pullback in the stock in the session today. So that's another one to watch out for. And I'll watch out for JSW Energy, amongst others. 700 megawatt solar project from NTPC. This is large, and therefore could see a bit of a reaction from JSW Energy. It's an expensive power stock, but could see a bit of a reaction. Anything else, guys, on your radar? Lots of other stocks, of course, but
yeah.
What else?
A couple of things that I was looking at. I thought IREDA's numbers were interesting in Q4. Total income is up 34% year on year at 1392 crores. Net profit is also looking decent at 33%. IREDA might see an up move there. Sterling and Wilson also I found interesting, because it's sounding like a turnaround kind of thing. A lot of focus on solar energy, but their order book has improved. Their revenues have increased to 1,178 crores versus 88 crores year on year. Their EBITDA is at 29 crores versus an EBITDA loss of 352 crores year on year. And net profit, they've moved from a 421 crore net loss to a 1.4 crore net profit. So a bit of a turnaround story there. We'll see if the stock is rewarded by investors for that. And of course, the big one, you're going to have Reliance results later today. Just putting out Bloomberg estimates there, revenue may rise 5%, EBITDA may fall 4.5%. Margins also could contract about 180 points, but net profit, this is consolidated of course, may rise 14%. I would watch out for what's happening with Jio there more than anything as well.
Yeah. Couple of other stocks which may react. UBS on Voltas. Maybe the note came on Friday because they say the closing price is 1292 and the closing price is 1300. So maybe it came during market hours, but it's an interesting note. They've upgraded the stock to a buy with a target price of 1800 versus 1300. Currently, they believe Voltas will surprise on market share in the room air conditioner segment, and the market share could actually reach 23% versus 19.5%, which is the consensus currently. So further re-rating potential. So watch out for Voltas. In case it reacts, you know why. And two other stocks, Sona BLW. While Elon Musk visit getting postponed might hit some of the stocks, do watch out for Sona BLW because it's inaugurated a new manufacturing plant in Mexico, to cater to the growing EV demand in North America, which contributes to 40% of the company's revenues. So Sona BLW could be interesting. And guys, Zomato, we use it day in, day out. It's hiked the platform fees to 5 rupees from 3 or whatever it is.
From 4.
From 4, yeah. So 25% uptick there. Maybe there's a bit of a reaction.
Yeah. We pay the platform fees eventually.
Do we?
Don't we?
I thought the restaurants, maybe. Yeah.
It's going to be passed
between
on.
somebody.
Zomato is not paying. They're just making. That's all we know. A couple of other stocks to mention. Neeraj mentioned today the FPO for Vodafone Idea closes. To just put a number to that, they've been subscribed about 49% by the closure of the second day of bidding, which was on Friday. So you want to keep that in mind. The response has not been as euphoric as Vodafone Idea would have liked. So you want to keep that on your radar. Apart from that, we reported on the likes of Brigade last week and Mahindra Life Spaces, where those numbers have been in terms of business update have been looking pretty good. This morning we're reacting, or the market will react to Oberoi Realty. They saw bookings worth 1,775 crores in the fourth quarter with 228 units booked. For FY24, bookings stood at a record of 4,007 crores with about 705 units. So again, it's been an eventful period for most of your real estate majors. Oberoi Realty not too far behind. In terms of meetings, you've got ICICI Bank, where the board will be regrouping, or meeting rather, to take stock of the situation, and they will also consider fundraising via the issuance of debt securities, and this happens on the 27th of April. So those are a few more names you want to keep in mind. But like we said, the big story will remain HDFC Bank. Don't expect a very sharp up move on the counter, especially after what we saw on Friday. The numbers on the face of it look good, but they've been marred by a number of one-offs. But before we go to Harsh to get a sense of what brokerages think about HDFC Bank, let's listen into the company's MD and CEO talking about deposit growth and its transitionary effects, and of course what lies ahead for the bank.
While the Q4 mobilization is extremely healthy, I must upfront tell you that there are some transitory involuntary flows that have also come in, which is obviously more than what we had anticipated. But even adjusting for that, the retail ones are rather healthy, which is there in the deck. So will I be able to maintain this kind of a momentum, etc.? As you know, you take a long-term average of over 6 years or so. There is a certain proportion of total deposits which come in Q1, which is probably the lowest as a proportion. Q2 and Q3 are more or less similar in terms of proportion, and the largest part of the proportion in a year comes in the fourth quarter, and which is what we have. And this is not anything different from what we see in the banking system. This is a very similar pattern that is there, plus or minus some kind of a change.
All right, so that was the word coming in from Shashidhar Jagdishan. These numbers were watched very, very closely after I would go as far as to say, a bit of a debacle in Q3. Street, at least for now, seems to be a bit relieved. Harsh, would that be the way to look at it, looking at how brokerages are responding this morning?
Well, yes, Tamanna. So just extrapolating the point on deposits, 1.3 lakh crore is the deposit number with regard to retail deposit traction. So very strong, 1.66 lakh crore on the overall deposits count. Again, very strong numbers with one-offs, obviously, as elaborated or as pointed out on the con call. But let me quickly take it to the 4 one-offs which Samina was earlier alluding to. One is the Credila sale. The other one is some ex gratia payments made to employees, 1500 crore odd on that number. There were floating provisions of roughly 10,900 crore which were made, and the tax rate again this time around also saw some one-offs. So those were the 4 major one-offs which really has distorted that profit after tax number. Now, in terms of how brokerages are viewing it, bank, according to Bernstein, has delivered on 2 key metrics that mattered the most, both on the NIMs as well as deposit growth. They believe that asset quality remains solid, NPA and credit costs remaining very, very healthy at this point. The main concern, though, for Bernstein is that there's a lack of meaningful increase in loan yields. This was spoken about on the con call as well. Adjusting for the one-offs, Bernstein suggests that the ROA is at 1.88%, slightly off, but the profit itself and the ROAs are lower by roughly 700 crore given the one-offs. Now, in terms of the floating provisions, according to management commentary, Bernstein points out that they were completely voluntary and there's no indication of any asset quality problem. Bernstein gives this a thumbs up, a buy rating, 37% upside. Target price remains unchanged at 2,100 rupees. Very solid upside pointed out there. Quickly moving on, Motilal Oswal also believes that there have been a prudent deployment of the one-off gains and that has been done to boost floating provisions. They estimate HDFC Bank to deliver 13.5% to 18% CAGR on both loans as well as deposits over the next couple of years. 16% CAGR on earnings is what they are building in. They estimate HDFC Bank's ROA, ROE to be in the 1.9 and 16% odd range, and they give it a valuation of 2.4 times FY26 adjusted book value. 1950 is the target price. Motilal Oswal gives this 27% upside there as well. Nuvama has upgraded HDFC Bank to a buy from a hold. Target price is 1760, 15% upside. At least that's how they are looking at it at the moment. They believe that the short-term price performance will depend on the consistency of quarterly earnings going forward, and they've cut EPS estimates marginally but upgraded the target price. They've rolled over the base, which is why they've upgraded target price. So 3 brokerages, 3 very different target prices and 3 very different perspectives.
So 3 very different perspectives, but suffice to say, I think it's definitely a relief compared to what was expected. Maybe that Credila sale is made this quarter easier for Shashidhar Jagdishan. So that's been a bit of sort of relief, but yeah, not too bad, all things considered.
Yeah. I read a sales note from somebody, a very senior dealer, who says that you can always find a problem in HDFC Bank results or any result if you want to. But the call is, and the call has gone horribly wrong thus far, the call is that for how long will HDFC Bank continue to trade below ICICI Bank? At some point of time, an institution which has proven itself for 25 years will show growth, and when it starts showing growth, the stock will not give you a chance.
Also, while I know we are looking at this a little more negatively as positively, one thing that we must appreciate, and we'll get some perspective on that as well, is they've seen margin recovery. I know it's very small, but given the market context, given the fact that deposits have grown 7%, loan growth has been about 1.6%, their margins have actually improved. It's only 4 basis points, but it'd be interesting to see how analysts are viewing this. And that, I think, is an important positive. While I know there are these one-offs that have been marring the results, but this is par for the course. We knew this was going to come, so it's not like HDFC Bank is hiding under a mountain. The fact remains that this had to be done, and it's being done. But very solid in terms of deposit growth. The fact that they've improved, not only held out on their margin front, but seen an improvement, is what I think the street needs to look and accept and acknowledge.
And remember, the chief complaint last quarter was the communication skills of the management.
And now they are over-communicating.
I think they have at least gone back to the drawing board, taken that on board and fixed that. So, or at least improved upon it. So that's always great. We'll take a very quick break, but on the other side, we give you the setup for the derivative segment. All of that coming up. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Welcome back. You're watching India Market Open, and it's expected rather to be an exciting morning for the street. Let's quickly highlight all the F&O action that we're eyeing this morning and take you through F&O strategies as always. That's what the street is currently looking like. The Nifty 50 April futures traded a marginal discount of 18 points, and you've also got open interest that's seen a 10% decline as we get into trade this morning. Friday had a very sort of exciting pullback in terms of what we saw. We recovered nearly 500 points on the day's low point on the index. The PCR also saw sharp improvement, jumped from 0.93 to 1.03, indicating that more puts have been bought as opposed to calls and a bullish sentiment on the street. Banks led the way up, and HDFC Bank was the star of trade. HDFC Bank futures trading at a marginal premium, while open interest has declined about 13% as we see it. In terms of calls and puts, let's quickly take you through where we've seen the maximum activity. Maximum call open interest addition was seen at the 23,000 strike, and that remains an important level to watch out for the street on the upside. This was followed by 22,500 and 22,300. Call writing was seen at 22,500, followed by 23,000 and 22,600. Call unwinding, what was witnessed on the street, was at levels of 23,000. On the put side, indicating where the key support sits for the market, 22,000 to 22,000 saw the maximum open AI, and that's obvious in terms of this bar chart. So which is a clear level of support coming in for the Nifty. 21,000 and 21,500 21,500 and 21,800 were the next up in terms of support for the street. Put writing was seen at 21,800, like I said, followed by 21,700. Unwinding was seen at levels of 22,300, followed by 22,000. Well, market has, like I said, been seeing some more puts and being sold as opposed to calls, indicating a bullish sentiment on the street. There is a very clear expectation that we will be at a massive gap up, and 22,300 could be a level you want to track in today's day of trade. But Jatin joins in from Sher Khan with his top trading strategies this morning. Jatin, before I go into the trading strategy, a quick word on the Nifty and Bank Nifty, because Bank Nifty was the star and pretty much led the way in terms of Friday's trade, HDFC Bank in particular. So talk about Bank Nifty first, and then we'll get your strategy on the index.
Sure. Good morning, everybody. So, what we feel at Sher Khan, or what we believe our outlook for the Bank Nifty is that the recent fall that it has witnessed from 49,000 to around 46,500 odd levels, I think that the fall has been arrested at the lower end of the rising channel if we draw it on the daily charts. So what we believe is that the fall is complete, and now we are heading north. We are likely to witness some amount of positive or bullish sentiment going ahead, considering that we are in the last week of the April series expiry, and during the series has been quite a volatile series. In the last week, we saw some major or huge gap downs. Now we believe that the Bank Nifty shall be in the process of filling that gap area, which it left around 48,500 odd levels. So we have turned bullish post the fall in the benchmark that we saw in the previous week. So we are looking at bullish setups, and we are currently bullish on the Bank Nifty and Nifty as well.
Right. Jatin, maximum call OI is seen at levels of 23,000. I feel like that again has become an important level that the street will now eye. Bulls in control after what we saw on Friday. Do you have a constructive options trade on the Nifty?
See, if I analyze the option chains, we have around 3 trading sessions for this monthly series expiry. So we believe that 23,000 should not be breached in the current series. So that is why we are witnessing max call open interest at 23,000 strikes. So yeah, it looks a little difficult to scale to that level in the next 3 trading sessions. So that is very obvious. And on the upside, for the Nifty, we believe that 22,500, 22,600 is the max that we are looking out for in the next 3 trading sessions. So I think 23,000 is a safe bet for writers to sell the 23,000 strike call option for this expiry.
Right. Jatin, in terms of stock specifics, I believe you've got a bull spread strategy on M&M. You want to take us through that one?
Yeah, see, M&M in the last 5 trading sessions, we have seen that after a sharp run-up, it was consolidating in a range. In terms of price pattern, it has formed a bullish flag pattern, and we are anticipating a breakout on the upside. So the ideal way to trade this pattern would be to buy a 2100 strike May series call option, and subsequently sell the 2200 strike call option. So this spread would benefit or have a maximum profit potential of around 22,000, and a max loss potential of around 13,000. So it has a favorable risk to reward ratio. And considering that we are in the last series, so keep in mind that this strategy is a positional strategy, and we have to execute it in the May series.
Jatin, Dabur has been an interesting play. It's been trading close to its 52-week low for the last couple of days. Oversold in terms of what the charts are indicating. Are you betting on a pullback on Dabur? What is the strategy here?
Yeah, so rightly pointed out, it is trading at a 52-week low. And what we believe is that the recent pullback that we have seen from the lows is a 5-wave advancing structure. So that means that a short-term bottom is in place, and now the stock is in the process of next leg of the up move. So considering that the IVs, if we do a IV study analysis, then the IVs are low, and now we are expecting a rise in the IVs. So we have suggested a bull call spread in Dabur as well. So one needs to buy the 510 strike call option and subsequently sell the 530 strike call option for May series. And if we deploy the strategy, then the break-even comes at around 518 on levels. So one can, play this bullish outlook on the stock Dabur with a bull call spread, and the max profit potential is around 16,200 with a max loss potential of 8,800. So it has a 1:2 risk reward, and I believe that Dabur is one stock from the FMCG spaces which is likely to have a good run up in the coming trading sessions.
We're betting on a pullback on Dabur. That's the view coming in from Jatin. Thank you, Jatin, for joining us today on the show. Tamanna, back to you guys in the studio. It's looking like it's a good morning. Jatin's also got a clear bias on Bank Nifty, on the Nifty, a pullback on Dabur, and an extension of the rally on M&M as well. So only strong positive calls coming in this morning for a change.
Yeah, I'm reminded of what actually Devina had put out last week on Friday when she was saying, and this is even the data actually supports it. Whenever there is a geopolitical crisis caused dip in the markets, it tends to not last too long. I mean, in this case, frankly, we've been lucky. I would say at this time, last Friday morning, we were worried about what's going to happen across the world. And at least for now, tensions seem to have eased for a bit. The question is for how long that will continue, and the morning is looking good. Well, focus on the big numbers really that we're going to be talking about. So we've had HDFC Bank over the weekend, we've had Wipro after markets close on Friday, and Wipro frankly is more of the same. If I look at it in the context of what TCS and Infosys are telling us, that the revenue environment needs to improve. In fact, that's what Wipro's CFO Aparna Iyer is also saying about the company's future growth in margins while addressing the media at the post Q4 FY24 conference. Listen in.
On pricing, the environment, in the last fiscal, that is for FY24, remained quite competitive. There is pressure in pricing because revenue is something that everybody is very concerned about. So the market environment is very, very competitive. There is pressure. That said, there are pockets where we are pivoting to high value transformation projects, or Srini spoke about how consulting is going to be at the tip of what we sell. There we are able to secure some premium. So the overall, I would say there is pressure in some pockets, especially in the efficiency-led offerings, and we are able to secure premium in the newer technologies and newer areas and newer solutions that we are taking to the market. So overall, I would say for now, it is stable, right? As far as operating margins are concerned, you spoke about 19 to 20%. Like Srini said, we do, first of all, we don't guide for margins, and like Srini said, we right now expect our margins to remain range bound. What we have done well, though, like I said, in a very, very tough revenue environment, we have improved our margins this fiscal by 50 basis points. This has happened on the back of the excellence that we are driving in operational rigor. We have several levers at play, including fixed price productivity, pyramid, the rotation, skilling, internal fulfillment. So there are many aspects that we are working on, and we are able to see results that are playing out in our margins. So we are quite encouraged. As we look ahead, we will continue to exercise these levers and also perhaps drive synergies in our G&A spends, with our acquired entities. So those are some levers that we've been driving, and we're seeing results. And like Srini said, we'll take it step by step. For a meaningful improvement in margins, I think the revenue environment needs to improve.
Okay, well, that's Wipro, and frankly, independent of whatever has been spoken by the management, most analysts on the street are now having a wait-and-watch approach when it comes to Wipro. Let's see how the stock reacts in the session today. But by the way, it's not just Wipro. There's also one more IT name which came out with numbers late Sunday evening, and which is Persistent Systems. Now, let's go across to my colleague Puneet, who's going to talk about that, plus some other stocks which should be in focus, because it was not just a Wipro and an HDFC Bank which came out with numbers, Puneet. A clutch of other companies. Which are those?
Yeah, so we'll just start with a few business updates as well. So Oberoi Realty is the first one that we're tracking. The company came out and said that it had roughly 1,775 crores of bookings, which they saw in the quarter 4, with roughly 228 units booked. Now, for the full financial year, they said that the bookings were roughly 4,000 odd crores with 705 units booked. Now, compared to last year, this is a 53% drop, since a few of the launches have moved up in the first half of FY25. So we'll see on how the stock reacts today. The second one that we're tracking is on results, which is Irida. Now, the company has been a tear on since listing earlier this year. The numbers have not disappointed as well. The revenue is up roughly 34%, coming in at roughly 1,392 crores, while its net profit has grown roughly 33% as well, coming in at 337 crores. The one main thing was that the net NP is around 24% compared to the previous year, and has come in just around 1%. And the FY24 outstanding loan book has grown roughly 27%, coming in at roughly 59,698 crores. So really strong show by Irida. And finally, as you said, Persistent Systems as well. After TCS, this has been a second result which is positive. Revenue has grown roughly 3.6%, coming in at 2,590 crores, while its EBIT margin is down 8 basis points, roughly around 14.4%. The net profit is up roughly 10%. The company has highlighted that its attrition rate has also improved, coming in at 11.5 versus 11.9 in the previous quarter, while growth in its healthcare division has been key. So these are just a few of the business updates and earnings that we've tracked in this particular segment. Back to you.
Right.
Okay, well, Persistent Systems will come out smelling like roses, because if you look at the internals of Persistent, BFSI didn't do as badly as some of the other companies are facing. Margin numbers haven't seen too much of a contraction. The chink in the armor may have been the deal wins, which apparently are not as great as is used to be seen in Persistent Systems. But maybe Street gives it a benefit of doubt. The thing working against Persistent is its valuation.
80% in the last 1 year. That's what the stock has done up.
The sky-high valuation.
And 300% in the last 3 years.
It's done so well.
Yeah, it's done exceptionally well.
But just talking about deal wins compared to the others, where your total contract values look good but don't really convert into revenues, at least their top and bottom line is better than what was expected. But it's not just IT. Today is a day where IT and banks are both in focus. Banks, of course, because of HDFC Bank, and that would be the big story this morning, really. Bunty Chawla, AVP of BFSI at IDBI Capital, is with us this morning. Bunty, very good morning. Great to have you here on NDTV Profit. Let's talk about all things HDFC Bank. The large sort of takeaway from what we've seen, what brokerages are saying so far, is that this is better than at least what we saw in Q3. Would you say that's largely your view as well?
Yeah, good morning. Thank you. Yeah, you rightly said, as there was a bit of a disappointment in Q3 with respect to margins. And this quarter, they have slightly improvement, but it's taken as a positive from 3.4 to 3.44%. And the good part is that was taken because of the improvement in the yields, because they have taken some bit of a rate hike in some of the products, which is visible in the improvement in the yields. So it seems to be though there is a competitiveness in the yield or in the asset side, but they have taken that as a positive in terms of improvement in the yields, which is reflecting in the margins. So you rightly said it's slightly better as compared to Q3 numbers.
Just Bunty, in terms of one-offs, whether it's the Credila sale, ex gratia employee payments, floating provisions. Now the question is that, is this skewing the way we're looking at the numbers right now?
Yeah, as you rightly said, but we will take it as a more positively, because if you have seen 7,300 crores of profitability from Credila, which has been utilized for much of the better in terms of floating provision, which is much higher than around 10,900 crores. And floating provision, the positive is that it does not show there has been a stress. If you have moved to the contingent provisions, then we could have seen that there has been a stress which should be utilized. But the positive over here is for floating provision, you need approval from the RBI to utilize it. And they were very confident in the management commentary. We don't see any kind of a stress for next 3 to 5 or 7 years in terms of on the asset quality. So they won't be require any floating provisions. And this gives the buffer in terms of balance sheet strength going forward with respect to balance sheet strength.
Okay, Bunty, just one thing, how are you pricing in margin recovery for HDFC Bank, considering that, liabilities, deposits, replacement happens, and this whole narrative that NIMs will contract at some point of time because of rate changes that might happen, but that assumption might now be challenged for the better part of 2024, if not the whole of 2024.
Yeah, as you rightly said, for FY25, you see they have said from FY25 onwards, you have a high cost borrowings from the HDFC Limited, which will be replaced from the deposit part. And we know deposits rates is much better than your high cost borrowings from the HDFC Limited. So that is the positive. As soon as that get repriced or replaced with the deposit rate, you will get a bump up or you will get a positive impact on the net interest margin. Though on a conservative side, currently, if you see, everybody's estimating not much of improvement. But as soon as the market gets the confidence in terms of numbers next 2 to 3 quarters, how that has been reshaping, the market will take it positively.
Bunty, what do you make of that 10,900 crores of provisions? Is that a concern? Let's not forget that they've always provided for 0.5. Even though it's a floating provision, it has and holds a lot of benefits as well. What do you make of that? Is that something you're worried about at this stage, or no surprises there?
So as I've said, the management was very clear. If we have moved to the contingent provision, see that there could be possibility of seeing some stress in the balance sheet, so they are providing it now. But as I've said, floating provisions require prior approval from the RBI to utilize it for the balance or for the P&L part. So that shows the strength, that shows the confidence from the management that floating provisions we don't require. We are just strengthening the balance sheet per se.
So, Bunty, very lastly, what is the call on the stock? When do you expect an improvement in ROA and EPS? I believe IDBI is not very constructive on the stock. So you want to give me a sense of the target price and where you stand?
We are positive on the stock as we have released the report yesterday. So we have a buy rating on the stock with a 1872 target price. But as you rightly said, the stock performance will more dependent upon the stability in the quarterly earnings. As you said, Q3 was a disappointment. Q4 is taken as a positive. So as we see the stability in the margin, stability in the profit, or in the quarterly earnings going forward, market will slowly take positively, because the valuation is quite comfortable at this stage, around 2.1 time price to book on a 2-year forward valuation. So that gives us the confidence.
Okay, that's good to hear. Constructive on HDFC Bank. Remember, the stock has ran up substantially this month at least. Also on Friday, the counter was up 2.5%. We aren't expecting the counter to see a big move in early hours of trade, largely because some of those gains were already seen on Friday itself. But let's move on from HDFC Bank to the IT pack. You had disappointing numbers once again from the Wipro, stable and impressive numbers from Persistent. Sumit Pokran, VP of Fundamental Research at Kotak Securities, joins in with his view on the top-tier IT packs reporting. Sumit, good morning. I believe we've been having technical problems this Monday. But let's start with Wipro. What did you make of those earnings? They've disappointed once again, and I think unanimously brokerages continue to maintain a sell on the counter, with some even reducing the target price.
You are absolutely right. Thanks a lot. A very good morning to all the viewers. You have correctly highlighted that Wipro has not been performing for quite some time. There have been certain issues. They made acquisitions that did not turn out to be very fruitful. And we have seen a leadership change also in the recent past. So that itself highlights that the transition which they were focusing on, that has will take some more time. Now, if within the IT pack, if I look, there are two angles to it. One is the global headwinds. Clients are still uncertain about how the Fed will, how and when the Fed will cut the rates, and that is why there has been a slowdown in the discretionary spend, and that is why most of the Indian IT companies are getting hit in this space, particularly, which has got higher exposure. They will get more pain in the near future. However, if there are certain green shoots, if you look at the TCV, most of the companies have reported healthy TCV, which should materialize into revenue going forward. So, in nutshell, in the large cap IT space, Infosys, TCS has the potential to grow faster. Wipro, we have been negative for quite some time, and we maintain negative stance on the company.
Sumit, some people have to say that with the CEO change, there is very likely going to be a year of the lowest revenue growth for Wipro. So if that is also your factor and you already have a sell, what is the targets that you're laying out on Wipro?
See, if you look at the valuations, which is very important for us to understand whether it's a buy or sell, we have been recommending sell on Wipro for quite some time, and our target price is 440 rupees. So we're maintaining our sell recommendation. If you look at the earnings growth trajectory, we expect earnings to grow by almost 13% in FY25 partly because of low base in FY24. And in FY26, we expect earnings to grow by 7.6%. Vis-a-vis, if we compare it where the stock is trading on valuation terms, the stock is trading at 19.2 times FY25 earnings on a price to earning multiple basis, and 17.9 times FY26. Dividend yield is 0.2% in FY25. So what we are saying is that given the headwinds on the macro side and within the company, the valuations already captures most of the positives which is there, but negatives are not yet captured. Valuation looks very expensive to us. We expect the stock to underperform going forward. So we are recommending sell. We will wait for more once the transition happens, how the things pan out. Then we will review our earnings and target price. But as of now, we will wait for better execution.
Sumit, on a relative basis, Infosys, TCS, Wipro, I think broadly they're pointing to the same set of problems in the ecosystem. So that trend remains. But how would you look at them relatively, considering Wipro is not looking as expensive perhaps as the other two? Or what would be your ranking?
Correct. See, valuations if the market is giving lesser valuation to Wipro, there is a reason behind it. We will have to see how the earnings trajectory looks like for all the three players. And that is what investor is focusing on. If you look at TCS, they are enjoying very high EBIT margins, higher than, in fact, Infosys and Wipro. And the earnings growth trajectory also looks decent to us. And that is why we are bullish on TCS and Infosys for two specific reasons. What clients are looking at is cost optimization, and also the bandwidth or the spectrums of services which TCS and Infosys offers. They are going to get big time benefited once the macro environment improves. And as I mentioned, cost optimization and cost initiatives, I think they will be able to take market share from the weaker players, though, so the wallet will improve for these two companies, and that is why we are bullish on Infosys and TCS. However, we are negative on Wipro. Within Infosys and TCS, if I talk, then we are our top pick is Infosys.
Infosys, TCS, Wipro is the order of preference. Thank you so much for that. Great to speak with you. We'll take a very short break, but we'll be right back with pre-open rates. Stay tuned.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change.
All right, back with India Market Open, the pre-open rates about to kick in, or in fact have started. And remember, there is a gap up that is anticipated, so keep an eye out for that. Let's quickly get down to basics while we wait for the rates to settle to try and understand what should the trades be on the indices and specific stocks. Sudeep Shah, Deputy VP, Head of Tech and Derivative Research at SBI Cap Securities with us on the show. Sudeep, good morning. Thanks for joining in. We will start off higher, Sudeep. So the question really is, for somebody who wants to enact a trade with that 100, 120, 150 points gap up on the Nifty, is there a trade post that level at 915?
Good morning, leaders. See, what I feel is that while we are expecting Nifty to open gap up closer to 22 250, 22 300 zone. Now, the highest call writer also is placed around this zone of 22 200 and 22 300 strikes. So I feel overall now we need to wait and watch, wait for a dip closer to 22 200 on the downside on an intraday basis, and then go long from those levels, because overall 22 330, 22 350 will act as a resistance. And I feel only on crossover above this zone of 22 350, a decent short covering move up to 22 500 can be witnessed. So post this gap up, I feel one should just wait and watch for 15-20 minutes, let the entire gap up say steadily cool off or at least sustain at higher levels, and then we could take the trade there.
Okay, that's fair advice too. One doesn't know how it will shape up. The Bank Nifty too could start off gap up, and let's see what HDFC Bank does in that mix. But Sudeep, before we get to specific stocks that we want to ask, a couple of ideas from your end. What are you recommending to trade?
The first stock that I feel looks good at current levels is M&M. Now, we've seen that stock was in a steady uptrend during the entire month of March from 1800 to closer to 2100 levels. And in the last 5-6 sessions, we've seen some kind of a cool off in momentum or profit booking from higher levels. But despite that, the stock was not breaching or closing below its 10-day exponential moving average. And on Friday, we've seen one more move on the upside. We've seen a strong rebound from lower levels closer to 2000 zone. And now it is on a cusp of a fresh breakout on the upside. So I feel, and even in the overall auto space, we are seeing a good traction within the four-wheeler space, Maruti, M&M, and even within the two-wheelers, it's iShares. So top 3 stocks within the auto basket, I feel, are these stocks. And
Out of them, relatively strong, I feel, is M&M. So this can be bought with a stop loss of 2040 on the downside and a target of 2150, 2170 on the upside. Now, the second stock that I feel could do well in the next few sessions is Bharti Airtel. Now, post a consolidation for the entire month of March and a good period of April, we've seen the stock breaking out with volumes on the upside on Thursday. And with this breakout, there is a substantial addition of open interest on the long side also, if we see the derivative contracts. So I feel this stock could do well. Positionally, 1260 can be kept as a stop loss, and the stock could head up higher to levels of 1340, 1360 on the upside within the next few weeks.
Sudeep, stock of the day is going to be HDFC Bank, not specifically in terms of trading. Had a good run on Friday this morning, earnings as well, largely in line with what the street was expecting. What do you think one should do if you bought HDFC Bank on Friday? And if not, if you don't already own it, would you initiate a fresh trade on HDFC Bank this morning?
Good morning, Sumina. See, what I feel is that HDFC Bank, post its gap up, would open closer to 200 DMA or slightly above that. And in the last few days, we have seen a good bit of consolidation, and this move is post this consolidation. So I feel the stock could continue trending higher with the kind of numbers that the stock has delivered. And overall, if someone is holding it, can continue holding that with 1520 as a stop loss on the downside. Post this gap up, just factoring those levels. And post the gap up, if there is any slight cool off in the stock, then this could be bought also. So I feel overall the trajectory of HDFC Bank is now headed higher. And we could see levels of 1620, 1640 in the next coming few weeks. So I feel dips could be used to be bought on the downside.
Devane Choksi as well joins in with his view on the markets and a quick preview on RIL. Devane, what did you make of HDFC Bank and what is your call on the stock?
Yes, Amina, good morning. Well, I think the numbers are pretty much in line for sure. Good part is that the bank is having the growth, the balance sheet growth, I think, both in form of the deposits, as well as I think the growth in form of the loan book. And that gives you the confidence, I think, more than 25 lakh crore worth of, I think, deposit book and around close to 24 lakh crore worth of loan book is something which I think this bank has already established. And given the kind of growth that we are experiencing in the economy and the size this bank is commanding, including each of the vertical, be it housing finance vertical, which is a mortgage business, you have the retail business, the corporate loan book business, and prime sector business. Each of these verticals, along with the fee income business portfolio that they have, I believe that I think is likely to show relatively steadier growth in the vicinity of around 16 to 18%. That is obvious and clear. Plus, the management's, I think, viewpoint that they don't want to chase the growth for the sake of growth. That means, I think, they want to be mindful about the risk element in the business. That again gives, I think, good amount of confidence. The one key figure point, I think, which I would think that I think would eventually play out well is a process under which they are distributing the loan. Can that process become a little faster, both for the corporate sector as well as for the retail sector? Should that happen, then probably I think the bank is worthy of, I think, buying further aggressively into the portfolio. As such, the downside is limited. Maybe the upside of around 20-25% is distinctly possible. If not in 12 months, I think over a period of 15 to 18 months, I think it's definitely possible.
HDFC having a good response, at least in the pre-open session so far, about 2% up on the back of perhaps a better than expected numbers compared to Q3. Harsh joins us in though with the top brokerage notes in focus today. Harsh, what's on your list?
Well, yes, first off, Tamanna, is City on Gujarat State Petro. Now, this one is in focus because the PNGRB, which is the regulator, has cut the pipeline tariff by 47%, 64% below the firm's ask. So actually, they cut on the existing number. Key reasons for the cut: lower Capex is what they're factoring in, higher volumes is what they're factoring in, and lower OPEX. First off, on the Capex, they're considering 1,800 crore of future Capex versus GSPL's estimate of 3,400 crore. So nearly half of GSPL's guidance. On the OPEX front as well, very similar, 2600 crore of OPEX estimated versus the 5000 crore claimed by the company. And in terms of volume as well, 26 MMCS SCMD was what was expected as per estimates by the company. It's come in at 31.7% as per the regulator, and therefore you're nearly 20 to 25% above what the company was forecasting. Citi cutting the earnings estimate by 25 to 27%. Now this will of course create an overhang for at least a year on the counter. Stock is up roughly 40% plus over the last 6 months itself. So keep your eye out on this one. This is definitely going to have an impact. Nomura also has downgraded the stock. 320 is the target price, 15% downside by Nomura. Kotak also downgrading it, around a 5% downside only for Kotak. Now that's broadly on Gujarat State Petro. Quickly shifting focus on Voltas. UBS has upgraded the stock to a buy, 40% upside given by UBS for Voltas. Their earlier target price was 885, current target price is 1800 per share. So they've substantially upgraded the stock even in terms of its target price. Why? One, on the room AC as well as the Volt Beck JV, they believe that improving market share and profitability will drive the numbers going forward. The JV with Beko is expected to break even in FY26. They are expecting incremental revenue of nearly 10,000 crore in the consumer electronics segment by FY27. They're now coming to valuations and trying to break them down. The cooling segment, they've switched up the valuation. It was earlier at 35 times, now at 55 times. And on the Voltbek JV, they're valuing it at 4 times price to sales versus the 3 times earlier. And therefore the upgrade in the target price to 1800, 40% upside. It's up nearly 5% in pre-open already.
Absolutely. Thank you for that, Harsh. Both stocks actually, GSPL and Voltas are responding in pre-open rates. Sudeep, I'll come to you first on a GSPL, which is really taking a knock this morning, about 17% down in the pre-open session as it wraps up. What would you do over here? You're on mute, Sudeep.
Yeah. See, the kind of cut that we are seeing in GSPL, I feel one should just avoid and not do any bottom fishing, because the news because of which the cut is coming, I guess that will have a long lasting impact, and one should just avoid this counter for a while. And if someone is holding, then any rises, even post this gap down opening, if there is any slightest recovery also, then that should be used to exit, because lot of better opportunities are available, and this overhang will remain on this counter. So I feel making money in this counter would be a tad bit difficult going ahead.
Deven, you know, this whole segment, we saw this pain point with Mahanagar Gas also a few months ago. Now you have it with GSPL. The question is, what do you do when you don't know when the regulator could strike?
This is the risk that you have, Tamanna, in this business. Because maybe I think the government policies and the regulatory aspects, they are the two surprise things, I think, which always comes along with this business if we are an investor. So if you are actually looking at this company on a quarter-on-quarter basis or otherwise, I guess I think the disappointment could come in between big times. As such, I think the commodity nature of the business always, I think, keeps you on the tenterhook. So to a greater extent, I think one will have to keep this aspect in mind while having this stock in the portfolio. To me, I think these subjects are best played when I think they are beaten down for buying, and they are best played, I think, for booking profits when I think they are at the rise and the market is fully buoyant about it. At this point of time, our view is neutral. We are not, I think, immediately jumping into this space. We believe that I think there is still some time left, after which I think one could possibly look at this space relatively more confidently than others.
Did you subscribe to the Vodafone Idea FPO?
I wish I had that kind of money. Sorry, but I think the fact remains that clarity is not enough for me particularly. I agree that I think the downside risk in this particular stock is limited because of the driving factor at this point of time. However, I think my understanding says that it is a similar situation which is happening, which happened at one point of time with Bharti when they over-invested in the area of 3G spectrums. Today, I think Vodafone Idea is trying to put in the brave face by way of putting larger amount of money allocated towards the 4G and 4G related investments. In my viewpoint, I think when the economy has already started moving quickly, and I think AI is dominating, industry is using IoT to its peak best, and probably I think going to grow further. Entire computing space is growing. So I would rather think that I think the amount of investment has to be front-ended towards the 5G vis-a-vis I think any other. However, the limitation which Vodafone has and which I understand, they have 42% of their subscribers still continuing with the 2G, and they want to convert them into the 4G. Otherwise, I think if they don't, then the competitors are going to take them away anyway, and most of them have anyway moved out. So this is where I think they're in a classic situation where they fix. So maybe I think they lean towards 4G vis-a-vis 5G. Whereas my reading says that I think they are quite late in investing in 5G, and if they further delay it, I guess I think it is going to be a challenge. Another point which I would like to put across that today you are investing 45,000 crores.
Devin bhai, please allow me to come in because we are just 20 seconds away from market open. So we'll talk about this other point that you have on Vodafone in just moments from now. But just about the market starting trade. Remember, RK Forgings is down 5%, so keep that stock in mind, and Zomato is up 2% as well. So amongst the stocks that are moving around on news, those two also fit the bill quite effectively. But here come the first trades this Monday morning. Watch out for Wipro, HDFC Bank amongst the large caps, HDFC AMC, not the nifty name, but the large caps, and GSPL, GAIL, and Gujarat Gas on the flip side. Nifty 50 starting off 120 points higher, so not surprising, in line with what was estimated. Quiet start, or 0.5% uptick, so not a bad start. Quiet relative to what the rest of the Asian markets are doing. Nifty Bank 0.8% considering courtesy HDFC Bank. Mid caps and small caps to start off well, about 1% apiece for both. So positive market breadth on open. The market's holding out for now. Let's bring up the heat map and show you what's moving and what's not. HDFC Bank should be right up here somewhere. Actually, no, it's not in the top 10 list. Quite surprising, really. HDFC Bank is not in the top 20 list either. Are my eyes fooling me? No, they aren't. It's not there. But anyways, HDFC Bank, whoa, it's the top loser. Quite surprising, really. I was looking for it in the gainers and it's in the losers list. So the pre-open rates were deceptive for HDFC Bank, 0.5% lower. But aside of HDFC Bank, everything else in the green. BPCL, 2.5% higher. Crude price fall impacting that. Ultratech, because of their India Cements transaction, is up about 1.5%. Axis Bank is in the green. Tata Steel, Adani Enterprises, Bajaj Finance. So a clutch of stocks moving up as a basket. I think newsmakers are BPCL and Wipro, which are in the green. And from a newsmaker's perspective, HDFC Bank, despite all the positive notes around it, is starting off in the red. But I dare say the biggest newsmaker of the day has to be around the oil and gas space, Tamanna.
Absolutely. Biggest newsmaker of the day is the market bounce back as well compared to what we saw maybe on Friday. So I just quickly want to see what the broader markets are doing before we get to specific stocks. And look at that, the Nifty Midcap also up about a percentage point. You're having a good morning here. The small cap index, if you can just quickly see what's happening there, also up a percentage point. A lot of stories today with responses and positive stocks. Let's start with Voltas. There was a UBS note that has upgraded it to a buy with an 1,800 rupee target price, a 40% upside. Stock is up about 3.5–4%. This morning. Zomato, we spoke about briefly. They've upped their platform rates from 4 rupees to 5 rupees per order, and that stock is also doing very well. Zomato's anyway had a pretty good run. They've also suspended their intercity service where you could order from one city and get it in another. So maybe that was a good idea in hindsight. JSW Energy, we'll just take a look at what's happening over there this morning, also doing well. New Energy has gotten a letter of award from NTPC. Sterling and Wilson, we talked about this in our stocks to watch list as well, and that earnings impact has had a positive upside about 1.5%. Lupin is another interesting one to watch this morning. So they have launched this tablet in the US. It essentially helps with urinary incontinence. It's a slow release tablet, and that stock has seen a positive response, about 2.5% up. Myra Begron is the name of the formulation. GSPL, definitely one that we spoke about right before we started the opening session as well, and 20% down socket right now as we speak. Regulator strikes again. We should also look at what's happening in the other segments of this, other stocks in this sector. Gujarat Gas, one of them, GAIL, because that overhang will be there as well. Just Vodafone is what I'll quickly see. The FPO closes and Vodafone is about 4% now. So initial positive reactions before the FPO, but the last couple of trading sessions have not been great for Vodafone. Samina, what else are you spotting this morning?
Some interesting gainers, Tamana. Then the broader markets are looking good. So the sentiment is intact. The breadth is positive. Reactions coming into earnings are also largely in line or better than what the street was expecting. I'll start with OMCs because that's a little bit of a theme that's playing out. Remember, crude prices are down 3% last week. And that's a relief for the likes of a BPCL, HPCL and IOC. All those counters up 3 to 4% as we see it. IOC is up 2%, HPCL is up 3.5%, and BPCL is seeing a gain of about 2.5%. Senco is up 3.5%, so that stock does well. Elcon Engineering, bring that one up. It's had a good run on Friday. It was a top gainer in trade on better than expected earnings. There's also stock split around the corner for the company. The stock is up another 3.5%, adding to the almost 16% gains we saw on Friday. We will connect with the management in just a few minutes to understand what business looks like. But all in all, it looks like it's set for a good move in terms of stock trading activity today. 4.5% on Elcon Engineering. Well, Angel One. So capital market players are doing well once again this morning. Angel One had a good run on Friday. It continues to do well today as well. They're going to do a first ever bonus issue of shares. The stock is up nearly 18% over the last 5 days. So building on its gains from Friday in today's day of trade as well. Transformers and rectifiers is at upper circuit, 5% higher in terms of trade. Asset management companies, so if I can get HDFC Asset Management, they reported numbers and the stock is down 2%, but UTI Asset Management is actually not looking too bad in trade this morning with a 3% gain as I'm seeing it. Railway stocks are looking good. Angel One is having a good day. Persistent, good set of numbers came in from Persistent. Let's see whether the market simply is, they're disappointed. Not sure why that's happening. Like we said, this could be a play in terms of the stock valuation. The counters up 80% last year, one of the best performing mid-cap IT names. So of course the earnings, while they were good, probably don't justify the valuations for the street. So Persistent getting a thumbs down with a cut of 2.5%. Bombay Burma is up 6%. You want to take a note of that. It's a trading company, it's a holding company, but 6% higher on Bombay Burma. It is turning out to be your top gainer in terms of stock performance. On the sell side, you've got Sun Pharma, Vodafone Idea, Ramakrishna Forgings, HDFC Asset Management that are highlighted, Sona BLW, Indus Towers. Those are a few that are having a little bit of a down morning in trade.
Yeah, Sun Pharma Advanced Research, by the way. Samina was trying to point that out, and that stock is down 5% yet again. This must be what, the 12th straight day of a low circuit maybe for Spark. So that stock certainly. But GSPL really takes the cake. And Devin, I know we have yet to talk about Vodafone, but I just want to come to you. Firstly, belated birthday greetings as well. But here's the question. Does this GSPL move become an overhang on some of the other PSUs as well? Gujarat Gas, GSPL holds 54%, some of the others. Is there an overhang on those two now?
Neeraj, sorry. Thank you so much for the birthday wishes. Always welcome any time of the year. Of course, I think the overhang will continue to a greater extent on this particular space, as I was making a point. Largely because of the fact that you as an investor, you have relatively very little role to play, frankly, because the decision makers in form of authority or the government policies, they rule the entire space more often than not. At the same time, I think the very nature of commodity business that we are into, they will definitely, I think, going to have its own volatility, unpredictability. I guess I think will continue. So in all put together, I think this situation is not going to change. So to me, I think those who are buying into this particular space, they'll have to be, I think, actually, I think, put to a positional trading in their portfolio. Buy when I think the market is on the negative side, and I think probably look around for the opportunity when I think you get one during the rally. So that is where you book your profits. Otherwise, I think this kind of story is difficult to, I think, justify from the point of view of long-term investment point of view on a compounding basis, because many times I think your compounder theory will not work here. Maybe I think it will even out in a difficult situation. So unfortunately, I think we don't carry very strong portfolio position into this particular space either. So we are relatively safe as far as I think our investment approach is concerned in this space.
Sudeep, have you spotted anything for a trade this morning? I mean, big gains, big losses, but any opportunity for an intraday trade?
Yeah, see, this one stock that is just coming up on my radar, and I feel that stock is in an overall uptrend, was consolidating within last 6-7 sessions, and we are witnessing a fresh moves there. That is BSE Bombay Stock Exchange, and the stock has been sustaining above its 10-day exponential moving average since last 7-8 sessions, and was in a prior uptrend. So I feel from the current levels, BSE also can be looked upon from an intraday as well as from a positional perspective. And overall supports are at 2770 zone. Until this support zone is held, I feel overall the upside in the stock could be in the range of 2930, 2950 in the next few sessions.
Right. That's the BSE, and the stock's already doing quite well. It's up 3% as we see it. Constructive call on this one from Sudeep. Devin, I want to talk to you about some of these PSU defense names. Just ahead of elections, the party year seems to be never ending in some way. I mean, look at an HAL. It's gone all the way up from 3100 to 3800, one-way move. Mazgaon Docks, BEL, all the names, BDL, all looking very, very solid. The index itself is up over 15%. Is there any opportunity in these defense names if a trader, a medium-term trader wants to come in and play the elections, do these stocks still offer an opportunity?
Yes, I mean, the traders definitely, I think, will have momentum to support them. And I think this space is likely to be supported with a huge amount of momentum, largely because of the fact that government's main program of making India is happening at a very rapid speed. At the same time, never before in past, I think one has seen this kind of order book inflows into these companies that gives them a visibility for larger amount of business going forward. Only challenge that you might probably see that even though the large order books that they have, whether they would be in a position to execute above threshold level of say 15 to 20%. I think that is something which one will have to definitely ask the question. Generally, these businesses, they take time to execute, and that's where probably I think one will have to be mindful about the situation, not about the demand situation, but execution part of the activity. Definitely is something which these companies are facing the challenges. Given that situation, any valuations which happen ahead of time, and if you pick out on the valuation, quite possible that I think this particular situation may keep your portfolio dragging for a while. In my viewpoint, I think again the rule applies here that when the market neglects this kind of counters, that the valuation becomes cheap or competitive, then probably I think it is a better time to buy. Chasing momentum would be a good idea for traders, I think, because they can get down also very quickly since they are momentum players.
You know, some big movers this morning. Just pull up Areda, about 8% up on its numbers. IFL Finance doing well as Interglobe, not too bad at all. You know, Sudeep, I just want to come to you on anything specific you're spotting, and what would be the call on RIL? You have numbers coming later today. Is this something that you'd look at for an intraday trade?
Yeah, I would avoid RIL from an intraday perspective, because positionally the trend is very strong. We have seen a prior uptrend since December month. Stock from the lows of 2300, 2350 has moved all the way up to 3000, and the entire March and April month till now, we have seen the stock consolidating between this 2800, 2830 and 3000 mark. And specifically in the last 10 to 15 sessions, it is consolidating in a 2.5% range. So I feel from an intraday perspective, I would not be too keen on going long or short here, given the fact that the results are going to be announced. But positionally, I am constructive, and I feel that the trend is quite strong, and any dip could be bought from a positional perspective. So overall, the stop loss for any long positions should be 2850 on the downside. And I feel the stock is headed up to 3150, 3200 in the next few weeks to come.
Okay, gentlemen, afraid we'll have to leave it at that, but thank you so much for taking the time out and being with us and giving us your perspectives. Really appreciate your time this morning. We'll need to slip into a very quick break on the note. The markets are doing okay. Don't go anywhere though. Two very exciting conversations coming up. Elecon Engineering, the stock is on a roll, good results. Management joins us on the other side, and a bit later on, we'll get in AK Tiwari of PNGRB to talk about the decision that they've taken.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc.
All right, company in focus this morning is Elecon Engineering. The numbers have been good and the stock has been running up on the back of their Q4 results. We're speaking to the management this morning, but just before we get to that conversation, a quick recap of why the enthusiasm. Revenues were up 33% in Q4 year on year at 564 crores. EBITDA up 46%. So quite a jump there. Margins have increased 213 bips and net profit up 52%. Their material handling equipment MHE segment seems to have contributed to that revenue jump. Kamlesh Shah, Group CFO, Elecon Group, is with us on the show today. Kamlesh, very good morning to you. Great to speak with you. Can you explain what has changed or what has turned around in the MHE segment that revenue is up about 93%?
Both in India as well as the overseas level has contributed as well. And though there are challenges in the overseas market due to the disruption in the on account of geopolitical situation, still we are doing well, and we are quite confident about our overseas business. In India, particularly if you say material handling division, they are now getting a traction considering the improvement and demand coming up across the sector, but more particularly for cement, steel, power, and fertilizer industries, where we are getting the good traction. And we see that this four sector will become a growth driver for MHE division of the company. And so far as gear is concerned, gear, I think we are quite focused and we are going on the right track. And that definitely will give a good boost to us.
Yeah. Having said that, your full year revenue, of course, has grown 33% this quarter, but your guidance of 2,000 crores was not quite hit in this last quarter, even though Q4 was good. Are you maintaining the same targets now, Mr. Shah, or are those being revised?
So if I give about the guidance, we miss what you would like to say about 2,000 crore vis-a-vis actual what we have still 1,937 crore. Yeah, on that thing, there was a one incident related to the deferment of the supply. That is one thing is there. However, when we prepared our 2,000 crore guidance, generally we prepare in the Q3 of the year for the coming year. During that time, the steel price was at one particular level. And if you compare the steel price from December 31st, when we prepared our guidance, vis-a-vis when it was there by December 2023, the steel price has came down by 5%. So if I make a reverse calculation, I believe that we have achieved the target what we have given of 2,000 crore.
Kamlesh, taking a cue from that, this is Samina as well joining in. As we step into a new financial year, what are you guiding for? What sort of growth can we expect in terms of top line and bottom line for FY25?
This time, for console level, we are targeting the revenue of 2,225 crore, which you can say a 15% growth. And our EBITDA margin, we are expected to sustain at the level what we have already achieved this year. There is a scope of improvement is there. However, we are given the guidance, which is quite conservative this year. This is due to the election situation both in India in the first Q1 itself, as well as the election in the US. And further, considering the escalation in the geopolitical situation now, which is going to impact or which will have the material impact on the supply chain issue.
Right. So there is that 15% growth on top line that you're expecting, and there could be some upside risk. Is that a fair assumption, Mr. Shah?
Yeah.
So 15% is conservative. Also, talk to me about margins. You've managed to do a pretty big improvement on your margin front, close to 24% now. Is that sustainable, and is there any sort of risk to that number in the next couple of quarters, or FY25 you will maintain margins at 23-24%?
On an annual basis, we shall maintain the margin of 24% on the console level of our EBITDA margin. And we don't find any challenge to achieve that. Even with this conservative growth of 15%.
Kamlesh, any upside risk if we manage to get that 15% on your top line and your export market recovers and the MHE segment does the bigger contribution in terms of growth for next year, do you think margins could go upward north of 24%?
It is there is a scope, some little improvement we can expect. However, we considering what we are given the guidance earlier, also we are still going on the same track. We have certain things on the OPEX side, which we have to do, particularly on the brand building and the business development team, which we have to strengthen further, considering the OEM markets as well as the replacement market. So we would like to at least now make a segregation of the two teams within the business development team. So that is also our quite focus areas.
What is, Mr. Shah, can we get a sense of your order book positioning? Which segment are you focusing on going forward for the next financial year and the next few quarters, and also your geographical mix?
In terms of the product mix, we are getting the traction from steel, cement, power, material handling, and fertilizer. These are the 5 growth drivers will be there. And if the monsoon is good, we will also get a good traction from sugar sector also. And if you see about the geography wise, we are going to get a good traction from the Europe itself. And we are quite confident and we are very hopeful and optimistic for the European continent to give a good boost for our revenue coming year.
Okay. Just give us a sense of your Capex plans as well. Since we're speaking at the end of this financial year and setting up for the next one, are you continuing with your 300 crores sort of outlook for the next 3 years, or are you upping this?
Yeah, we are just going to close our 300 crore capex this year, which we have started 2 years back. So this is the third year, and all the machines what we are expected that will come, and that will also give a good boost for improving our efficiency. So now we are just going to get the where presently we are having the gear, the daily manufacturing to what we are going to go next. With the target what we have set for us, my gearbox will be out within 10 days to 7 days also. So that is where we are planning, and we are very clear and optimistic about to roll out this. And by the setting up this 300 crore of our capex target, that will be achievable by FY 2026.
Right. So, Shark, up to your order book, I know looks fairly healthy, but there are lots of moving parts. There's the concerns on the geopolitical front. There are elections back home. How does that impact your orders getting converted into revenue? I really want to understand if you're anticipating any breaks, pauses, or delays in cash flows. Because I know your debt portfolio looks extremely healthy. You've been very conservative all along. But I just want to get a sense of working capital and where things stand, and if there could be any delays in terms of payments.
So all front we are, I think, working. That is how we are, based, because though we are supposed to give our guidance in the last Q3, but we are defer that to give in Q4. That itself shows how we are matured about our, when we are giving the figures to the investors community, to the other financial institutions, we are quite conservative, and we don't foresee that will have any such kind of challenge. Even this geopolitical, we already discounted all these factors. What presently we are facing, that same election in India in Q1, in the last quarter, what we are expecting the election in the US as well, the current geopolitical situation will got escalated further. So with all these things, we say yes, we would grow by 15%. But if this if this situation is getting settled down, particularly geopolitical situation, which presently got escalated, if it for any reason, if it is able to get it tamed down, then I will have the further scope of improvement available.
Right. So it looks like better margins, better order book growth of 15% for FY25, little or no debt. Anything that's keeping you awake, Mr. Shah? Any sort of concerns that as an investor one should be mindful of? I know you're benefiting from the tailwinds of sector growth, but I know you're pushing growth for some of your subsidiaries has been a challenge recently. Anything that we should keep in mind as we look at these numbers and look forward?
We are getting, in fact, we don't foresee that any a bad thing is going to have, at least which will have the material impact to us. What we are looking for, there will always be a new geography which is helping us to grow. And that is what we put on our risk side. So we are very clear and, in terms of how we should focus, particularly on the cash flow, particularly on the risk of the business and other factors which are going to have the impact. So the team is, quite, what we call it our steering team, which is quite, robust enough by getting this kind of inputs. And now we can afford to get such kind of inputs, which help us to make our figure work quite accurate about. I cannot say that I will be 100% sure, but we will always be near to our accuracy level.
Okay, and in terms of new geographies, you spoke about Europe. What are the other sort of details that you can give us, Mr. Shah, or is the focus going to be most of your revenues coming from India? Is that where the focus is going to be?
No, revenue from India is already there. We are quite, if you say we are in a leadership position for both material handling as well as for the gear also. Material handling, yes, as per our business strategy, we are not going for the turnkey projects. Though the customer are insisting us to, move forward for the EPC, they are looking for us, why you do not participate in everything. But we have put our stand very clear. No, we are ready to support you if the order is for the supply of equipment only. And that is what we are getting, that the stream of order in that post. In the recent quarter only, we got a big order from the steel sector as well as from the cement sector also. The same is there for the power sector, which we are sure after the election is over. Once the the election protocol is over, we will definitely get that traction also.
Okay. All right, thank you so much for speaking with us. Kamlesh Shah, the CFO of Elecon Group, talking about the numbers for FY24 and the outlook as well. We'll take a very short break. On the other side, we're focusing on what has happened with GSPL. We speak to AK Tiwari, member at Petroleum and Natural Gas Regulatory Board, about the tariff cuts and more. Stay tuned.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. We are the, in many ways, we actually are the generation which is going to build the country. Our parents spent their whole life building roti, kapda, makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change.
Well, in a setback of what some brokerages are saying is a setback of epic proportions, PNGRB, the gas regulator, has sharply cut tariffs for GSPL's key HP pipeline network in Gujarat by 47%. This is much higher a cut than what was penciled in by the analyst community and by the companies asked themselves. Mr. AK Tiwari is member at Petroleum and Natural Gas Regulatory Board, which is PNGRB. He joins us right now to talk about the reasons for the cut and what are the implications of these assumptions for the future as well. Mr. Tiwari, thanks so much for joining in. Most people are penciling in that the key reasons for a cut are lower Capex assumptions and lower OPEX assumptions by PNGRB versus what the company or the street was factoring in. Could you dwell upon this, sir?
Yeah, good morning. Good morning, Neeraj, Tamanna, and all the viewers.
Thank you.
Two things I would like to share that we have, as per our regulations, we give the 12% post-tax IRR. So that is always maintained, number one. Number two, we have recently concluded the capacity assessment of not only GSPL, but all other entities, GAIL and others also. So that way the capacity assessment has been done. And the reduction of this tariff are combination of Capex, which has not been, which was earlier envisaged, has not been done, OPEX also. And some of the Capex we have already taken for Spur line, for Swan and Chara terminals and all. So that way we have maintained the post-tax IRR of 12%. And since the volume was earlier envisaged and in the tariff order was lower, and where the volume was more than 26 SCMD. So that way all these adjustment has led to reduction in the tariff. But PNGRB has always maintained 12% post-tax IRR. So that is there.
Mr. Tiwari, the lower OPEX, now, if I'm not wrong, you're saying that because most of the country now comes under the CGD licenses, the OPEX for the future for most companies will likely be low. Is that a safe assumption, therefore, that anybody trying to bake in a higher tariff because of high OPEX cost over the course of the next 3, 5, 7 years is not going to be the case?
See, even the assumption of the OPEX is there. What is the actual expenditure? What is the actual OPEX which has been done? If somebody assumes that this is the Capex, they can plan. But if the Capex is not done, so that way the adjustment will always be there. That true-up will always be there. So that way, whatever the actual expenditure has been done, that way we have already adjusted, and the reason for these cuts are mainly on account of these.
Mr. Tiwari, good morning. Tamanna here. What is, I think, I wouldn't say astonishing, but a little difficult to understand is the gap in the assumption by the company and the assumption by PNGRB. In some cases, it's nearly half, whether it's Capex, future outgoing Capex or operating Capex, even volumes. Why is there such a discrepancy? Where is that coming from? Is there an incorrect assumption on the part of the company? Are they overestimating? Or can you help explain that why is there such a big gap on the assumption? Because that's what's really, I think, taken everyone who watches this space by surprise.
Yeah. See. One is the future Capex and future OPEX. So for the future Capex, for the Swan terminal, Chara terminal, as well as the other spur lines we have already taken. For OPEX, what was the trend earlier? That way we also see whether that is correct OPEX which is presumed or not. That we also calculate, and we give the reasons for that. Similarly, if the OPEX and Capex which was taken earlier, and if that has not been achieved, so that way we true up that way. So what I want to say that 12% post-tax IRR has always been maintained, and that detailed tariff order which has been uploaded gives the total reason for that.
No, Mr. Tiwari, let me reiterate my question. I'm not saying that there's no detailed reasoning being given. I'm not saying there is no margin of error. I'm not even saying that your reasoning is incorrect. I'm just trying to understand if your reasoning is correct. Did the company overestimate in the first place? How can there be such a big gap? Clearly, one side has gotten it wrong.
Yeah, I think there was some assumptions which was escalated, so that way it has been done.
Sorry, assumptions were escalated?
Yeah.
Okay.
Mr. Tiwari, two questions. I still come back. So therefore, because the country comes under CGD licenses, independent of what Capex has been done, would assumptions over future OPEX need to be lower from companies' ends?
See, OPEX depend upon the various factors which are there. So based on the trend and based on there are the 4.5%, we always escalate that way. So that way it is given to all the companies. If there is any OPEX which are to be allowed and has been done more, we allow that way. So that way, I think these assumptions, these data has been taken that way.
Okay. Would there be, based on the assumptions that PNGRB has made, or the calculations rather, that the PNGRB has made for this order of GSPL, are there implications for some other companies as well? There's noticeably some thought that there could be assumptions that will be were assumed for GAIL as well, and those could come out at some point of time.
No, no, there is no connection between the GSPL and GAIL and other companies. It depends upon what way the data has been given, what way they have achieved, what way they are able to achieve the Capex and Opex which have been there. So there is no similarity for that way. The GSPL tariff and GAIL tariff, the same principle will apply everywhere. That is not a
do you typically see?
We can't say that way. Proportionally, that will be there.
Do you typically see a big variance or such a large variance, Mr. Tiwari, or is this a one-off? That's, I think, what we're trying to understand.
In case of
when we're talking about a GAIL, etc., do you typically see such a large discrepancy or such a large difference between what the company is assuming and what you are assuming?
At present, I can say that there will not be any much variation. But it depends upon the GAIL. We have recently concluded the integrated tariff. So that we have already trued up. Based on the EIL capacity which are there and the other things, we will come up with public consultation and then we'll do. So I don't think, means I can't commit that way.
Yeah.
But that will not be a variation.
So on an average or typically or ordinarily, you don't see such a big variation. Would that be safe to say?
Yeah.
Okay, Mr. Tiwari, just one final question, from my end at least. What I was trying to ask was when it comes to GAIL or some of the other companies as well, because GSPL had assumed a gas price of $12 per MMBTU for FY24 with an annual escalation of 4.5, and because PNGRB has considered 11 for FY24-25 and 7.6 or 7.5 for FY26. Would these revised assumptions for GSPL apply to GAIL, and therefore could there be an impact on GAIL's this thing as well?
Yeah, sure. We apply same principle for when we revise the tariff of the GSPL. That is not it. We'll give.
Okay.
Same principle. Yeah.
Fair call. Mr. Tiwari, appreciate you giving us this clarity.
Just one thing I would like to say from my point of view. See, Government of India and PNGRB has created ecosystem of gas-based economy. National gas grid, authorization of the CGD, LNG terminals integrations, and so many other things are there. And wherein we have come up with the regulatory reforms, fiscal reforms, tariff reforms. So all these ecosystems have been created, and these companies, GSPL, GAIL, are performing well. And that way, we are going to ensure that their post-tax IRR of 12%, whatever is there, they should get it. So that way, PNGRB is very proactive as well as we are considerate, and we have come up with so many regulatory changes in the interest of the entities and companies. So that will continue.
Okay. Appreciate this conversation, Mr. Tiwari. Thanks for taking the time out and being with us.
Okay, thank you.
That's PNGRB. And GSPL is down 20%, but I must say GAIL too is down about a couple of percentage points today.
I think the big takeaway for me was that there might have been an incremental assumption from GSPL, because that really is at the crux of it. How do you have such a varying version of what something would cost? Anyway, markets are off their highs, but I must say Wipro is chugging along nicely. Just want to pull up a Wipro this morning, and the stock up 2.5% now, near its morning's high, after being completely drubbed by a lot of brokerages and analysts once its numbers were out. Wipro not doing too badly. I just want to see what HDFC is doing meanwhile, where it was absolutely the reverse, where the outlook was fairly positive, at least before market open. Stock down about 1% right now. So all in all, markets in positive territory, but off their day's highs by some extent on the Nifty. It's looking like overall a pretty decent morning. We'll take a very short break. With that, it's a wrap on India Markets Open. But stay tuned. Up next is Talking Point.
in this election, let us take a pledge to vote. I shall be there exercising my right, standing in the queue to get my turn to vote in the election. We sometimes underestimate the value of the right that we have, but just think about many countries which are ruled by authoritarian rulers. The citizens of those countries have no right to vote. In our country, we choose our leaders, we decide who is going to be ruling the country, and it is something which is both a fantastic right, privilege, and we should also see it as our constitutional duty. So this election, I am going to be there, and I hope you all will join me in casting your vote too. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and
Hello and welcome to Talking Point. I'm your host, Neeraj Shah. And the case for the chat today, and it's suited or fit to bill for our guest who's joining in. The case for a chat: does the post-poll FPI flows fuel another leg of the market's rally? Is that something that people should keep in mind? He speaks to a bunch of these guys and would be able to give a great insight there. Are rate cuts no longer required, and will that have an impact on risk assets? Great to talk about multiples and rate cuts with him as well. And more importantly, he's written a number of notes on the Capex trend over the last 18 months. And we now try and figure out whether private Capex has begun its uptrend. Our guest today, Vinod Karki, Senior VP Equity Research, ICICI Securities. Vinod, it's been a while, but thanks for taking the time out. Hope all is well.
All well, Neeraj. How are things at your end?
Touchwood. All okay, Vinod. Thanks for asking. And let's try and figure out if you believe, Vinod, since we are in the midst of the election season, whether post-election, if indeed the verdict is what the market is currently factoring in, would it make an impact on flows, on sentiment and more, or would it be status quo? Let's start off with that argument.
Yeah, so if you observe the market, once the state election results came and some of the opinion polls came, market has been kind of warming up to the idea that there's going to be more consolidation maybe in terms of vote share, and the outcome will be favorable. So I don't think that that will be a surprise. So some of that is, I think, getting baked into the stock prices already. But nevertheless, I mean, that's an expectation when actually there is a strong mandate, then there is a chance of some bit of what you should say, excitement in the market. It seems that the market has made some kind of up move on the expectation that we'll get a favorable mandate in this election. So to that extent, I think once the elections are out, and we have seen over the last several election, the volatility in the markets on election day has been reducing significantly if you go from 2004, 9, 14, and that way. So I think election day volatility may not be very high if it is at par with the expectations. And beyond that, obviously, fundamentals will take over how growth is panning out, what's the outlook for rates, and things like that.
Okay. Just wondering, I mean, the talk at the end of December when the 3 state election verdicts came in was that FPIs which are waiting for the election verdict to come out in June or May, whatever, would prepone now because they would believe it's a shoe-in. The current dispensation is a shoe-in. We haven't quite seen that. And maybe other factors like the EM performance or the interest rate trajectories is to play here. But I'm still wondering, in your conversations with global clients, are they waiting for the election verdict to allocate money to India, or are there other reasons around it?
Well, if you see the actions of the FPIs over the last year and particularly over the last month or so when the March numbers are available for flows across sectors, one thing is coming out clearly that the FPIs are buying into, first of all, if you see the last year, they were more buyers of broader market than just the large caps. And even in the March month, we saw clear preference for domestic cyclicals over defensives, in fact. So, which tells me that FIIs overall are very bullish on the domestic facing economy stocks. So that's a reflection of their faith and their outlook towards the domestic economy. So, but to answer the question whether they're waiting or not, I mean the action clearly speaks that they have been increasing allocation towards broader market, domestic facing economy stocks, and things like that. So action speaks for itself. Obviously, there have been volatility in between when there are this expectation of rate cuts goes away and rate bond yields in the US rise. We have seen volatility around it, but overall, if you see over the last, I mean, this is I think I was just looking at some of my charts and I realized that this is probably the first instance where over a trailing 12-month basis, both DIIs and FIIs are, on a trailing 12-month basis are buyers of 20 billion odd in terms of stock. Usually they are at opposite, they are at opposite. If they are the FIIs are buying at 20, the DIIs would be lower, that kind of a thing. Somehow they are converging right now. So which is, I think, resulting in these valuations remaining high. And that can actually, if the political situation gets better, growth keeps coming in, and that could be one of the reasons to be a little worried, because if both these large players in the market continue to be buyers, then who's going to be the seller, So last year, what happened was the MFs and FPIs kept buying 20 billion odd each. But the supply came from promoters and some of the other FDI, those kind of things. Yeah. But it's not necessary that it will follow every time. And that's where the greed comes in and everyone turns buyer and then you get into bubble zone. So that's something I worry about from the positive side that, if everyone continues to buy, then you'll get a situation where the valuations will really get out of hand.
Yeah. Yeah, well, maybe in select cases they might already have, but that's the other point, Vinod, and you've written about this so extensively, the capex and private capex as well, and I think your April note speaks about a strategy around capacity utilization levels as well. Just trying to understand what's your thesis now. Some people argue that don't look at bank credit growth as a proxy for private capex because capex is happening without bank borrowings, and therefore don't look at that barometer. Capex is happening in a lot of sectors which hitherto had not seen capex but are seeing capex. I would love to understand from you, one, is government capex still as strong as it was? Is that the only factor driving capex spends? Or is private capex also starting to rise? And what are the pockets where you're seeing telltale evidence of this?
Yes, yes. So when you talk about capex, so the investment rate is on the verge of breaking out of the previous high of around 34% of GDP, which was made in around 2011-12. And this time with better ICOR, so which is the productivity of capital is improving. And that I can substantiate that macro number by the ROE of the Nifty, which is getting into value creation zone of more than 15%. Now, when you talk about an investment rate of 30% plus, which you're effectively talking about more than 100 trillion rupees worth of capex, because the GDP is around 300 trillion. So when you break it up, what does government contribute? Nothing. I mean, it's just 8-9 trillion from the center and 7-8 trillion by the state. So it's 15-16 trillion. So where is the rest, which makes up more than 100 trillion coming from? That's what, I mean, if you look at the GDP print every quarter, it is showing that the gross fixed capital formation is leading GDP growth, which means that a large part of the GFCF, which is made up by real estate investments by households and corporate capex, must be moving. What we know anecdotally and from data is that real estate cycle is almost in the second year of its expansion. While the center was doing pretty well, now states have started to contribute from this year and they're growing faster, I think, than the center. And corporates, I think, are just about starting to pick up, in my view. Right? So if you look at the evolution of this investment cycle this time around, the first move was made by the center in terms of expanding its investment. Real estate followed on its own in terms of animal spirits somehow rose and people started buying houses, and it's continuing. Typically, these cycles last from 5 to 10 years. And now states, because their revenues have started rising, they're getting better stamp duty, GST and things like that, they have started contributing. Corporates, I think, have just started to bottom out and started to rise. So there is this biggest lift may come from the corporate side in India.
Got it. Okay. Well, the other aspect, of course, is what's happening to specific pockets and, by virtue of this capex, what PSUs have done. Actually, speaking of PSUs, just before I get to Vinod on that, can I get in my colleague Mihika? Mihika joins in right now to talk about a big development that's happened in terms of a policy decision, really. And it may be an isolated instance, but Mihika, GSPL is a stock firmly in focus today for all the wrong reasons.
Yes. So they have gotten a 47% tariff cut from the Petroleum and Natural Gas Board, and this is for their key high-pressure pipeline network in Gujarat. Now, the authorized tariff is at 18.1 rupees per MMBTU versus 34 rupees earlier, and this is also lower than the 51 rupee tariff that was originally sought by Gujarat state. Now, in terms of impact, while consumers could see lower prices both on households and industrials, for Gujarat State Petroleum, it puts a pressure on their revenue and their profits, as because this is a cut on the price they can charge to transport the gas via their pipeline. Now, there were many reasons for why the Petroleum and Natural Gas Board did cut the tariffs so drastically. One is higher volumes. Their volume assumptions, while Gujarat State Petronet assumed 26 million metric standard cubic meter of gas per day, the board assumed 31.6 1.7. In terms of Capex, their Capex assumption stands much lower. Now, Gujarat State Petronet claimed a Capex of 3,400 while the board considered 1,800 crores. And in terms of low operating Capex, the PNGRB approved 2,600 crores of Capex, operating Capex, while the company stated 5,000 crores. We also had certain brokerages that did go negative in terms of rating and their price targets. We had Nomura, which downgraded Gujarat State Petronet to a reduce at a 320 rupee target, which implies a 15% downside to the previous close. They've cut FY25 and 26 EBITDA estimates by 37 and 42%. And last year, we had Kotak, which also reduced its rating to a reduce at a target price of 360 rupees, which is a 22% downside.
Got it. Mika, thanks a lot for that. And that clearly makes GSPL the stock of the day today. And Vinod, does, PSUs seem to have shrugged off this cloak of what could happen if there is an action X or action Y taken. Periodically, some regulatory action on PSUs or private companies, but impacting a lot of PSUs companies comes to the fore. Just trying to understand, for gas companies or for PSUs in general, are you constructive or would you approach them with caution now that they are no longer at dirt cheap valuations?
So if you look at broader economic cycles, what we observed is that, see, PSUs, why are they performing? You have to understand it is coming from the way the color of the economic expansion is happening. As I said, investment rate is leading the GDP growth. So what happens in this environment is that companies which grow by growing their balance sheets and investing, they do well. And bulk of the PSUs are in the capital intensive sector. So what will happen is, as the investment rate keeps expanding with better productivity of capital, generally these companies will show better than expected growth. And that is what the market cares about. I mean, one or two instances where regulatory, because of regulatory reasons, you will have cut in estimates and things like that. What the investor has to be cognizant of is that stocks perform wherever there is growth surprise, So we continue to believe that in the way the economic expansion is happening, bulk of the companies which are related to the investment side of the economy, they will continue to show better than expected growth in general. I mean, you'll have cases where regulatory concerns will dilute the picture, but in general, that's the thing we think will show up. In fact, disappointment is continuously coming from the outperformance of the previous cycle, which is the defensive sectors, be it IT or even FMCG. And in general, FMCG is getting into a situation where the broad-based consumption, the low-end rural consumption and things like that continue to struggle. While the valuations, if you see, if I were to put a PEG ratio, PE to G ratio, they look pretty expensive. So do IT, which we have been saying. Obviously, at some point, they'll get into a good zone and growth will kind of bottom out and start looking better. But for now, the growth is firmly on the side of the cyclicals, which, as I said, FPIs, DIIs, they continue to be positive on, continue to buy these stocks.
Well, what's the view on IT? Actually, on IT, maybe what we do is, just take a quick break because we need to take a scheduled commercial break. Just take a very quick break, come back, talk about IT. In fact, maybe try and get in my colleague Rucha to just make a quick comparison as well. But talk to Vinod Karki about IT and then talk to him at length about cyclicals. Where is it that he finds favor? Stay tuned. We'll be right back.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms.
Back with Talking Point right here on NDTV Profit. Our guest Vinod Karki was talking about IT. Let me just very quickly get my colleague Rucha to talk about there are 3 IT majors that have come out, but the 2 which give a guidance of sorts, TCS and Infi, and what's been the standout there, and then we talk to Vinod about the valuations. Rucha.
Thanks, Neeraj. So quickly comparing TCS and Infosys, number one, in terms of FY24 performance on a consolidated YOY basis, TCS has clearly outperformed Infosys. However, in terms of discretionary spends, yes, across the industry, discretionary spends are under pressure, but Infosys has a higher share of revenue coming from discretionary spends, which naturally means that in case there's a revival in such discretionary spends, Infosys will have more upside than TCS. Now, in terms of valuations, TCS is trading above its 5-year average median PE, while Infosys is clearly trading lower, which again means that there is more room to for Infosys to go up. Now, in terms of 1-year stock performance, TCS is at par with Nifty IT. However, Infosys has underperformed Nifty IT. In terms of brokerage views, 66% of the brokers on the street have a buy recommendation on Infosys, while for TCS only 58% of them have a buy recommendation. In terms of sell recommendation, 19% have a sell recommendation on Infosys, while 21% have a sell recommendation on TCS, which clearly means that the street is more bullish for Infosys as compared to TCS. And lastly, in terms of upside, the street is expecting around 9% upside for TCS. However, for Infosys, this is at 14%.
Okay, Rucha. Thanks for that. For people who are compulsive between the two, well, this is a very important set of points to watch out for. But Vinod Karki, before the break, told us about how IT may not necessarily be on the minds of the investors currently. Vinod, I'm just asking you, I heard you say that at some point of times, it could get into a buy zone. They are not in a buy zone currently, according to you.
See, the valuations for any company, in my view, are triggered by 3 factors. One is in the near term, how are the earnings upgrade, downgrade happening? So clearly there is no question that there is any sign of any upgrade over there. Second is you give a benefit of doubt to long-term growth prospects, basically. So you say, okay, in the short term you have some pain, but long-term prospects are brilliant, and So, but there's a question of what AI can do to tech. The IT services company, especially. Obviously, tech as a sector will only flourish in an AI environment. But currently, the way our companies are working, there is a bit of question mark, which several people have talked about, experts, industry experts, about is there a disruption coming from AI towards such companies? So there is some amount of doubt about the long term also. But the third important thing which is to be noted is that contrary to earlier times, which is pre-COVID and after COVID for some time, we have moved away from ultra low interest rates in the developed markets, which used to keep such companies, the defensives, long-term growth companies, long-term prospect companies at higher valuation. Now, people are now realizing that the US interest rates are going to be higher for longer. So from all this perspective, I mean, I don't see any, what you should say, trigger. Either, let's say you make a case that, okay, from a long-term perspective, because AI is coming and things like that, it's going to be high growth for these companies. In the short term, we are having some problem. Or you say interest rates are going to go down, and therefore these, where you go extrapolate earnings into the long term, the long-term growth value keeps rising. Or in the short term, you have some kind of upgrade, which you are seeing in the cyclicals. Obviously, cyclicals is obviously facing these things. Basically, their short-term outlook is improving as we speak. Obviously, their valuation will get impacted by higher rates, but long-term growth can be anybody's guess. So at least one thing is moving for them, which is near-term growth outlook. We don't see that in IT right now, and valuations are at higher levels. I mean, the 5-year average is kind of a misnomer because post-COVID there was a big spike in the multiple. Pre-COVID, I think it was not at these levels. So you have to keep these things in mind.
Yeah, that's an important point. 5-year averages might actually become a bit of a misnomer. But speaking of valuations, Vinod, cyclicals are seeing buying, there is earnings growth, etc. Our valuations started to creep up. I mean, I look at a clutch of these cap good names, for example, and the valuation seems sky high.
Yeah, so that is the challenge. I mean, so you see, you have to look at from a PEG ratio perspective. I mean, if you are having higher PE, then you better have higher growth. That is the only way stock can kind of, support. So let's say something like an L&T, just an example. Let's say it is trading at something around 30 PE, but it gives, let's say, 25% earnings. So you are at a PEG ratio of just above 1, right? But you have something like a technology company, a IT services company, which is at 25 PE. And growth is it is a single digit or something like that. Then the PEG ratio is more than twice, basically. So that's the thing. But now, if some of these capital goods companies are 60, 70 PE, then it becomes very difficult to kind of go out and buy them aggressively. So I think that is the challenge. You'll find lesser and lesser high quality companies in this space where growth is picking up. But you should get P of around 25, 30, that kind of a thing, because growth will be in their 20s, the way the GDP is expanding. So that's the work of the investor, to find these companies which are around 25, 30 times or around that kind of a ballpark, and showing you 15, 20%, 20, 30% kind of earnings growth.
Vinod,
with positive surprise.
Right. Vinod, we are out of time completely, but quick 30-second answer if you can. Would you therefore believe that some of these price to perfection MNC cap good names could actually correct despite ongoing capex because of valuations? Quick 30 seconds.
Yeah. So it is very simple in my mind. So suppose you are at 60 P, right? And if you get earnings surprise, then market can keep you at 60 P, and your earnings space would have expanded by 20%. So you can still expand. So the question is, the valuation contraction happens when you get a miss.
Got it. Okay.
Like IT is, yeah. So that's a very simple thing. So these high valuations can be maintained.
Okay. High valuations can be maintained, but if there is a miss, then some of these expensive stocks could correct very, very swiftly as well. So bear that in mind as you look at investing into some of these. Vinod Karki, always lovely talking to you. Today was no different. Thanks for taking the time out.
Thank you.
And that's the view from on today's Talking Point, viewers. Thanks so much for tuning in today.
Presented by Patanjali Kesh Kanti Oil and Shampoo, Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim,
It's a good day for Dalal Street. The markets trade higher. The Sensex above 73,300, while the Nifty trades comfortably about 22,200. A sea of green across sectors. PSUs, real estate and consumer durables emerge as the top gainers on the street. And GSPL hits lower circuit as the Petroleum and Gas Regulatory Board cuts key Gujarat pipeline tariff by 47%, which is 64% below the company's expectation. More earnings on the radar. Reliance Industries and Mahindra Logistics are expected to report their numbers later today. And in other news, Hong Kong's food regulatory body recalls 3 MDH and 1 Everest spice mixes after detecting cancer-causing ingredients. Welcome to the F&O show. Over the next 20 minutes, we'll take you through all the F&O action through the day. Well, the markets are looking good. It's actually been a solid opening for the street and we are holding steady. And that's the good news. The pullback which started on Friday continues into today's day of trade with the Nifty trading at 22,240, up about 0.5%. So 91-point gain on the index is what we have. In terms of F&O action, the maximum call open interest addition is seen at levels of 23,000 strike, indicating that that becomes an important level of resistance for the index, followed by 22,500 and 22,300. Call writing has been seen at levels of 22,500, followed by 23,000 and 22,600. On the put side, maximum open interest addition is at levels of 22,000, which becomes an important level of support for the street. The breadth of the market is pretty solid this morning. The PCR as well is about 1%, indicating the sentiment on the street to be quite bullish. In terms of the Nifty 50, you've got about 4 to 5 stocks that are trading lower, but the rest of the 45 stocks are trading deeply in the green. Amongst your top gainers, you've got the OMCs that are having a good day on back of crude prices declining 3% last week, with the likes of BPCL up nearly 4%. Wipro post a weak quarter, once again manages to do well in terms of stock performance. The stock sees a gain of 3% in trade. You've also got Tata Consumers, banking names that are having a pleasant morning. On the sell side, it is JSW Steel, ITC, HDFC Bank, who did not please the street, or rather with the gains on Friday. Despite having numbers that met street expectations, the stock itself is seeing some weakness. Across the broader markets, the picture is pretty similar. You've got some big gainers and some big losers. On the losing side, GSPL is your top loser with a loss of 20%, lower circuit being hit. Spark continues to see another lower circuit day for the 5th straight day running. Persistent, despite good numbers, the stock valuation seem expensive, on due to which the stock sees a cut of 7% in trade. JK Cement, Vodafone Idea are some of the other top losers. On the gaining side, you've got Triveni Engineering, that's up 8%, TVS, Data Patterns, Hindustan Copper, who we will be connecting with in a few minutes, managed to do a good quarter. The stock is up 6%. Jupiter Wagons, so railway stocks, defense counters are all doing really well ahead of the elections. HBCL and IOC are some of your other winners. Well, we now have with us Ashish Kyal, founder and CEO of Wave Strategy Advisors, joining in with his F&O strategies. Ashish, good morning. Thanks for joining in. To begin with, the Nifty is looking comfortable. 22,000 is a clear level of support for the index, and that's where we've seen the maximum put OI. On the upside, 23,000 becomes a tough resistance. At these levels, how do you play the Nifty?
Hi, morning to you and all the viewers. If you look at overall Nifty index, we saw a lot of volatility in the prior week, but there was some buying that emerged from the lower levels of around 21,770, from where we saw the bounce back happening. And today there is an attempt on the upside, but we, after having a gap up opening about that 22,300, we were not able to sustain, and we are just consolidating. So if I look at an overall hourly chart, I think we might consolidate in a broad range. On the downside, the support for the index is around going to be around 22,120 levels. And on the upside, 22,330 is going to be the immediate hurdle. So having said that, maybe if we can get a dip towards 22,160, there can be a buying opportunity aiming back to 22,300 levels. So that's the range that one has to play for. And maybe on the option side, you can look forward for shorting about strangles out of the money options that can give good amount of money in today's session.
Ashish, what's the trade on Bank Nifty? It was the shining star on Friday, and this morning as well, it looks like it's well placed at this stage. Would you consider initiating fresh longs on Bank Nifty at this stage?
See, if you look at Bank Nifty, we got a very big rejection from the opening, because the open of Bank Nifty was somewhere around 48,140 levels. And from there, we are now at 47,680. So there has been a big rejection candle that we can see from the opening highs. So I'm going to refrain from creating a long position as of now, until and unless I see a move back about that 47,800. So long positions can be created if Bank Nifty forms a positive candle again above 47,800, and then we can aim for somewhere around 48,000 levels on the upside. And the support for Bank Nifty, very important support for Bank Nifty on the downside, is going to be around 47,480. So that level has to be protected for any positivity to emerge.
Right, so that's the trade on Bank Nifty and the Nifty. Have you seen HDFC Bank? Ashish, I'm just intrigued by what the stock is doing this morning. Friday, of course, we saw gains coming out of HDFC Bank. Fundamentally, this was ahead of earnings. This morning, it almost seems like buy the rumor, sell the news. The slight negative bias, do you think an opportunistic trader for the month could look at picking up HDFC Bank, or it's a missed trade?
If you look at HDFC Bank, I'm expecting HDFC Bank has a very important hurdle or major hurdle at 1560, 1558, from where it has reversed a couple of times. And on the downside, the Bollinger Bands or the mid support comes to around 1500 levels. So I think for HDFC Bank, if your perspective is from 6 months to 1 year horizon, you can pick up the stock and hold out for that time frame. But if you are a short-term intraday trader, then possibly maybe if it breaches below that 1510, then I might look forward to sell for a short-term targets of around 1480 odd levels.
Right. Let's talk about stock-specific trades, Ashish. In terms of trading strategies, what stock-specific trade are you recommending to our viewers?
The first stock pick is going to be from Mahindra Lifespace. We can clearly see the stock was consolidating, formed a good triangle pattern, and today it has given a very strong breakout on the upside. The volumes are picking up along with the breakout, so looks like it's going to sustain that. And the target on the upside for Mahindra Lifespace comes to around 690. So long positions can be created here. Maintain a stop loss of 623. And the next stock on the buy side is going to be Blue Star. We can clearly see Blue Star has given a breakout after consolidating for around 5 to 6 trading sessions, bounced back from its important exponential moving averages, and possibly starting the fifth wave on the upside for the target of 1550. So long positions can be created in Blue Star with a stop loss of 1395 and aiming for the target of 1550.
Right. Anything for in OMCs, Ashish? I mean, this is looking like a daily trade. You have higher crude prices and OMC sell-off, crude eases, and OMCs become the star trading in stocks. This morning, BPCL, HPCL, IOC, all looking good. Any more room for an upside on these counters?
Yes, if you look at the oil marketing companies, you can clearly see some kind of a volatility is very high. Every other day it is having gap up or gap down opening. But having said that, I think IOC can possibly give a positive breakout. The stock has managed to sustain above its mid bands, and I think from here on we can aim for the target of 180 on the upside. The support for IOC is going to be somewhere around the levels of 165. As long as that is maintained, we can create long positions aiming for 180 levels.
Right, that's the call coming in on some of those OMCs that are in focus this morning. Very quick one. I don't know whether you're tracking some of these defense names, Ashish, but again, they've had a really good run ahead of election, and so have railway stocks. Have you identified any trading strategies for maybe an HAL, BDL, BEL, Rail Vikas Nigam, any of them actually?
All of these stocks, we can clearly see there has been a range-bound movement, but out of all of these, HAL is something that stands out because the trend has been very strong over past many weeks. We can clearly see the stock has been managing to rally from the lows of 2,900. It is now trading at 3,750 in just over a month's time, and the trend is still positively intact. So I think any dips in HAL can be used as an opportunity to buy. We can aim for the target on the upside towards the level of around 4,000. And on the downside, the support for the stock is going to be somewhere around in the zone of 3,700.
Thank you, Ashish. Great perspective from you. That's the trading strategies coming in from Ashish on stock-specific trades and Nifty and Bank Nifty. Well, we'll move on from equities to currency and commodities. Jigar Trivedi of Reliance Securities now joins. And Jigar, crude is down 3% from last week, and that's giving a leg up to some of the bears in the crude market. At these levels, what is the crude strategy?
Good morning. So yes, because of the ample supplies from the US, you look at the inventory data which has come last week. So I think because of that, it's under pressure. And moreover, there is no further escalation of geopolitical tensions between Israel and Iran. So that's why today we are seeing crude MCX May contract down by around 2.5%. For intraday also, the outlook is bearish. Of course, we have seen a strong rally year to date, so some profit booking is also expected. And MCX crude oil, one can go short May contract around 68.20, 68.70 is resistance, which is stop loss, and 67.20 is a target for intraday. And COMEX WTI crude oil, it has a support around $81. If it breaks that level, I think we'll see a further fall of around $2 to $3. So accordingly, we are short on crude oil.
Short on crude oil. Well, what about gold? It's had a pretty solid run. The big brokerages have all turned constructive on gold. How do you feel? There has been, there are worries with the US, there's concerns and geopolitical risk, and historically gold has always given positive returns. At these levels, if one is a trader, how would you trade gold and silver?
See, we already have seen a very strong rally in gold and silver since we are talking about gold. For the last 5 weeks, 5 consecutive weeks, we have seen an uptick, and now it's trading with around fall of around $22, or on the M6 around 600 points. It's down by around 600 points. See, the incoming data from the US, it has pushed the dollar index to month high, which is around 106. And now the focus is on GDP, which will come on this week. And few of the Fed members are of the opinion not to touch the interest rates this year. From the June The expectation has gone to July. It has gone even beyond July, that is September, for the first rate cut. We are of the opinion there will be only one rate cut, and we won't be surprised if there is not a single rate cut this year. Plus, as I said before also, there is no escalation of geopolitical risk. So as per your gold ETF holdings are also very steady. And again, in gold and silver also, we were expecting a profit booking, healthy profit booking. That's what we have seen today. So for intraday, the outlook is bearish, and one can go short in gold, which is a June contract. Sell around 72,250, 72,350 is a stop loss, 72,000 is support here, which is target. And on the COMEX front, 2,400 is resistance, and now 2320, 2300 is a support.
Right. Very lastly, Jigar, anything on soft commodities that you're trading?
I recommend to go long in copper, because I'm quite comfortable going long in copper. Copper April, one can go long around 848, 845 is a stop loss, 854 is target. Although we have seen correction in base metal prices, but last week China reported very strong GDP, and they are of the opinion to increase their production here on. And although the dollar index is appreciating, I think copper may rally further.
Right. Thank you for that, Jigar. That was an extensive view coming in on crude, gold, silver, and a couple of those soft commodities. We'll take a break on that note. We'll come back and put the focus on a new IPO and new listings, so stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo, Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company which is coming to the markets next week is J&K India. It's a manufacturer of heat appliances which are used in industries like oil and gas, petrochemicals, and fertilizers. The IPO is opening on April 23rd, closes on 25th, with price between 395 to 415, fresh issue of 300 crores, and an OFS largely by the promoters of 349.5 crores. So the total size is nearly 650 odd crores, which is there. Joining me today is Arvind Kamath, who is the chairman of the company, and Praveen Sathe, who is the chief financial officer of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Arvind, let me start off with you. You're raising 300 crores in this market and fresh capital. What is it going to be used for?
Yeah, hi. Good morning, Sajid. So basically, it's going to be used for working capital because we are basically into a heating equipment industry, which has a highly regulated industry, and it has a large capex. Basically, each product goes in anywhere between 50 crores to 500 crores. So that's how we need a working capital to grow. So the full proceeds mainly goes to the working capital and certain for the corporate purpose.
Mm-hmm. Arvind or Praveen, anyone can come in here. Give me a sense of the kind of working capital requirement that your industry requires, because it's a very capex intensive industry. And when you say you need such a high amount of working capital, what is the working capital days that you have currently?
See, this is a very this is in the industry having a high capex, that is true, and working capital requirement is also very high in this industry, and typically the working capital days could be between 100 to 120, and for executing the large projects we have a gestation period of around 6 to 8 months till the time the revenue starts coming in, and then the project lasts for almost on an average 1.5 years. So we do need working capital for executing such orders.
Mm-hmm. Arvind, take us through the kind of products that you make and the industry that you cater to, and how do you see current capex situation given the fact that you are part of this industry, and we have seen manufacturing pick up somewhat. So give us a sense of how is your business aligned to it?
Yeah, Sajid. So basically, our products are fired heaters, reformers, and cracking furnaces. So all these three together are called as heating equipment. So all these products are used in process industries, that is refineries, fertilizer plants, petrochemical plants, ammonia, and generation of hydrogen. So all this, what we get into is from the basic thermal design or process designing to engineering and the supply and also installation wherever customers require. So the customers mainly are large end users or the end users of the plants, or also the EPC companies who put up these plants.
Give me a sense what kind of scope and size of this industry is, and while traditionally you've been looking at some of the traditional companies like oil and gas, fertilizers, are you also looking at the hydrogen side of it as well, because you briefly mentioned about hydrogen? So are you looking at electrolyzers and that kind of industry which requires this kind of equipment?
Yes, absolutely, Sajid, because though we are started with primarily the heating equipment business, but now last 3 years we have forayed into the waste gas handling products as well, which is incinerators and flares. And the renewable energy section is our third segment where we do hydrogen. So we're putting up the first hydrogen fuel station in India, that is on-site generation and dispensing station. This will get commissioned possibly in next month. This is for one of the biggest oil major in India, and we are the first one to put up this hydrogen station in India. So they've already ordered the buses on Tata Motors, so we would see the Tata buses flying on hydrogen soon in our capital.
And who's the refiner? IOC, is it?
Yeah, that's correct. Yeah.
Okay. How big is this plant, and what kind of opportunity does it open up for you?
I mean, it has a huge, this plant is, they're able to produce 400 kg hydrogen per day. And like, for example, for a hydrogen developed economy like Germany or Korea, there are more than 500 hydrogen fuel stations. So you can imagine the quantum what a country like India can have. So whereas this is the first hydrogen fuel station in India.
Mm-hmm. Mr. Satek, give us a
and
sense.
it's a green hydrogen because we use it from a CBG.
Okay. Mrs. Satek, can you give us a sense of your financials in that sense? I was looking at your EBITDA margins. It has jumped from compared to FY23. Where is the jump coming in from, and is this 26.4% core EBITDA margins sustainable for you?
See, consistently for the past 3 years, our EBITDA margins have been around 18% and odd. And for the 9 months ended on December 23, we did see a jump of EBITDA margin to around 27%. But this is mainly due to we going public and getting a reduction in the managerial remuneration, the directorial remuneration. It has also contributed, and also some economies of scale have also contributed to this margin. So going forward, we see a good margin, good EBITDA margin. I won't say in absolute percentage terms, but we foresee to continue what we did in the past and to better it going forward.
When you say that it is primarily because of the managerial remuneration, is it been reduced, or it will come back in the fourth quarter or maybe in FY25?
No, as I told you that we went public, so public limited companies have the cap on managerial remuneration as per the Companies Act, and earlier it being a private limited company, there was no cap on that. And plus, not only this only factor, but also the economies of scale that we got when we crossed 400 crores of turnover last year. So naturally, we have now that leverage also.
Give me a sense of the kind of order book you're sitting in, and by when you can execute that order book.
See, as of December 23, we were sitting on order book of around 845 crores, and hopeful of executing the complete order in the fiscal 25.
Okay, and that so it would mean I'm looking at your 9-month number, 253 crores in revenues as compared to 400 odd crores which is there. Are you saying that you would be almost crossing the FY23 numbers in terms of revenue in the first in FY24?
Yes, definitely.
Okay. This entire order book which you said 800 crores is executable in next 12 months, is it?
Yes.
Okay, and what kind of margins that order book has actually? Is it in line with your 9-month margins, or is it those have lower margins?
See, as I said earlier, we give a guidance of the consistent margins what we have had in the past for 3 years or so, and a little better margin than that, having the economies of scale. So it would be in line with our past performance, plus there would be some improvement.
Arvind, can you take us through the relationship that you have with your corporate promoter, J&K Global? What kind of relationship is there, and how are you dealing with that relationship?
Yeah, we have an excellent working relationship with the J&K Global from Korea. But as you know, Korea is a fully developed country which has, average age is 44 now. So it's very difficult to manufacture and do the engineering in Korea. So they're largely dependent on us for the complete engineering and manufacturing in J&K India. The president and the CEO, Mr. V.H. Kim of J&K Global, is a good friend of mine, and I first met him 20 years back, that is in 2004 in Powai. So, and from that day, we've had an excellent relationship in terms of, starting of the company, and also going forward throughout. And they are also a promoter of this company. They have 26% stake in J&K India. And we also have a cooperation agreement in place where we work together globally, and India and Korea.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. We are the, in many ways, we actually are the generation which is going to build the country. Our parents spent their whole life building roti kapda makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa.
Good morning and welcome to NDTV Profit. We're now tracking Talbros Automotive as the joint venture company Morelli Talbros Chassis System Private Limited has secured a landmark multi-year 1,000 crore contract from a large European OEM. We're now joined by Mr. Naveen Juneja, CFO and whole-time director of Talbros Automotive. Good morning, sir, and welcome to NDTV Profit.
Thank you for having me on the show. Yeah, we are too pleased to announce the acquisition of this order from a European car manufacturer, and this is one of the top. This car manufacturer is one of the top 5 car manufacturers in the world. And this order is for our chassis division, Morelli Talbros Private Limited. The order will be executed over a period of. This order is for the vehicle parts to be supplied over a period of 8 years, starting with the first quarter of financial calendar year FY25.
And so you mentioned that you roughly will be investing 65 crores over the next financial year. Will that be done completely in the next financial year, or will that also be phased out as the order, I guess, is phased out over the next 8 years, if I'm right? So will the Capex, which as per your exchange filing is roughly 65 crores for this particular order itself, will that be phased out as well, or will that be done all together in FY25?
80% of the 65 crore will be the Capex of till 80% will be done in this current financial year, and balance 20% in next financial year, because the ramp up will start from the next financial year itself. So there will be ramp up will start, and by the end of next financial year, it will be, I think it will be at peak.
Understood. And apart from this 65 crores, what would be the other, is there any other Capex that the company is thinking of doing in financial year 2025 apart from the 65 crores?
Yeah, there are small Capexes of 5 to 8 crore will be done, or it will over and above the 65 crore, which will take care of other orders which we are getting from other customers based in UK. That will be also be executed in this Capex only.
Understood, sir. And just to kind of take a little step back and understand a little more about your business as well, I think currently chassis division is roughly 20% of your total revenue. Now for FY25, how do you see this segment shaping up? Do you see more orders coming in into this particular segment as well?
Yeah, at present it's about 20%. I think by next year it should be around 25 to 25%, and within next by FY27, this division should contribute above 30% in our overall pie.
Understood. And I think just also a gaskets divisions currently is roughly 40-41%. Do you see the share of this moving up as well, or maintaining market share? Because you're saying that your current chassis division will move up by roughly 5%. So do you see the revenue shift in favor of gaskets as well?
Yeah, we are expecting by FY27, because every year the thing, it will take time to materialize. By FY27, we expect that my gasket and heat shield will be around 35% plus, and my forging will be around 25% plus, and this division will be around 30 to 35% in between. And my other division, last Maru Rubber joint venture, will be around 15% for total revenue.
Understood, understood. And for the whole financial year of FY23, you had mentioned that you have secured orders for EVs of roughly 475 crores. Could you guide us for the number for the first 9 months? I know you are in the silent period for Q4, but for the first 9 months of financial year 2024, can you give us a breakup, or is that reported at the end of Q4 itself?
I can give you the data. The order we secured for 475 crores. Majority of these orders will come into commercial production in FY26 only, because those models will be launched in FY26 only. So last year, I can give figure, we did a total EV sale of about 35 to 37 crores. And next year, we are contemplating this sale to go up to 50 to 60 crores. And by FY27, we are targeting a EV sale of approximately 200 crore plus. And we are in the process of closing some more orders. If that materialize, I think we will cross the figure of 200 crores.
Understood. So you said that 200 crores by FY27. Is this 200 out of the total 475 crore order that you've already secured?
80% is yes. Balance we need to secure.
Okay. And you're saying that you envisage, if you could repeat the number, how many more orders just over the next 2 to 3 years? Of course, this is subject to change.
You know, orders, of course, we are working on an order bank of 200 to 300 crore more for the EV. I don't know what will happen, but we are positive that we'll be able to do something like that.
Absolutely. And just talking a little bit about these EV orders, are most of these orders from the domestic companies itself, or is there an export component also in this 475 crore order that you secured executed over the next 2 3 years?
At present, majority is from the export from European and from UK-based companies. Majority is export. Only, I think 10-15% is domestic. But in future, what we are talking about is that share of 15% can go up further to 25 to 30 for 35%. because EV just started in India, because volume is not in India.
And just talking about since most of your orders of this is roughly from Europe as well as other export markets, could you give us a general sense of how are you seeing the exports market? Because over the last year, we've seen a lot of geopolitical crisis as well as Europe's slowdown over 2022 and in 2023 as well. While this financial year has been a bit better, and we've heard commentary from other auto component makers as well that it is improving. Are you seeing the same? Do you see the going into so just talking about this particular year, have you seen the market improving, and if you have any commentary for FY25 as well, especially for the export market?
Of course, there is a delay, I can say, in implementing the EV vehicles, etc. Because the models which we are talking about FY25, 26, that was supposed to come into picture by early 26, but I think they have been delayed by 5 to 6 months. But government is in India, the government is pushing a lot for EV. Even Tata Motor today announced that they were setting up a plant for EV in Chennai with $1 billion investment, Jaguar vehicles, etc. So, future seems to be bright, but how much time it will take, it will delay 1 year, 2 years, nobody, it's a guess. Anybody does.
Correct. I think you rightly said that the EV space is revolving. Do you have any kind of commentary on the new India EV policy where the foreign OEM specifically will be allowed to come in India and invest roughly 4,000 crores, but in the meantime they will be beneficiary of a lower export duty of just 15%. So the likes of Tesla and the other bigger OEMs, we already have VinFast investing. Do you see that you could secure any kind of orders from such players as well? And also, if you have any commentary on two-wheelers as well within the industry, do you see the EV landscape for scooters? We've seen it's been on a tear. On both these segments, do you see the company benefiting?
Of course, you are rightly said, because a lot of foreign players, government has well EV policies, they want to encourage Tesla, you want to mention that, and we know because they are also allowing some CNG vehicles at a lower duty. That is applicable to Tata Motors also, I think, because Jaguar they are trying to launch Jaguar models in India. So they are also be beneficial from this policy. And hopefully everybody will find a space. Of course, initially hiccups, maybe one model goes fast in 1 year, other goes in fast in second year. But Tata Motors is working for last 4-5 years on that. That advantage of localization will be available to him from day one. Of course, Tesla will take some time, and let's see how it works. Because of course, whatever part we supply to Tata Motors, etc., we can supply to Tesla also. Let them come to India, then we'll see how it works.
Got it. And I think in Q3 you had announced the sale of your share in joint venture with Nippon Leakless Corporation in December 23. Has that the process has been completed? And I think you had mentioned that the company is expected to receive roughly 81 crores from the stake sale. So has the process already been completed on the legality front, and has the company already received this, and will we see this compensation in the Q4 numbers as well?
Yeah, we have already received the full amount of 81 crores in the month of I think last week of January itself, and the transaction is fully complete now.
Got it. And just taking a step back and looking at the across different segments and looking at the EBITDA margins, you'll operate roughly in the 13 to 17% EBITDA margins. Now for Q4, we realize you're in the silent period. So for FY25, do you have any commentary? Do you any segment that you see outperforming for FY25 specifically? I think you mentioned that the share of the JV with Marelli will increase in revenue from 20 to 25. Do you see that also coming down to the EBITDA as well as the PAT levels?
Yeah, definitely it will come, because all these European orders have a better margin as compared to domestic market. At present, for doing the last 2 quarters, Marelli is working at a EBITDA of 13%. I think within the next 2 years, this EBITDA should go up to 15%. It easily can go up to 15%. And other businesses are also, my heat shield gasket is working as a EBITDA of between 14 to 15% approximately, and 14 is around 17 to 18%. And Marble Rubber, which was lagging in this race, of course, last year they will close about 6 to 7%, and next year onward they should be 10% plus. Within the next 2-3 years, they should also be around 13 to 14%. So on the consolidated basis, I can see EBITDA around between 16 and 17% going forward.
That's really good to hear, sir. And I think you said that most of your orders from the EVs, specifically from the export. Now, currently, as per your latest filing, we can see that the domestic share of revenue is roughly 63%, while exports is roughly at 25%. So, where do you see this share over the next, a little medium term, so like the next 2 to 3 years, since most of these orders are from the export market? Do you see the share of exports going up from 25%? And if you have any particular number in mind, any kind of quantification or range that you can give us?
You are right. The share should go up, but our internal target is to take up to 30%. I'm working towards that.
Got it. And within the split between two-wheelers and four-wheelers, I think currently for 9 months, the share of two-wheelers has remained stagnant at roughly 22% of revenue, but the share of four-wheelers has gone up roughly 6 percentage points from last year. Could you give us a little bit more flavor on what's led to this increase? And going forward, where do you see this particular split between both of them?
The two-wheeler, of course, we have sold our business in joint venture, which was probably predominantly 100% two-wheeler based. Of course, this 2% will further come down below 20%. And my PV will increase because Marelli is only in PV. My heat shield business is only majority 90% plus is in PV, and Marble Rubber is 100% in PV. So overall, my PV share will go up by 5 to 6% more. Easily.
And this is over how long, sir?
Within 3 years.
Got it.
I think we can do before that because this order of Marelli, if we implement it 25, 26, PV share will shoot up.
Yeah. And just one final question from our side. I think on CV, as you said, that the CV share currently I could see that is roughly at around 24%. Now, over the last year, like 12 to 18 months, now the industry has been, slightly struggling, not too much growth, but not in negative territory as well. What do you think of the industry in general? And if you have any commentary for FY25, there have been some reports that the recovery could only come in the second half of financial year 25. Do you concur with this view? What are you seeing on the CV industry specifically? And if you have any commentary on Talbros as well, anything on that? Yeah.
You are absolutely right. Domestic CV is a little bit muted because in the February month itself, we have not seen a big push from them. In the month of April also, it's a little muted, but we are quite confident that after election, they should move up because again, the expenditure will start. The government has very big plans of infrastructure, etc. So in the long run, we are hopeful that we should be able to achieve a growth of minimum 8% in this segment easily.
All right. Thank you so much, sir, for joining us today at NDTV Profit. We wish you the best for your Q4 results and hope you will join us soon post that as well and give us a flavor of FY25 in a little bit more detail. But thank you so much for joining us today, sir. Thank you.
Thank you. Thank you.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on big decisions, we
Hello and welcome to NDTV Profit. I am Vikash Srivastav, and today we have with us Mr. Arun Mishra, the CEO of Hindustan Zinc Limited. Mr. Mishra will be talking to us about the Q4 earnings and also about the company's future plans. Welcome to NDTV Profit, Mr. Mishra.
Thank you.
So I would like to begin with, like it's your earnings day today. What could be the reason for such a disappointing set of numbers in the fourth quarter? Is it only the metal prices or there is something else that has to be blamed for it?
No, it is only the metal prices, but I won't call it disappointing numbers. Actually, we have done in quarter 4 one of the highest levels of production. We have cut down the cost drastically. Last 3 years, this is the lowest cost production, highest production of metal, highest ever production of silver. Our total silver production 746 tons. Will make India proud that an Indian company is now third largest producer of silver in the world. We have moved up from the rank 5 to 3. Even in this depressed LME of last year of $2,400 per ton, we posted a net profit of about 7,759 crores, which is not a small number. That could have been far lower had we not done the cost-cutting measures that we have taken. So there are a lot of positives. Market plays out in its own way. We look at it, there's a very, very impressive performance. 2 years in continuation, more than 1 million ton metal. So that makes the company absolutely ready to jump for the next step for 1.1 million ton metal.
Okay, but at certain places you have also said that volumes are to be blamed also, like for lead and zinc, the volumes were down, So could that be the reason? And also you said that you want to maximize production of silver given the kind of pricing that silver has. So is that going to be the strategy going ahead for the company?
So for the performance of last year, actually the EBITDA was better because of the way we produced the balance between lead, zinc and silver. So we produced about 1,033 KT of metal. Perhaps it could have been another 20 KT of metal, but then would have lost out on silver. Instead of 746 tons, we could have gone down to 715 or 720 tons. We have managed and balanced the production so well that we could maximize on silver production and hence could protect the EBITDA and lesser affected by the prices. Going forward, this year again we are planning, since the zinc prices have gone up from $2,400 to about $2,850 per ton, and I believe that it will cross the $3,000 mark pretty soon, somewhere around July or August or September. In that case, we want to produce more than 1.1 million ton metal first, and in that combination do the best for silver, and on that account our number comes to between 750 to 775 tons of silver that we will be able to produce.
Okay, and going ahead, what is the production target that you have kept for yourself, and also the 2P and 3P reserves that we have overall?
No, overall reserves, we have added to the reserve by converting resource to reserve, and we have more than 25 years in the resource. We have more than 10 years on the reserve, more than 12 million ton metal in ore in the reserve side. As far as how much we will produce going forward, we have given a guidance that we will be producing metal between 1.1 million ton to 1.13 million ton, refined metal between 1.075 million ton to 1 million ton, and silver between 750 to 775 tons at a cost of between $1,050 to $1,100.
Okay, okay, and especially if we are talking about gold and silver, these are the major asset class that we have. So how you are looking at silver going ahead, and in terms of pricing also, if you can discuss a little.
So silver currently trading at around $28 to $29 per troy ounce, and I believe that silver prices will continue to rise and cross $31 or $32 per troy ounce very soon. This is simply because of the global producing units have cut down on their production, are not able to produce as much silver as they used to produce. So Hindustan Zinc has moved up from 5th rank to 3rd rank, while some other companies have dropped out and their productions have gone down. While the silver demand is continuously rising in the world because of high use of silver in the industrial purposes, say manufacturing of solar panels or manufacturing of mobile telephones, etc., silver consumption will go up, and we see that the prices will also continue to grow in the coming days.
Okay, and also in terms of pricing for lead and zinc, if you can talk about how do you see LME prices going ahead here for lead and zinc?
Lead is not much of a concern to us. It will move up and down slightly depending upon the battery market, the auto sector growth and all that. Zinc prices have started growing from 2,400, it has come to 2,850. China is turning around, and we believe that zinc prices will go to $3,000 per ton much sooner than what we anticipated. Instead of December, maybe around August, September, sometime it should cross that mark.
Okay. Okay, last time we met, so you spoke about a couple of your projects where, expansion is going on, and also you want to enter into fertilizer. You said that you are planning to set up a fertilizer plant or capacity. You spoke about sulfuric acid and its realization. So can you give our audiences some kind of, what is the current status on these projects?
So both the projects are on. They are on construction. So our roaster project, which is for growth of production of metal, is already on, and it will finish sometime next year. Fertilizer project will come sometime around in FY26, maybe to 2026, early part of 2026. The fertilizer project will be over. It will produce 0.5 million ton or 500,000 tons of fertilizer, which will be used by the farmers between Rajasthan, Western UP, Haryana, so most of these areas.
Okay, and all that sulfuric acid usage that you spoke about, realization?
The sulfuric acid realization will, current whatever it is, with the fertilizer, there will be a delta over that realization. But more importantly, the hazardous waste of sulfuric acid, which we are transporting to various fertilizer units elsewhere, we will now be making fertilizer ourselves. So the nature of handling of hazardous chemical will also be lessened.
Okay. And what will be the total Capex for FY25? How you are looking at FY25 in terms of production also, and also in terms of volumes, if you can give some sense to it?
I gave you the numbers. For volume, we are looking at a metal production of more than 1.1 million ton, and we would be spending a Capex of close to 300 million, somewhere around 2,400, 2,500 crores. With that money, we will complete the projects of fertilizer as well as the roaster. We will be initiating quite a large number of debottlenecking projects, which are small projects, maybe spending between 5 crores to 80, 90 crores each project. But they have a high payback of less than 12 months. And we want to do that to increase the production capacity from 1.1 million ton to 1.2 million ton.
Okay, okay. And what is our current debt position, and what is the cash and cash equivalent that we have?
So total between, I think the debt would be around 8,000 crores, whereas our cash and cash equivalent is about 10,000 crores. So net we are about 700, 800 crores are cash positive. So we are largely debt free that way. The timing mismatch is the issue between the need for cash and our long-term investments that we have made. We will be generating, of course, 8,000, 9,000 crores free cash in the coming year itself. So there is no concern about debt at all in this company.
Okay, one last question on overall outlook. How do you see the outlook for zinc as such, and where the demand centers would be?
No, the zinc continues to grow because the world will see the growth in auto sector, galvanized cars, consumption of or buying of galvanizing cars is the trend all over the world, and hence the galvanization will see growth of zinc consumption. A lot of power connection because of the thrust for green energy, a lot of new places for power generation through solar, hydro or wind, and they need to be connected to the grid. So a lot of new transmission lines with transmission towers which require galvanization. So they will also have a lot of zinc consumption. At the same time, a lot of infrastructure growth in developing countries will consume a lot of zinc. So zinc will continue to grow. Maybe in the developing countries like India, it will grow at a 5%, 6% rate, whereas in the developed countries, it will continue to grow between 1.5 to 2.5%. So that trend continues. So zinc future is absolutely a beautiful, certain future, good money earning potential, and we will continue to invest in production of zinc.
Okay. Thank you very much, sir, for taking out time and talking to NDTV Profit. It was a pleasure talking to you.
Thank you. It was a pleasure talking to you too.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and
Hello and welcome. You're tuned into Ask Profit on NDTV Profit. I'm Smriti Chaudhary and the next 30 minutes are all about your stock related queries. So write to us on any of our social media channels or on the WhatsApp number that will be on your screen in just a minute. You can also write to us on the YouTube live chat and we'll take your queries from there. So even if it's a short-term query or a long-term strategic investment question, do write to us and we'll get them answered by our guests on the show today. But before we do that, let's take a quick check of where the markets are currently at. You look at the benchmark indices doing fairly well today. Nifty 50 up about 0.6%, so not doing too bad there. Let's look at the contributors for the Nifty 50 and see what's pulling the index higher. You see the likes of ICICI Bank, L&T, RIL, all in the green. However, on the other end, there's HDFC Bank, obviously post its results. We're seeing some downtick there and about 22, 23 points down there. You have NTPC, ITC, Maruti, all in the red. But you look at some specific names like NTPC, that's down about 1.8%. Now, this is the one in the Nifty 50 index that's losing the most, then there's HDFC Bank, JSW Steel, ITC, Maruti Suzuki. BPCL is the top gainer on the Nifty 50 along with Wipro, that's up about 2.5%. You have Shriram Finance as well, that's also up about 2.5%. So if you look at the breadth of the market on the index front, 44 advances, 6 declines. But let's look at the broader end of the spectrum as well and see how the mid-cap and the small cap are doing better than the benchmark for sure. The Nifty mid-cap is up about 0.8%, while the Nifty small cap is up over 1% in trade. So seems like the broader end of the spectrum seems more positive than the benchmark itself. But let's also look at the sectors. You have all the sectors in green today, so nothing to complain there. You have the Nifty consumer durables that's up about 1.5%. You also have Pharma, Nifty PSU Bank, Realty Index, all up over 1% in trade. Let's also look at some of the stock-specific action. You're seeing GSPL that's down 20%, so has hit lower circuit, and we'll come back to that on why that is the case. You have HDFC MC down about 0.8%. IRIDA doing well in trade today, up about 7.5% after the business update. You have Persistent System post results down about 8% as well. Ramkrishna Forgings down 2%. Now, Ramkrishna Forgings has been gaining in the last couple of sessions. We saw gains of about 5% in the last 4 or 5 sessions, and this came after they received an order from a US EV company to supply to them. But it seems like presumably it was Tesla, but now that order is on hold, and we're seeing that impact in the stock today. We're seeing Voltas on the back of a brokerage note. You have Zomato up about 1.5% because the increase in the price. So they've taken their fees, platform fees, from 4 rupees to 5 rupees. So that's the impact. But let's circle back to GSPL, which is the focus for today. The stock is down 20%, stuck on lower circuit, and we have my colleague Mihika joining in to tell us what's happening there. Mihika, take it away.
Yes. So the Petroleum and Natural Gas Regulatory Board has cut the tariff of one of the key Gujarat pipeline networks of Gujarat State Petronet by 47%. Now the authorized tariff is at rupees 18.1 MMBTU versus 34 rupees previously, and this is also much lower than the 51 rupee tariff that GSPL had claimed. Now in terms of impact, while it could lead to lower end user prices for both household consumers as well as industrial consumers, it could put a pressure on Gujarat State Petronet's profits. Now, the reason why the difference between what was asked and what was actually authorized is because the Petroleum Natural Gas Board's assumptions when it comes to volumes, Capex and OPEX is very different. When you talk about the Capex, Gujarat State Petronet claimed a Capex of 3,400 crores, while the board only allowed 1,800 crores. In terms of volumes, in terms of future volumes, while the company assumed 26 million metric standard cubic meter per day volumes in the future, the board approved much higher, 22% higher at 31.7 MMS DMD. And then after this tariff hike was announced, all the brokerages did turn negative on the stock. Now we had Nomura, which downgraded the stock to a reduce from a buy previously at a target price of 320, which implies a 15% downside from the previous close. They've cut their FY25 and 26 EBITDA and EPS estimates. EBITDA estimates were cut by 37% and 42% respectively for FY25 and 26. And they did say, however, that the tariff would be renewed next fiscal if the actual volume show considerable variations from the board's assumptions. And then lastly, we had Kotak, which downgraded the stock rating to reduce to at a fair value of 360 rupees, which implies a 22% downside. They believe that a 20 to 30% tariff cut was due, but the actual tariff cut was much above expectations. And they've also cut their FY25 and 26 earnings estimates by 28 and 37% respectively, and they expect the return on capital employed to decline sharply to 11 to 12%.
Thank you so much, Mihika, for that comprehensive explainer on the stock. Now, on that note, let me introduce you to the guests for today. We have Sameer Dalal of Natwarlal and Sons Stockbrokers and Rajesh Palvia of Axis Securities. Welcome to both of you. Thanks for joining us on the show today. Sameer, I'll come to you first on GSPL. We're seeing brokerages coming down hard on the stock. We're seeing the stock stuck on lower circuit. Now the question here is the difference in the expectation, not just the street expectations, but the company versus the board as well. And we're seeing that impact. So from here on, people who are holding onto this stock, what should they do?
So I don't have active coverage, but what I can definitely say is that when there's such a big variation, I did read about this note, so I can talk a little bit about it, is that when you have such a big variation in the expectation and the price, the profitability is going to take a very, very large impact and a hit. So now what you're going to have is the return on equity and return on capitals for this company starting to come down, given the kind of realizations that they have. And given that this current price is not going to be very remunerative for them, you may even see some amount of volume cut, but I mean, it needs to be seen how it pans out. But net, rightfully so, the stock has reacted 20% down. Somebody who's holding on to it obviously can't sell it today. Whenever it opens up from its selling circuit, one needs to review what price it opens at, because at the end of the day, there is still some value to the business, right? What they have, what they hold. So you have to see where it opens up. But prima facie, this is a big negative. And if you are getting an exit at this current price for the time being, I think one can take it, because the upside is going to be capped in the next 6 months to 1 year, given the fact that everyone knows that there's not going to be much profit to be made. So you might find better opportunities. But I mean, if the circuit opens closer to 250, 240, then one needs to review the situation in that point.
Right, fair point. Let's dive into the questions now, and if you haven't written to us, do write to us on the WhatsApp number or any of our social media channels. Let's start off with the first one. This one is from Gatupalli Sanjay from Hyderabad. I hope I'm pronouncing the name correctly. This is on Coal India. And even though this is a long-term query, I'm going to come to you, Rajesh, first on this one. Now, based on the charts, I think the price that they had written to us was slightly lower on Friday. But from a longer-term perspective, do you have any sort of targets based on the charts for Coal India?
Yeah, so overall structure for Coal India is on the bullish side, and if we analyze on the longer term time frame, yes, we do have bullish view on the stock. As if we analyze on the monthly chart, stock is continuously moving in upsloping channel. That clearly shows that there is a sustained buying action is taking place. Though there is some consolidation is taking place since last couple of weeks, but overall structure on the short to medium term is also on the bullish side. Till stock is holding above 410, 405 level, I think one should remain on the long side of trade. Once stock manages to cross above 460 zone, then possible really on the higher side, we can see towards 500, even 540 kind of zone on a longer term perspective. So I think he can hold the position. Even if he wants to add further more position, can add above 460 once that breakouts happen.
All right. Fair point. Next question is from Vaishnavi from Chennai. Now, Sameer, I don't know if you'll have coverage on this counter. It's Gabriel, and the stock is currently priced at 348 rupees. However, they've bought the stock at 196. From a longer term perspective, do you have a view on this?
No, actually, we don't have Gabriel under coverage. I'm really sorry.
All right, let me take it to you, Rajesh. On Gabriel, they've bought the stock at 196, currently trading at 348. What's the view?
So since last couple of months, we have seen some profit taking is happening in this stock. But if we analyze on the longer term perspective, yes, stock is holding the ground on the bullish side. Till stock is managing to hold above 310 level, that's the important level on the longer term chart also. If it holds above 310, then yes, the long-term trend is likely to remain on the bullish side. And on the high side, once stock manages to cross about 365, 370 zone, then it will resume its uptrend, and then possible target on the high side we could see towards 420 to 440 also. So overall structure for Gabriel is on the bullish side. He can hold the position.
All right, so hold is the advice from Rajesh on Gabriel. Next up, this one's from Satya, and there are a couple of pharma names now, Samir, here, and he wants to know if it's a good time to enter into any of these. The three names are Zydus Life, Divi's, and Gland. What's your pick among these three pharma names to enter?
So if I had to take a pick, I would have picked Divi's in this list. Though Divi's is not my top pick in the pharma space. And the reason I would pick Divi's in this lot is because of the API exports that they're doing. And that continues to see a lot of traction. They did have some problems in the middle with regulatory from the US FDA, where certain criteria were not met, because of which they did have a bit of an impact on their sales and the business. But Divi's is a very strong company which will be able to address a lot of those issues. And, once they are able to start growing their export business again from the API side, I think they will do well. So if you ask me in the pharma space, I mean, since he's given the person has given three specific names, I'm saying Divi's. But if they want to venture beyond just these three names, the top pick for me in the entire pharma space still continues to remain Sun Pharma. It's again a large cap company where they're working on the differentiation of product like branded generics, which can get traction, which is beginning to see traction, and which is why we've seen the stock price move up. If that traction continues, which we believe will, given the kind of product launches that they have, I think Sun Pharma could be something that outperforms, but Divi's from the three that he mentioned.
Have a price target on Sun Pharma?
So I think if you look at maybe a 2-year horizon, I think you could get a 20% CAGR return over that period of 2 years.
All right. Next counter we're talking about is Tata Elxsi. This one's from, okay, I'll try and say the name, and I hope I say it correctly. It's Naushan Kanjabdullah from Kerala. I hope I've said it correctly. And the counter is Tata Elxsi. They've bought the stock at 7,799, slightly above the current market price. And Rajesh, the stock hasn't done too well in the last couple of months. But do you see upside from here on?
Yeah, so stock is still underperforming. If we analyze the near-term, short-term structure, stock is trading below to their important support area, moving averages, and now stock is trading near to its critical and important support area, which is a multiple support area for the stock around 7,400, 7,370 kind of zone. If at all the stock breaks below 7,370, then possible down move may extend, and we can see further lower level towards even 7,100 also for Tata Elxsi. On the higher side, the major supply zone for the stock is placed at around 7,700. So until the stock not crosses above 7,700 level, it may remain under pressure only for whatever pullbacks we are seeing in the near term will attract supply pressure. Above 7,700, yes, there could be some up move we can expect towards 8,000, 8,200 kind of zone. But at this moment, I think 7,400 needs to keep as a stop loss. If it breaks below those levels, then possible downside can extend further.
All right, fair point. Stay with us, Samir and Rajesh. It's time for a quick break, but we'll come back and take more questions. Stay tuned.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone.
Welcome back. You're watching Ask Profit on NDTV Profit. Let's start off with the questions again. The first one is from Praveen Kumar from Kerala, and the counter we're talking about is CDSL. They bought the shares at 645 a piece. I'm going to come to you, Samir, on this. There's a substantial profit, notional profit rather, that they're sitting on. It's currently trading at around 1,969 rupees. It has doubled in the last 1 year itself. But what would your suggestion be in a case like this where there is a considerable profit? Should you take some profits off the table or stay invested in a stock like CDSL where the future seems positive?
So definitely the future is very positive, and it's a great company, strong balance sheet, no requirement of additional capital per se. The growth has been exceptional over the last couple of years, given the fact that new demat accounts have opened, which is at the end of the day what generates revenue for a CDSL. But what has also happened simultaneously, what you rightfully said, is the stock has run up quite a bit. And because the stock has run up so much, I think the valuations have probably moved above where our comfort zone remains. So as much as I say that I like this stock from a long-term point of view, maybe for the next 5 years, because I still think there's a great opportunity for demat accounts to be open. I mean, once you have someone like Geo Financial getting into the broking business, a lot of people are going to, I don't know whether they use NSDL or CDSL, but I mean, let's assume, what I'm trying to say is the reach of the broking industry is going to keep increasing, which means more demat accounts opening. But for the near term, I think a lot of the valuation from the upside has been captured. So maybe one can look to book some profit in the near term. But yes, if the stock comes closer to the 1,500 levels, I would definitely look to buy the stock back. Question is only, I don't know whether it will come down to those levels. But at this point, I mean, I'm not comfortable holding it given the valuations. I think, again, there are companies which cater to the same equity market kind of scenario, which can probably generate better returns.
All right, fair point. The next counter we're talking about is HDFC Bank. It's a little weak today in trade, but this is from a shorter term perspective, from a 3-month perspective, Rajesh. This one's from Sujay from Kolkata. Now, we've seen Q4 results, deposit and NIMS growth seems positive, but on the technicals, how does it look from a 3-month perspective?
So, if it's for short term, yes, stock is showing, buying interest on the downside. 1,500, 1,480 is the important support area for near term to short term perspective. If we analyze on the weekly time frame, stock is moving in upsloping channel, though there is a major supply zone is placed at around 1,540, 1,550 zone. That is the major hurdle for the stock on the higher side. But the stock manages to cross above 1,550 zone, then possible short covering may trigger in this counter, and then upside target we could see towards 1,600 to 1,620 also. So as he has invested for short-term perspective, I think he can remain invested. Keep your stop loss now at around 1,480 to hold your long position.
All right. Next counter we're talking about is Amber, and this one's from Rahul from Delhi. They bought the stock at 2,000 levels. The stock is currently trading above 3,600 levels. Samir, somebody here as well, a decent amount of profit that you're sitting on. You see the stock almost doubled in the last 1 year itself. What kind of upside do you see from a longer term perspective?
So from a long-term perspective, again, very, very bullish. It's a similar story to CDSL. I still believe, not that the business model is the same. What I'm saying is the upside over a long term is the same. Given the fact that the penetration of electronic goods within the country is only going to keep increasing, replacement demand growing, Amber Enterprises being one of the early movers, them, Dixit Technologies, both are going to be beneficiaries of the growth in consumption, especially the discretionary consumption that happens over the next 5 to 7 years. Again, the same problem is where I face is, again, the valuations have probably moved way beyond, and I mean way beyond our comfort zone. So to justify this valuation, I need the profits to be at least 1.8 to 1.9 times of where it is. There I would find some. So maybe, 1 year, 1.5 years down the line, if the growth numbers pan out the way I think the street is expecting, and we get no hiccups along the way, and the stock is at a similar price, it may be something that I look at. But at this point of time, I'm not looking to invest in it. If the person has some decent profit, once again, take a little bit of profit. You can hold on to some amount of it and take some profit off the table. Look for other opportunities, and maybe 1 year down the line, if we see the stock has either corrected by 20-25% or the earnings have grown by 20-25 to 30%, then one can maybe look at even re-entering even at the same price, but 1 year later, because that money can be used to generate another 15-16% return over that 1 year period.
All right, fair point. Next question is from Rashida. This one is on Anup Engineering. The question is, should this stock be bought after its ex-bonus date of 23rd April? Let's first take a look at how the charts look in this particular stock. So Rajesh, Anup Engineering, how does it look? Right time to buy into the stock?
So very strong structure across all time frame. The way stock is holding the ground at higher level, whatever minor dips which we are getting in this stock is attracted by the buyer's interest. So I think those who are already holding the position can hold, and we could see another round of rally in this stock, and possible upside target we could see towards 3,700, even 3,800. The way stock is moving up across all time frame, we believe that whatever minor dip if you are getting in this stock should be used as a buying opportunity on the downside. 3,300, 3,350 are the important level for near-term to short-term perspective. If you get opportunity to buy this stock around those levels, should be used as an opportunity. On the higher side, 3,700, 3,800 could be the possible target going forward in this stock.
All right. Next counter is a Persistent System. Now this is losing in trade today. It's down over 8%. This one's from Ramanandan from Hyderabad. Samir, we saw the results, decent revenues, decent profits, some bit of pressure in margins, but lower TCVs. Does this give you a picture of the mid-cap IT space? And specifically on this counter, would you say that this is a buying opportunity at this juncture?
No, I don't think Persistent is a buying opportunity at this moment. So, for some time now, we've been saying that the IT stocks have probably got another year and a half of period where growth is going to be low. Now, to say that we want to value these companies at 20 plus 25, 30 times earnings is something that's unjustifiable when you're talking of revenue growth of anywhere between 1 to 7, 8% for most of the companies. Persistent has, of course, done better. It's much better than the rest of the industry. Hence, the stock has actually seen such a strong run up over the last year. But again, what you rightfully said, in the question was that the total contract value that they have won for the current quarter has come down, which indicates that there is a bit of a slowdown, and that slowdown is going to persist for another 6 months to a year till things start seeing an uptake and till there is some more clarity on what is happening in the geopolitical situation globally. So given those facts, I think giving premium valuations to the IT sector is not justifiable. Even though these are very good companies which are spitting out great amounts of cash, you see them doing buybacks, giving it back in the form of dividends. I still believe that valuations is something that you have to look at, and not only valuation, but also growth. Why should you get that valuation when your growth is as tepid as it is? People talk about because of AI that their cost of operations will come down because a lot of the automation will take care of some of the requirements of staffing, which will lead to operational efficiencies. But we really need to see that playing out. And I don't think we're going to see any of that really playing out for the next 6 months to a year. So I think over the next 6 months to a year, whenever we see things happening, maybe IT is something that we will look at to buy. Persistent valuations have moved up again quite a bit. It's not a buy according to me in this moment.
All right, fair point. Now, unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Sameer and Rajesh, for joining and for answering so many questions for us. And viewers, if you were not able to take your questions today, we'll try and take them tomorrow. But I hope that the questions that we did take, the counters that we did speak about, will be of help to you. But that's all that we have on this edition. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. We are the, in many ways, we actually are the generation which is going to build the country. Our parents spent their whole life building roti, kapda, makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Benchmarks continue to extend gains. The Sensex trades above 73,500 while the Nifty crosses 22,300. A sea of green across sectors. PSU Bank, Realty and Consumer Durables emerge as the top gainers for the day. And GSPL hits lower circuit as the Petroleum and Gas Regulatory Board cuts key Gujarat pipeline tariffs by 47%. That is 64% below the company's expectations. More earnings on the radar. You have Reliance Industries and Mahindra Logistics, both expected to come out with their March quarter numbers today. And Hong Kong's food regulatory body recalls 3 MDH and 1 Everest spice mix after detecting cancer-causing ingredients. Good morning and welcome. I'm Harsh Saita. You're watching Hot Money on NDTV Profit. Quick check on where markets are at. You're seeing the Nifty trade very close to the day's high, above the 22,300 mark as we speak. Of course, the day's high came in around the 22,340 mark. So very close to the day's high after inching lower, at least in the first hour or so of trade. Let me quickly take it to some constituents which are doing quite well in trade. You're looking at the likes of an ICICI Bank knocking off the loss which is seen on HDFC Bank, at least on the Nifty contributories today. So you're seeing 20 points contributed by ICICI Bank, up roughly 1.4% in trade. The other one gaining well is Axis Bank as well as Larsen & Toubro. Those are the other two which are gaining fairly well in trade. Within the Nifty 50 pack, you have also some traction which is seen in BPCL, Eicher Motors, both of which are up 3% plus in trade. And you also have the likes of a Tata Consumer and SBI Life. But the breadth of the market is extremely strong. If we can have the advance decline, you have 45 advances on the Nifty 50 itself. And the advance decline in front of you clearly showing that the breadth of the market is extremely strong, because the broader markets too are doing fairly well, in fact outperforming the Nifty 50 in trade today. So you're seeing good traction in broader markets. The Nifty Midcap up around 0.9% in trade, and the Nifty Small Cap too up over 1%, 1.2% in fact in trade today. So good traction across the larger caps as well as the mid and the small caps. Within sectors, first let's focus in on the Nifty Bank, up around 0.2%, but outside of that, good traction seen in the Nifty Pharma and Nifty PSU Bank, both of which are the lead gainers along with the Nifty Realty Index. So Nifty PSU Bank up around 1.8, Realty up around 1.4 and Pharma up around 1.3. So those are the top gainers for you. No losers, you're only seeing a carpet of green. Of course, Nifty Consumer Durables is up 2+%. So that's the other one which is in focus. But quickly moving on, we'll shift to the 5 stocks that we focus in on every day on Hot Money. And let me first try and highlight some of those stocks. You have GSPL, no surprise there, going to be a knock definitely over the next 1 year with regard to tariffs. Spark, plenty of news happening. We'll try and break that down a little bit more, because one of their drugs has been taken off and that may impact, and it's impacting the stock price. HDFC Bank on the back of numbers. IT stocks, Wipro and Persistent, a tale of two, both stocks have moved in different directions in trade today. You have Hindustan Zinc and Voltas among the other buzzers. So these are some of the stocks that we'll focus in on, and I have with me today Ashish Maheshwari, who's the director at Arihant Capital Markets, and we're going to try and break some of these stocks down. Now, welcome to the show, Ashish.
Thank you very much.
Right. First up, Spark. It's hit lower circuit. Company has halted its Parkinson's drug trial. Varsha joins us with the details. Varsha, what's the kind of impact that this will have on the numbers going forward?
Well, thanks Harsh on that. So yes, Sun Pharma Advanced Research have locked in another 5% lower circuit today. Now with today's move, the stock is down 19% in last 5 trading session. Now this is on the back of company halting their Parkinson's drug trial. Company has seeded phase 2 study on vodobatinib, which is again a drug for Parkinson's. Now company had completed review of 442 patients who finished part 1 of the study by March 2024. And the primary goal of the study was to show an improvement in the systems, but the study showed no evidence of treatment benefits in patients who received this drug. As a result, the company decided to close the study. Now, if you see the estimated peak sales of this drug for Parkinson's disease is around $5 billion US. Now, company did a con call wherein they said that it will look to out-license this drug, and there have been consistent interest from larger pharmaceutical companies as of today. So let's see what happens, what pans out for this company. So this is all we got on Spark as of now.
Okay, thank you for that, Varsha. Ashish, let me switch over to you. Spark, the stock itself has nearly doubled before cooling off, 20% down over the last few sessions, as Varsha highlighted. What's the sense at this point, especially with regard to fundamentals? How would you look at this development which has come through?
So these research companies which are very focused towards pharma research or research of new drugs or new molecules, if you are investing in such companies, a high risk, high return game. So we have seen this stock from 180 move to up to almost 470, and as soon as the negative news came, we are witnessing so many down circuit in these stocks. And again, this will be a big setback, because if you see fundamentally, these companies don't make any revenue until there was some successful launch of their medicines or drugs. So in my view, this trend will continue. Stock will continue to drift further lower. If you see, even today, there are almost 80 lakh plus sellers are there on lower circuit. So it's a void in my view, because I'm not expecting that this jolt can be, company can try to fill in a very short period of time, because whatever the investment you have done for that Parkinson's disease drug will just go waste. So that much will hit companies' market capitalization also. In my view, this stock will be worthwhile to look at 200 to 225 now.
Okay, so price as well as recommendation, at least an avoid for the moment from Ashish, something around 200 to 220 is where he would start to consider this one. But I'll try to switch focus. Next stock, Gujarat State Petro. Stock has hit lower circuit today, 20% down. Regulatory board has cut the pipeline transmission tariff by 47%. Mihika, what were the expectations? What does this mean now? What are brokerages really suggesting?
Yes, so the Petroleum and Natural Gas Regulatory Board has cut the tariff of one of the key Gujarat pipeline networks of Gujarat State Petronet by 47%. Now the authorized tariff is at rupees 18.1 MMBTU versus 34 rupees previously, and this is also much lower than the 51 rupee tariff that GSPL had claimed. Now in terms of impact, while it could lead to lower end user prices for both household consumers as well as industrial consumers, it could put a pressure on Gujarat State Petronet's profits. Now, the reason why the difference between what was asked and what was actually authorized is because the Petroleum Natural Gas Board's assumptions when it comes to volumes, Capex and OPEX is very different. When you talk about the Capex, Gujarat State Petronet claimed a Capex of 3,400 crores, while the board only allowed 1,800 crores. In terms of volumes, in terms of future volumes, while the company assumed 26 million metric standard cubic meter per day volumes in the future, the board approved much higher, 22% higher at 31.7 MMS DMD. And then after this tariff hike was announced, all the brokerages did turn negative on the stock. Now we had Nomura, which downgraded the stock to a reduce from a buy previously at a target price of 320, which implies a 15% downside from the previous close. They've cut their FY25 and 26 2026 EBITDA and EPS estimates. EBITDA estimates were cut by 37 and 42% respectively for FY25 and 26. And they did say, however, that the tariff would be renewed next fiscal if the actual volume show considerable variations from the board's assumptions. And then lastly, we had Kotak, which downgraded the stock rating to reduce to at a fair value of 360 rupees, which implies a 22% downside. They believe that a 20 to 30% tariff cut was due, but the actual tariff cut was much above expectations. And they've also cut their FY25 and 26 earnings estimates by 28 and 37% respectively. And they expect the return on capital employed to decline sharply to 11 to 12%.
Okay, gas stocks in focus on the back of that. Thanks for that, Mihika. And you know, some of the target prices given clearly breached in trade today. Probably only the city target price of 270 odd still remains to be breached. But clearly, you know, the stock reeling under pressure. Ashish, gas stocks, your sense on this one, on you know, how do you view this new development by the regulator, and what's the kind of impact it's expected to have going forward according to you on GSPL?
Yes, if you see before this announcement, the stock was sitting near the 52-week high, which is almost 400 rupees, and the stock was at 380. Because the way all these gas stocks were doing, even GSPL was doing good. As far as this now negative surprise is concerned, all data is shared by your analysts, so I'll not go much into that. I think the major surprise has come where company was expecting from 34 rupees, they will go up to 50, 54, and it came down to 18 odd rupees. So this was a very negative surprise, and this will decrease their ROC drastically, which is worrying the investors. From a consistently, a company was earning around 24% ROC, which is quite healthy. Now they will come to 11 to 12%. So whatever the higher valuation this company was getting, this is not the case, because 11 to 12% ROC companies will find plenty. Why somebody will invest in GSPL? But only one ray of hope will be there, that they may appeal against this order and to appellate authority, and on basis of higher capex, what they have done, they may get some relief, etc. But still, as the negative news has just came in, and a lot of institutional investors will try to exit, because after government of India, or like major shareholders are FIs and DAIs, which hold a lot of equity of this company. So some more selling is expected, but surely at 225, 230, it will again come in the buying radar.
Okay, 225, 230 for the buying radar. I stand corrected. Citi's target price is 295. Very close to that. Of course, the lower circuit not allowing it to breach that particular target price. Have to wait and watch tomorrow as to whether that gets breached. But 220 to 230 is what Ashish is suggesting as the number. Quickly on to the next one. HDFC Bank, of course, the numbers. And you know, the numbers were fairly mixed. There were plenty of one-offs in the numbers, 4 one-offs in particular, which need to get highlighted as well. But with all of that, the deposit growth was extremely strong. We had MD CEO Sashidhar Jagdishan talking about the deposit growth and the possible transitory effects of certain one-offs which have come through in the deposit growth numbers. Listen into that, because sustainability of this deposit growth is going to hold the key.
While the Q4 mobilization is extremely healthy, I must upfront tell you that there are some transitory involuntary flows that have also come in, which is obviously more than what we had anticipated. But even adjusting for that, the retail ones are rather healthy, which is there in the deck. So will I be able to maintain this kind of a momentum, etc.? As you know, you take a long-term average of over 6 years or so. There is a certain proportion of total deposits which come in Q1, which is probably the lowest as a proportion. Q2 and Q3 are more or less similar in terms of proportion, and the largest part of the proportion in a year comes in the fourth quarter, and which is what we have. And this is not anything different from what we see in the banking system. This is a very similar pattern that is there, plus or minus some kind of a change.
Right. Ashish, couple of quick questions on HDFC. One is with regard to how you view the numbers. Second is with regard to how you view valuations at this point.
Yeah, I think this is a more knee-jerk reaction because market was expecting higher profitability and slightly numbers came below expectation. But deposit growth was really above expectation, though loan growth is slightly slowed down for HDFC Bank because this is the bank which is quite conservative in nature. So you can't expect a very high credit growth will keep on coming from them. So as far as provisions, etc. are concerned, they're slight moved up. But I'm not that bearish as far as HDFC Bank stock is concerned. In my view, 1500 will be a good level, in fact, to start accumulate this stock because this is going to be one of the best years for banking sector because the kind of growth which can come in this particular year post-election. So HDFC Bank is a buy in my view at 1500.
Okay, Ashish, quick question. What is, in your view, the key metric as to that will lead the re-rating of HDFC Bank? Because everyone's talking about it. All analysts seem to be bullish, especially with regard to their target prices on HDFC Bank, but the stock doesn't seem to be moving.
Yes, and there's a reason from 1700 the stock has come down to 1500 also. So this is not a surprise. But in my view, I like those banks which go slow and steady and consistently perform. This is the reason why I selected this bank to buy at 1500 odd rupees because I don't see too much downside risk. Second thing, this credit growth has to move up. Whether HDFC Bank do or take aggressive call or defensive call, because if your economy is growing by 6-7 odd%, your banking sector will try to match that growth. So, in my view, like you can't go wrong at 1500 in HDFC Bank. No.
Okay, can't go wrong at 1500 with HDFC Bank. Seems to be the view coming in from all analysts, but the stock doesn't seem to be doing too well in trade today, still sulking. Thank you for that, Ashish. Stay on, of course. We'll slip into a very short break. Ashish will be with us as well on the other side as we break down some of the more stocks, especially the IT buzzers, both Wipro as well as Persistent. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult.
Welcome back. You're watching Hot Money on NDTV Profit. We'll switch focus to the IT counters. We had two of them in particular come out with numbers. The Nifty IT not doing particularly well in trade. In relative terms, up around 0.25% or thereabouts as we speak. So that's where the Nifty IT is placed, but persistent in focus, as well as Wipro in focus. And we have Rucha here, who's going to try to break down what's happening on both of those. Of course, numbers is the key feature there. Rucha, take it away.
Talking about numbers for Wipro, revenue was down by 0.4%. However, EBIT and PAT was a beat. The key highlights includes that the total bookings was down 5.5% on a year-on-year basis. Now, in terms of manpower, the headcount was down. However, the attrition was stable. The key point to note here is that the management mentioned that there is an uptick in the consulting piece of its Capco business, while the Capco business reported a 6.6% growth on a sequential basis. Now, what the street is awaiting for is the new strategy by the CEO and where can he take the stock and lead for the company going forward. And now talking about Persistent, now while the revenue was up 3.7%, the EBIT margin was down 8 bips at 14.5% versus consensus estimates of around 20%. So that is a major lack in terms of margins. The net profit was up 10% while the attrition rate stood at 11.5%. The management mentioned that they expect the EBIT margin to improve by 200 to 300 basis points over the next 3 years. However, they also mentioned that margin improvement is easier than the revenue growth, and this comes on the back of the uncertain macro environment and the pressure on the discretionary spends.
Okay, so not too happy about this entire play that's happening, especially the street, Rucha, with regard to where Persistent is concerned. Could you, Rucha, try and help us, if you're still with us, try and help us break down what the expectations were versus, what has the management really guided for?
So the lag was around margins. The street is upset with respect to the margins, and that is why I think the stock is down around 7% today. The management mentioned that the next year, the margin for the next year will be flat, which is at 14.5% levels. However, the street was expecting it to be at around 18 to 20%, and this margin is the lowest in last 8 quarters, which they've mentioned that they will maintain going ahead. So I think that is what upset the street today.
Absolutely. So that's where the gap seems to be at. 14.5 versus 18 to 19 odd % is quite a large gap, and that's where, thanks so much for that context, Rucha. That's where you're seeing the 8% knock on the stock. Ashish, let me come to you with regard to Wipro first on the numbers as well as on growth prospects, which continue to be far and few, right?
Yes, I think Wipro is just riding the wave because there is no such expectation that Wipro will come out with some extraordinary results, etc. And some minor improvement in PAT was positive, indication that company is doing good. Attrition is also under control. Margins are also maintained. So from when you are not having too much expectations, such numbers are really good. And that's why Wipro is outperforming compared to your TCS, Infosys, and HCL Tech, etc. And this performance will continue, in my view, gradually for a few more quarters, because you are not expecting too much from Wipro, and they will keep on doing well.
Right, low expectations seems to be the theme here at the moment. But Ashish, what about Persistent? The margin knock expected for FY25, what were you seeing in terms of your expectations, and how in your view is this going to play out on the street?
Yes, this was something surprising in case of Persistent. This is a company which has traditionally enjoyed very high price earning multiple, because consistently they have delivered to the street with their quite robust earnings, etc. But this time, like your analyst also pointed out, there's some slowdown in their margins. It means their cost is going up at the same time. Revenues are not, whatever the contracts they are getting are at slight lower margin. So if an IT company not kind of Persistent system not doing a higher margin, then doesn't make sense to give those kind of price earning multiple of 40 to 45 to 50 price earning multiple. And this is the reason we are seeing some correction here. And in my view, this correction will continue for some more time. So I like to look at this stock at now 3,200 levels because company is good and like there'll be more clarity maybe in the next quarter on the trend of their EBITDA margins. But 3,200 will be a good level to look at the stock.
Okay, so another 10% downside here seen by Ashish. Most of the stocks we've taken outside of HDFC Bank seems to be on Ashish's radar more on the negative side than on the positive. So that just speaks volumes, but we're completely out of time on this edition of Hot Money. Ashish, thank you so much for all of the perspective you've given us. It's a pleasure having you here. But for now, from myself, everyone who puts the show together, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Thanks for tuning into the Portfolio Manager. I'm your host, Neeraj Shah. Our guest today is Rajesh Cheru, MD and CEO of LGT Wealth India. They run an overall AUM of close to 800 odd crores. We talked about a subset within that based on the kind of allocation that they've done, and very interestingly they have a fairly decent size exposure to mid caps and large caps, suggests that they're looking at bottom up stories and not necessarily phased or too phased by what the commentary around mid caps and large caps or mid caps and small caps is. Our guest is Rajesh Cheru, as I said, MD and CEO of the fund. Rajesh, good having you. Thanks for taking the time out. At the outset, can you tell us a bit about your approach? I mean, are you bottom-up value investors? Do you guys believe in growth? What's the investment style?
Yeah, just if I need to start with my investment philosophy and investment approach, Neeraj, we are predominantly growth-oriented investors. And in terms of the construct of the portfolios, we do it more of a bottom-up basis. We do. In terms of philosophy, the philosophy and objective of this particular strategy is focused towards investors who are having actually medium to longer term horizon. And with our objective is to generate returns superior to nominal GDP growth over 3 years plus period of time. How do we do that? I think primarily focusing on structurally compounding businesses and keeping volatility in stock level as well as portfolio level under check. So this is our actually focus in terms of designing and constructing the portfolios.
Interesting that you're not shying away from having more than a 55% exposure to the SMID space, Rajesh, while you talk about wanting to control volatility. So how is this exposure coming through? I'm not saying it can't be done, but it's interesting at the current time. So tell us a bit about this exposure to large, mid versus small.
Yeah. So this is largely it is in terms of stock selection. That's where we, while doing the stock selection itself, we do the whatever actually the in terms of the quality of the our investment approach has about 4 factor. That is a 4 factor. The 4 pillar. It is built on 4 pillar. There is a QSGBA approach. We call it as QSGBA framework. Quality, secular growth, and this thing. Secular growth, valuations, and active management. So these are the 4 pillars we use in terms of while constructing portfolios. Quality is, I think, in terms of quality of the business, quality of the balance sheet, and quality of the management. So this, when we are actually focusing on quality of the business and quality of the balance sheet, that's where I think just we could able to identify certain actually the names which are actually transforming from, I think, from benefiting from the transformation from informal to formal, and whatever actually themes going on in the marketplace, whether it is a consumption or whether it is formalization or indigenization. So that's where I think we tend to actually identify certain mid and small cap names. So that's where I think it is coming in from. Since we are actually doing in-depth analysis of corporate balance sheets for about 20 years plus data, we actually scrutinize it. This we do it every year, year-over-year basis we do it. And we categorize companies into three types. One is crown jewels, war horses, and treasure hunters. So this particular strategy is largely built around war horses and predominantly around war horses. War horses are companies which are offering superior growth with objective to actually gain the market share from the market leaders. So that is the kind of actually businesses. They bring in P multiple rating plus earnings growth. So that's where you see more and mid and small cap orientation in this. But there is not a fixated one that actually changes with time to time. So off late actually just we are actually been the portfolio what you are looking at is 31st March. I think as time passed by, actually we have been increasing large cap because we are seeing some certain opportunities in large cap, especially cap goods space. We are actually adding certain cap goods names in the ongoing correction.
Oh, okay. You're adding some large caps in the cap goods space and the ongoing correction. Okay. Okay. Here's the deal. Here's the question then. Financials form 31% of your portfolio as of 31st March. Materials about 9, industrials about 9% odd. Would cap goods fall within this bucket, and therefore has this overall exposure of either industrials or materials gone up from the 9% odd?
This industrials space actually just we are increasing it further.
You are increasing it further.
We see, because we are actually seeing a reasonable amount of activity there in terms of private capex is actually picking up. So we have been waiting for a right opportunity to add, as I mentioned, part of our 4 pillars, margin of safety, our valuations are actually quite important. Despite companies having great quality balance sheet or great quality business, valuations should also actually augur well for that particular business. So we are seeing the Nifty has given about a 3-4% at index level, but individual stocks we have seen certain opportunities and we are actually started building.
Okay, one more question really. I mean, when I look at industrials or cap goods, the blue chip names, the MNC ones are all, to some people, priced to perfection. Even if not to perfection, certainly priced high. Right? There was a downgrade by Nomura on ABB, I think on Thursday, so on and so forth. So when you are buying into large cap good names, where you might see value, is it value in growth, or are you actually buying the non-blue chip names because their valuation multiples might be lower? Just trying to understand.
Yeah. These names might not be non-blue chip names. They could be, but bill to book ratio in terms of quality of balance sheet and quality of business are quite robust. But they might not be blue chip names or MNC parentage. They might not be having MNC parentage. But bill to book ratios of these businesses are quite good, but valuations were not earlier were not comfortable. But now I think with whatever business updates been released of late, etc., I think we are seeing 2 to 3 years perspective. These businesses are offering reasonable amount of growth in terms of runway to growth, plus valuations also are, I think, 18 months to 2 years forward basis. These companies are looking attractive. So we started actually using this ongoing correction.
Got it. Viewers, some interesting focus to consumers as well by this fund. So consumer discretionary is 24%, consumer staples is 6.7%. Now, before I ask Rajesh about what the pockets out there, let me get in my colleague Mahima to give us some sense of what's expected in the quarter from some of the consumption names. Mahima, give us a brief piece of what the brokerages are thinking about the consumer space for this quarter.
Right, Neeraj. So I'll start with how the demand will pan out to be. Well, in terms of demand, we're expecting a subdued performance. Well, we'll see some kind of gradual recovery. However, a quick rebound is not expected in terms of demand. Now, in terms of volume growth, we'll see some kind of divergence as in terms of volume and value growth, because volumes are expected to come back to a normal stage where they'll grow in an average mid-single digit level. In terms of margin expansion, well, the commodity inflation is kind of easing, so the margins will sustain at the same levels as they have been in the past quarters. However, gross margin expansion will likely be slow because a lot of FMCGs are now reinvesting the profits that they're earning into product innovation, distribution expansion, and marketing spends. And lastly, in terms of rural recovery, what you can see is that rural recovery might be a bit dented because the high inflation has really hit the income levels of the people in the rural area, and so rural recovery will basically depend on easing of inflation, one thing, strong festive season, and higher government spending ahead of the elections. So this is the overall view of the consumer sector.
Thanks for that, Mahima. Interesting breakup there, Rajesh. I mean, staples 6.7%. I would reckon it's not exactly overweight. Would you be kind of circumspect there? And part 2 of my question is consumer discretionary. That's a very aggressive 24% weightage there.
Yeah. So consumer discretionary, I think we are quite optimistic for next 4 to 6 quarters basis, Neeraj. There actually segments, if you look at the consumer discretionary is a headline index industry sector. But if you look at the subsegments like the EMS or the hospitality, so these segments are the high value consumption names. If you see, I think the whatever slower volumes, volume pickup or volume growth is happening in a low value segment, whereas in high value consumption, still volumes still holding robust, including jewelry, hospitality, etc. So we are actually just optimistic in that space. And EMS is another area which is actually getting benefited out of ongoing indigenization spree. And the whatever heat wave, I think they expected to actually rise even further. Temperatures are likely to rise even further. So with that, I think manufacturers of air conditioners or EMS manufacturers supplying to these branded air conditioners. So this space actually just we think can this quarter as well next quarter will actually augur well for these companies.
Is EMS within that pocket the strongest bet, or is there something else? QSRs, the online players, what is the strongest bet?
Yeah, QSR, we have some nominal exposure, but I think that is at least 2 quarters away in terms of recovery there. QSR space, we have very nominal exposure. Predominantly, I think EMS and hospitality are actually.
EMS and hospitality. And by hospitality, you mean hotels predominantly?
Hotels, yeah.
Hotels predominantly, okay.
Yeah.
Some more upsides there. Well, viewers, there was a Kotak note which said that Feb rates, tariffs have moved up to average of 9,000. EBITDA revisions being done for FY25. And here we have Rajesh talking about how they are very constructive on hotels from amongst the consumer discretionary, in addition to EMS, which is the back-end manufacturers of electronics, the likes of Dixon, Amber, etc. They need not necessarily be the stocks in his portfolio, but I'm just giving you a nature of what the EMS players could be like. Take a break on that note. Come back, stay tuned with us, viewers. We'll come back and have some idea about some of the other facets of the portfolio. Stay tuned.
after 5 years, we are again getting an opportunity to exercise our right to vote. This is a right which has been earned after a very long and hard struggle by our great leaders. We must not waste this opportunity. Once in 5 years, we get this opportunity to determine how our country will be governed, what will be the policies which will be followed to achieve economic, social development of the country. I have pledged that I will vote. I have appealed to all my family members and friends to come out and vote for the development of our great nation. Jai Hind, long live democracy, long live India.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
Welcome back to Portfolio Manager in conversation with Rajesh Chiru. And Rajesh, I don't want you to comment on specific stocks, but I'm using them as an example. Yes. So in your top allocations, there is a Varun Beverages, there is an Astral. Significant weightage is there. They're not exactly cheap. Right, in terms of headline valuations. So is there merit in growth that you're seeing? Do these form a part of consumer discretionary per se for you as well?
Not necessarily, Neeraj. These names, in terms of our portfolio construct, actually, if you see the way how we construct portfolios, as I mentioned, 4 pillars of my investment approach. 4th pillar is active management. We segregate portfolio into 3 parts: core, tactical, and satellite. There are certain names actually form part of my core allocation. There, I think if there is an opportunity, I add additional tactical allocation to those core names, which these names we tend to hold 3 to 5 years kind of horizon. And there is a price opportunity in terms of short span of time. Actually, stock prices move ahead of fundamentals. We release some amount of capital from those names. That's how we play tactical in and out in those names. Whereas satellite is companies which are actually showing some amount of fundamental improvement or change of management or business, overall, I think business fundamentals are improving, etc. So we actually start as a satellite allocation, and if they give good price opportunity, just will actually seep into the portfolio gains, and eventually I think these from near-term fundamental improvements, I think they become more secular, and I think they turn out to be secular and steady growth companies, then eventually they could become core allocation. That's how I think our approach, overall portfolio construct approach. So the names, whatever you have shown, or most of them are actually my core allocations at this point of time. From there, actually, I don't find any actually, other than Varun, I don't have any consumer names there. So most of them are actually, whether it is part of the industrial allocations or BFSI allocations. Yeah. Varun is actually part of our consumer staples allocation. Discretionary side, we don't have any names from this.
Got it. Fair call. Yes, and you could argue that Varun Beverages, in some sense, it's consumer staples valuation certainly, but the growth numbers for Varun have been anything but how staples growth numbers have been like. But point well taken, Rajesh. Financials, you mentioned that 31.4 would mean slightly underweight. I just wanted to know the breakup there. Are you into lending financials like banks predominantly? I see a bank or two here like Axis, etc. Or is it NBFC lenders? Again, I see a Bajaj Finance. Or have you moved, I mean, do you also have a larger sprinkling of non-lending financials?
Our BFSI exposure in this portfolio dominated by lending businesses. We have two housing finance names also, which are actually just below these top 10 allocations. You'll find it. Two housing finance names, predominantly affordable housing names. There we are actually seeing growth is quite good, and return ratios have been good, and they're actually the stress in book is also in quite controlled manner. They have been managing it. Got good quality businesses and good quality management. We have two housing finance names, and this NBFC, as you have shown, that is also part of our portfolio. And banks, we have two banks. This one as well, one PSU banks, India's largest PSU bank, also there in the portfolio. But PSU banks actually just we believe more or less big gains are behind us. From here onwards, I think their returns should track their earnings growth, because provision reversals or actually the whatever multiple rating is more or less done for now. So we are actually just easing gradually the PSU banks.
Got it. Rajesh, just one curious question. A lot of these names are large, and I still see a 50% allocation to mid caps and small caps, even if you started buying into large cap goods, right? So where is this 50% hiding? What sectors, what themes, where is the bottom up idea?
So those are all actually like the names I mentioned, affordable housing finance in BFSI space. Yeah, so mainly within consumer names also you will find a couple of one of the panel companies they are part of the portfolio. Yeah, one of the actually unique tire manufacturer, which is actually off-highway tire manufacturing companies there, which we used to have a significantly overweight there, I think around 6%, given the ongoing Red Sea logistic challenges and constraints, we have reduced significantly to around 2.5-3%. We hope, I think, but profitability-wise, this company holds a strong moat, and profitability is quite superior compared to any other tire manufacturer. Like these kind of actual names, you would find it there.
Point well noted. Okay. Well, IT also forms. 9.7%, so in some sense slightly underweight relative to maybe the indices. But let me first get in my colleague Rucha to tell us what to expect from IT after the slightly subdued performance by TCS, and before that a month ago by Accenture as well. Rucha, what's happening in that space? What's to be anticipated?
So as you rightly mentioned, Neeraj, the street was expecting something incremental from the TCS management's commentary, but there was no hope of recovery of demand from the management last Friday. The uncertain macro environment still prevails, which leads to clients cutting down on their budgets due to pressure on discretionary spends. Also, there are a number of shorter deals, right, rather than long. So there are less number of shorter deals rather than the long-term deals, which have an impact on the pricing as well, and which can affect the margins of the companies as well. Also, the hyperscalers are also cutting down on their workforce, which again indicates that there is no near-term demand visibility. Like Google did cut down on its workforce less than 6 hours ago. As you rightly mentioned, global peers like Accenture as well cut its FY24 guidance to 1 to 3%, which is a very small range as compared to the previous range of 2 to 5%. However, on the flip side, there can be two positive aspects to this as well. Number one, the EBIT margins are being sustained as the bench which was created in the last few quarters is now coming into utilization. And this has led to lower subcontracting costs, which is a major expense for the IT company, and reduction of the same will help the company support their margins. Also, attrition is normalized, but there is a hiring freeze across the industry. So there are mixed views onto where the IT is going, and apparently I think the clients are just waiting and waiting for the elections to happen and to figure out where the demand will ultimately go, because nobody is able to comprehend about the near-term demand as of now.
Okay, well put, well summarized, Rucha. Thanks for that. Rucha is referring viewers, remember, to the US elections, because that's a large portion of what IT service companies' clientele factor in when they are taking these decisions. 9.7 in IT, Rajesh, just wondering, is it largely services even now, or do ER&D or product companies also come into the fray?
So Neeraj, actually two parts to it. One is this 9.7% is at about 16 days back number. So now actually we have increased slightly a bit here, number one. Number two is one of the name, actually top 5 names or the services company, which we have actually prepared just before earning previews coming in itself. Just we have paid a bit, and we have actually taken down to 3.5-4% levels, because services we think at least will take another 2 quarters, because I think US Fed has to change its stance. Till the time, you might not see the sentiment turning positive for IT services as a segment. But we are actually, as you rightly mentioned, our focus is more towards ER&D as a segment. That particular space has actually very good growth runway over next 3 to 5 years perspective. So that is one segment we are positive. And another bottom-up name we have actually just been building in the portfolio. Where one of the second-rank IT company where change of management has happened, and historically this company has done multiple acquisitions. Now the new management has been actually just easing out a couple of those unrelated or actually the longer-term strategy segments that they have been easing out. So there we expect this particular company will deliver quite strong set of numbers with the whatever change of strategy and change of leadership is happening in the business. Over next 4-6 quarters, this company could give quite stupendous returns, as it is currently trading at a significant valuation to most of the IT services company. So that is one company actually just we are building position in the portfolios, and plus ER&D. This core IT services actually just we think it is at least another 2 quarters away in terms of any recovery. But most of these companies, as you are aware, I think valuations wise they are trading compared to their historical multiples at a discount. But most of the actually negative seems to be in price already. And already we have seen TCS has reported strong set of numbers, whether it is in terms of margins, at least it is the highest in recent times at least. So you might see some green shoots, some kind of actually positive connotation coming out of these earnings. But we have not yet actually built forward positions there. But we are focusing more ER&D and this kind of actually just one of the satellite name we have added in the portfolio as a change of management and change of business model.
Okay, interesting. Strong margins for TCS for sure, viewers, but the commentary may be still some time away, maybe, which is why ER&D is the focus and not IT services necessarily, but certainly a pocket that one should monitor very carefully at some point of time. If growth returns, then in some stocks, the valuations possibly also might start to look interesting. But great. It is lovely talking to you, Rajesh. Thank you so much for taking the time out and being with us and giving us your thoughts, and all the best for the year.
Thank you. Thank you very much, Peter.
Pleasure was ours, and viewers, thanks for tuning in to this leg of the Portfolio Manager.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. We are the, in many ways, we actually are the generation which is going to build the country. Our parents spent their whole life building roti kapda makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future, as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which
benchmarks come off the day's high. Sensex trades above 73,500 while Nifty trades near 22,300. A sea of green across sectors. PSU Bank, Realty and Consumer Durables emerge as top gainers. And GSPL hits lower circuit as the Petroleum and Gas Regulatory Board cuts key Gujarat pipeline tariff by 47%, which is 64% below companies' expectations. More earnings on the radar. Reliance Industries and Mahindra Logistics are expected to come out with their March quarter numbers. Hello and welcome. You're watching Market IQ on NDTV Profit. I'm Smriti Chaudhary, and this show is all about what's happening in the markets in national and international news as well. But let's take a quick check of the markets. You have the Nifty 50 index up about 0.5%. It's off the day's high and doing fairly well today. Nothing to complain about. Let's look at the contributors of the Nifty 50 as well and see what's pulling the index higher. You have the likes of ICICI Bank, L&T, Axis Bank, Infosys, all in the green today, and HDFC is the counter that's pulling the index slightly down by 26 points. There's NTPC, there's JSW Steel, ITC, all in the red today. But let's look at the broader markets as well. You have the Nifty Midcap that's up about 0.7%, doing better than the benchmarks. You have small cap sustaining 1% higher, over 1% higher rather, since morning. And if you look at the sectors as well, you have all the sectors in green today. So a good day overall for the markets. You have the PSU Bank doing very well in trade today, close to 2% higher. You have Realty that's up about 1.3%, followed by Pharma, also about 1% in trade. Let's also look at the breadth of the market, obviously in the favor of advances today. And yes, you can see that sort of sustaining since morning. The advances seem to be holding on there. Let's look at the some of the stock action as well. GSPL, a stock that was logged in the lower circuit today, but has it's down about 17.5% right now, and we'll discuss more on this in just a bit. You have Irida that's up 7% after the business update. We're seeing strong uptick there. Then there's Voltas on the back of a brokerage note, and it's up about 7% as well. You have Welspun up about 4.5%. Also on the back of a business update, you look at something like a Welspun that it got multiple orders worth 872 crore in India and overseas market, and we're seeing that impact since that news came out. You also have something like a Ramakrishna Forgings, if you can pull up the chart for that. Now, in the last couple of days, the stock was up about 5% or so, and this was on the back of an approval to supply powertrain components to US largest electric passenger vehicle producer. Now, this was presumably Tesla that they got the order from, but now they say that that order has been put on hold, and since then the stock is down, and we're seeing some downtick there. You look at Voltas as well, just if you can bring it up again. You have a UBS upgrade there. There's a target price of 1800 that they have given. It's currently trading at around 1400 levels or so. They believe that Voltas will surprise on market share in the room air conditioner segment, and the market share could reach from 23% in FY26 versus 19.5%. That was the consensus till now. So slight uptick there as well. Let's also look at JSPL now. It has in the morning for the large part of the day till now, it was logged in lower circuit, but slightly better than that, up about down about 18.5%. So that's what's happening in the markets. But let's shift focus to a big news coming in on Yes Bank, and I have my colleague Prakriti joining in to tell us more about that. Prakriti, what are you hearing? We can see there are some lines that are talking about how there may be international investors coming in to buy stake in Yes Bank. Tell us more about that.
Right, you're absolutely right. We're just picking it up from our sources that there's some sort of conversation happening there where international investors want to come in and buy some stake, or rather majority stake in Yes Bank. So what we have gathered so far is that Yes Bank in fact is looking to bring in new investors, because whichever investors are there right now, some of them might be eyeing an exit here. So far, Yes Bank is just in talks with the international investors. We are getting a sense that they're not interested in having domestic investors. They are just looking at the international investors in order to have their stake given to them. Next, they're also saying that three main investors are currently as the front runners, and they have submitted their preliminary expression of interest, and these are Emirates NBD, Mitsubishi UFG, that is the MUFG group, and the Sumitomo Mitsui Banking Corp. These three are likely to be in the race to acquire a majority stake stake in Yes Bank. Now, what the understanding that we are getting is that so far only these three are standing as the front runners, and only the preliminary expression of interest has been submitted. The final bids are yet to be awaited, and they will only approach the RBI once things are more finalized. But yes, what we are getting the sense is that once these investors or one of these investors comes on board, the transaction may lead to State Bank of India exiting Yes Bank. So far, as per our knowledge, State Bank of India holds about 26.13% stake in Yes Bank. So if either of these investors, international investors, come in, that could potentially lead to an exit of State Bank of India from Yes Bank. That's all that we are gathering so far. We'll come back to you with more updates as and when we have them.
All right, thank you so much, Pragati, for that. Let's pull up the chart for Yes Bank and see what the stock is doing right now. If you can have the chart for Yes Bank, it's up about over 3.5%, and doing pretty well in trade today. But let's just focus to Vodafone Idea. If you can pull up the chart now, Vodafone Idea down about 4% or thereabouts. However, the 18,000 crore FPO is now fully subscribed. Let's look at some of the numbers of that subscription. Now, retail still isn't fully subscribed. There's a lack of demand in the retail segment. It's only subscribed about 44%. But you look at the QIB, that's subscribed about 1.4x. You have non-institutional investors also subscribing over 2x. So good demand in the institutional side of things, but clearly not so much in the retail space. Now this FPO is supposed to close today. Today is the last day to subscribe to the FPO, and in the evening we're probably going to see a board approval on the FPO price. Now remember, the price range for the FPO is 10 to 11 rupees. Anchors had bid about 5,400 crore in this FPO, and they had bid at the upper end of the price range, which is 11 rupees. But we're going to see what the price will be in the evening, most probably post-market hours, and see what price is fixed for this FPO and how much money the company would be able to raise through this one. But let's talk about GSPL, Gujarat State Petronet. The stock has been in the lower circuit, as we've spoken about this, but it's come out of that now, and I'm joined by my colleague Mihika on this. There's some regulatory board cuts in the pipeline transmission tariff by 47%. But Mihika, tell us more about this.
Yes, so the Petroleum and Natural Gas Board has cut its GSPL's tariff by 47%. The tariff is now at 18.1 rupees per MMBTU versus 34 previously, and this is also 67% lower than the 51 rupee ask that GSPL had claimed. Now the tariff order specifies prices GSPL can charge for gas transportation, and this is for their key high pressure Gujarat network pipeline. Now in terms of the impact, the tariff could lead to lower end user prices for consumers, households, as well as industrial customers, but it would put pressure on GSPL's profits. When you look at why the tariff has such a drastic variation from what was asked, the PNGRB has changed the assumptions in terms of it's named higher volumes, it's assumed lower Capex as well as lower operating expenditure. The operating expenditure was more than almost half of what GSPL had claimed, and in terms of the Capex also, the board approved a Capex of 1,800 crores going forward versus the 3,400 crores. Post this, brokerages did turn negative on the stocks. Both Nomura and Kotak downgraded the stock to a reduced rating with target prices of 320 and 360, which imply a 15 to 22% downside. Now, Nomura has also cut the FY 25-26 EBITDA estimates by 37 and 42%, while Kotak has cut their FY 25-26 earnings estimates by 28 and 37%. We also spoke to a representative of the Petroleum and Natural Gas Board and asked him about the implications and the decision process, and here's a chunk of that.
Two things I would like to share that we have, as per our regulations, we give the 12% post-tax IRR. So that is always maintained, number one. Number two, we have recently concluded the capacity assessment of not only GSPL, but all other entities, GAIL and others also. So that way the capacity assessment has been done, and the reduction of this tariff are combination of Capex, which has not been, which was earlier envisaged, has not been done, OPEX also, and some of the Capex we have already taken for Spur line, for Swan and Chara terminals and all. So that way we have maintained the post-tax IRR of 12%, and since the volume was earlier envisaged and in the tariff order was lower, and where the volume was more than 26 MMSCMD. So that way all these adjustment has led to reduction in the tariff. But PNGRB has always maintained 12% post-tax IRR. So that is there.
Well, let's shift focus to a big earnings that is awaited today, which is Reliance Industries. And Mika, stay with us and tell us what's expected in the fourth quarter from Reliance Industries today.
Yes, so I talk on a consolidated quarter-on-quarter basis. Now, revenue and profit is expected to rise. However, the operating margins could take a hit. Now, revenue and profit would grow on behalf of strong performance across all the three segments, which is oil and gas, retail, and telecom. Now, according to Bloomberg estimates, revenues may rise 5%. EBITDA, however, may fall 4.5% on a sequential basis, which could lead to a 180 basis points margin contraction. However, net profit may rise 14% to 19,727 crores. When you look at the segment-wise expectations, first we talk about the oil to chemicals segment, where Morgan Stanley expects the EBITDA to reach the peak in Q4, and this is the highest since June 2022. And this peak EBITDA comes despite this still sluggish margins in the chemical segment. And they also expect the gross refining margins to rise above the $12 per barrel mark, and this is despite the Russian crude discounts that India enjoys. When you talk about Reliance Jio, they expect strong numbers which are likely to be led by higher subscription additions as well as improved average revenue per user. Now, UBS expects strong net subscription additions at 10 million, and they expect a stable average revenue per user at 183 rupees per month. And lastly, it's the retail segment where a boost in revenue and operating numbers, which will marginally and largely be driven by the store expansions. Higher footfall will also be a factor that will contribute to better performance. And according to UBS, they expect margins to rise 7% quarter-on-quarter, and they expect revenue to rise 22% year-on-year and 1% sequentially, and this will mainly be driven due to the store expansions that have been seen in the last 2 years.
Right, thank you so much, Mihika, for that. We'll keep a track of that and we'll bring you more updates as and when they break. But let's shift focus to IT. That's another sector that's in focus with host of earnings already out. My colleague Rucha did an analysis of the IT companies that have come out with their results, and it looks like that the street is more bullish on Infosys than on TCS. Rucha, tell us why.
Let us start with looking at the FY24 consolidated YOY performance of the two major IT giants who have just reported their results. Now, when we look at the FY24 performance, we'll see that TCS has clearly outperformed Infosys in terms of revenue, EBIT, as well as net profit. As we can see that the EBIT margin for Infosys is down by 40 basis points, while for TCS it is up by 30 basis points. But there are a few points which might support Infosys going ahead. Firstly, let's look at discretionary spends. So across the industry, discretionary spends are under pressure. However, what can work out in favor of Infosys is that since Infosys has a higher share of revenue coming out from discretionary spends, in case there is revival in the discretionary spends going ahead, there will be more room for Infosys in the near future. In terms of valuations, Infosys is trading at a range which is lower than its 5-year median PE at around 22x, while TCS is trading almost at par with its 5-year median PE ratio. So naturally, TCS is a cheaper stock than Infosys is a cheaper stock than TCS. Now, in terms of 1-year stock performance, we'll see that TCS is largely in par with Nifty IT. However, Infosys has underperformed TCS by 10%, which again means that when the sector as a whole will revive, Infosys will have a higher upside than TCS. Now, let us see what the street is expecting out of both the stocks. While 58% have a buy on TCS, 66% have a buy on Infosys. And in terms of sell rating, 21% have a sell rating and 19% have a sell rating for Infosys. So clearly, the street is also bullish for Infosys as compared to TCS. Now, in terms of target price upside, TCS has an upside of around 9%, while Infosys has an upside of 14% going ahead. So again, this indicates that the street is expecting Infosys to outperform TCS.
Thanks, Rucha, for that. Clearly, the upside for Infosys is much larger than what is expected out of TCS. But it's time for a quick break, and we're going to come back with more updates on the other side. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason.
Welcome back. You're watching Market IQ on NDTV Profit. Now, owing to the low voter turnout in the Phase 1 of 2024 Lok Sabha elections, the Election Commission of India has met with the IMD, NDMA and Ministry of MOHFW about above normal temperatures and heat waves in parts of the country. My colleague Himanshu Shekhar is joining us now to tell us more about that. Ministry of...
Smriti, can you hear me?
Yes, Shekhar, go ahead. We can hear you.
Well, this is a high-level meeting to take stock of the kind of preparedness. Yeah, see, the Chief Election Commissioner called this meeting, and the purpose was that despite many months of nationwide campaign to encourage voters to vote, we do know that in the first phase, the voting percentage was below expectation. And this is also largely because in many seats across 21 states, the temperatures on that day on 19th April was high, and that perhaps dissuaded many voters from voting. So now when the temperature is rising, and we do know that Indian Met Department has forecast a severe heat wave in many parts of the country in coming weeks. So the idea was to take inputs from the stakeholders so that more preparation can be put in place. We do know that in every polling booth, Election Commission has given very strict instructions that enough amount of drinking water enough amount of shaded area needs to be provided to the voters. There is also a thinking to encourage more and more people to come out to vote early in the morning to avoid heat waves, especially in those states which are expected to record above normal maximum temperature in the coming weeks. Because the concern is that even in the first phase, when the heat wave was very limited in some few states, we do know that 6 phases of the Lok Sabha elections are still left. And the temperatures, as the summer season moves forward, the temperatures, the above normal maximum temperatures only are expected to go up and up. So there is a concern that this could have an impact on the voting percentage in the next 6 phases, and that's why this high-level meeting has been called, and new instructions are being now issued to polling officials that they must put in place all advisories and protocol that is necessary to help voters come out and vote in a shaded environment.
Right. Thank you so
That's
much.
right.
Thank you so much, Himanshu, for that. Now it's time to celebrate the Indian chess, a momentous win for D. Gukesh at the age of just 17 years old. Gukesh won the candidates tournament and became the youngest challenger in the history of World Chess Champions in this process. Gukesh became only the second Indian after Vishwanathan Anand to qualify for the world title match. He will take on the reigning champion Ding Liren of China. Listen into what he had to say about India's upcoming chess stars, all moving up the ratings in a stellar manner, and what he attributes it to.
Chess in India has become very popular, at least the last couple of years, and it all started from Vishay sir, of course. So he's the one who started a chess boom in India, and in the recent years after the pandemic, there have been a lot of supporters for chess, a lot of chess enthusiasts, and the general interest has been very high. So, in general, chess has it's a great time for chess in India, and I'm so happy to be a part of it.
And we are all happy to be a part of this journey, Gukesh. The last time we saw this much excitement with respect to chess, it was almost 2 decades ago, way back when Vishay was dominating. Do you feel this period in Indian chess is going to sustain itself?
Yeah, I hope so. There are a lot of promising players, as you said, and we are all very ambitious. Now that I have won the candidates, I have qualified for the World Championship. I hope it brings more people to the game, and lot of kids will take up the game, and chess becomes a huge part of a huge interest in India.
Yeah, you're also 2 other players that are really, really talked about the most in Indian chess circuit. There is you, there is Prags. And does this also bring a sense of pressure when it comes to going out there and performing, especially for you? Because you've also been the number 1 player in this country.
Sure. There is always pressure. I have learned to handle it from a very young age. It's not always easy to deal with, but I'm trying my best, and till now I think I've done a good job, and hopefully in the future as well it will be.
Let's bring back the focus to NDTV's special election coverage. Now, in the heartland of Vocaligas, the Bangalore North constituency is up for a heated battle with a union minister who is seen as BJP's woman face in the state, pitted against a professor known for steering public policy. What is expected is an interesting contest. Now, Kara Mandalej's nomination has also created some heartburn in the local BJP unit. Pratibha Raman joins in with a report on this.
Moving Union Minister and 2-time MP Shobha Karanlaje from her Udupi Chikmagaluru seat to BJP's bastion of Bengaluru North was a decision that caused heartburn in sections of the party's local unit. She is not local to this constituency, and the incumbent Sadananda Gowda was denied a ticket, leading to murmurs of dissent. But the BJP effected the change both because this is a party bastion and its ally the JDS has a strong presence here.
Bengaluru North, like other constituencies in the city, has been a BJP bastion, and the party hasn't lost the seat since 2004. This time, the BJP's decision to shift Shobha Karanlaje from Udupi Chikmagaluru was primarily taken to negate faction troubles there. This time, despite murmurs of dissent, both the BJP as well as Shobha Karanlaje are confident of pulling off another victory.
कार्यकर्ता लोग उत्सुक हैं, कार्यकर्ता लोग अभी कल से घर घर जाने का काम करेंगे। मोदी जी देश के लिए क्या किया है, विकास का प्रोग्राम वो करने के लिए, वो बताने के लिए जाएंगे। सब मिलके हम काम कर रहे हैं, हमारे एमएलए नेता लोग मिलके काम कर रहे हैं।
Seen as the woman face of the party in the state, she was once a close confidant of B.S. Yediyurappa and was the campaign committee chairman during the Vidhan Sabha polls. An important link between the party state and central unit, making this a prestige battle for the BJP. The man who is challenging Shobha here is the suave, erudite, professor at IIM and former Rajya Sabha MP Rajiv Gowda.
Thank you.
He is the son of the former Karnataka Speaker M.V. Venkatappa and has closely seen the working of the party high command and the state leadership. Rajiv Gowda's urban appeal and the fact that he belongs to the dominant Vocaliga caste, the Congress hopes will bolster its campaign on the state government's guarantees here and help wrest a seat that's eluded it for 2 decades.
The veterans at rejecting people's needs and demands. The Congress party has really lived up to its promises. In 10 months, we've implemented all the guarantees that we offered. I don't know what Modi guarantees are, because they're not believable.
From traffic congestion in areas like Hebbal, lack of foot-over bridge at K.R.Puram, to water shortage in Betrayampura. Bengaluru North citizens are looking for development.
For this constituency, Rajiv Gowda is educated. He is a professor from IIM, so he is better candidate than Shobha. Shobha was previously contested from Chikmagalur. There are a lot of opposition. That is why she shifted from Chikmagalur to Bengaluru North.
Not Karnataka state government, only based on Narendra Modi work and discipline. Especially in Karnataka, Congress government give everything free. Where it is come from, there is a big issue. So India growth completely lost.
Well, that's all the time we have on this edition of Market IQ, but lots more lined up here on NDTV Profit. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Hello and welcome to the Mutual Fund Show. I'm your host Neeraj Shah, and today we'll be discussing two topics. One, if you are an investor in a flexi cap fund, particularly a flexi cap fund, and if the AUMs of those funds, by virtue of the stupendous performance in the last few years, have become larger, would you or should you switch to some of the newer schemes which are also managed by reputed fund managers or AMCs, because it might be difficult for a fund with a larger AUM to outperform relative to some of the smaller AUM funds. So that's the first one on our radar. Of course, a bit later on the show, we'll also try and ask a question which invariably comes up every 3 months or 6 months, but even more so now, that if indeed fixed returns in bank deposits might be at a particular level, let's say 8% or 9%, is it prudent to use them as opposed to try and invest in a debt fund at the current juncture? To talk about both of these topics, I'm joined by two experts, Saloni Sanghvi, founder at My Wealth Guide, and Santosh Joseph, founder at Germinate Investor Services. Both of you, thanks so much for taking the time out. Really, it's a pleasure to talk to both of you. It's been a while that I've spoken to you, so great doing this show together. I'll start off with the first topic, which is, flexi cap funds in particular. This could be applicable to any scheme, but I'm using flexi cap funds as an example, wherein the size of the fund has become very large. There is a Parag Parekh which is at an exceptional performer for the last 7, 8, 10 years maybe, and the fund size has now become very, very large, the equity AUM. Similarly for an HDFC or some of the others. Saloni, can I start off with you on this? That's typical, right? As a fund size becomes higher, would it find it difficult to outperform, and therefore should people look at smaller funds?
Thank you so much for having me, Neeraj. So before we look at specific funds, let's look at some of the parameters that you would look at to, pick a fund to invest in regardless of the category. First is returns. Now, while obviously past returns are no indicator of future returns, it helps us understand how a fund has performed across various market cycles. Second is risk. As important as return is, risk is even more important. A fund could have performed well, but the manager may have taken excessive risk to achieve that. The third is obviously the fund manager style, whether it's growth, value, quality, etc. And also consistency in case of if there are fund manager exits. And the last is AUM. Now, a small AUM could be an issue if there are large redemptions in the fund. A large AUM would be more of an issue in small cap funds because it restricts the opportunities available. Given that most flexi cap funds are often large cap biased with around 70 to 80% in large cap stocks, I think the large AUM is not a drawback. And high AUM is obviously, of course, built on the back of good performance. So if we were to just quickly look at the performance of some of the funds with the highest versus the lowest AUM in the category, if you look at Parag Parekh, which you mentioned, that has outperformed the benchmark across most time frames. Whereas if you look at the funds which are in the lower AUM category, they've actually underperformed the benchmark across most time frames. Now, when we come to the specific fund houses that you mentioned, a track record helps to understand the kind of risk that a fund is taking, how well it does in a bull market, bear market, and because there's a lot of data available, you can analyze it and determine if it is the right fit for your portfolio. In a new fund or AMC, you only know the broad strategy and mandate, but you don't know whether that strategy is actually going to work. Of course, a good fund manager does add confidence, but I feel like if there are enough, existing funds in the category with a track record, I would prefer to look at those. In fact, even if there are unique strategies, it's better to wait for some time to see if that theme or investment strategy actually plays out before investing in those funds.
Okay. Fair point. Santosh, come in on this one. What are your thoughts? And the added layer that I'm adding to this conversation is that there are, in the last 12 months, there's a slew of new funds that have come in, which are managed by fund managers or houses which have had a track record in different ways, right? In Old Bridge, Kenneth Andrade has run an AIF very successfully and has a track record of IDFC in the past as well. Similarly, Helios and Samir Arora's track record out there, or Trust, which has got Utpal Sheth and Mihir Vora's track record. So in some sense, newer funds, but managed by people with immense pedigree. And we know what Quant has done. I'm not saying that therefore others will do that, but a new fund house comes in, disrupts and does great returns as well. So my larger question is, I take on board Saloni's point that flexi cap funds are large cap buys and therefore liquidity is not an issue, but the overall size, could that hamper outperformance moving ahead relative to what could happen to some of these newer funds?
So great question, Neeraj, and there are two parts to this. Let me just break it up. One, all the new guys that have come in the last 12 months, I like all of them, and I think you so rightly said, all of them come with great experience, the number of years that's spent in the market, and also the pedigree. Now, whether it's Helios or whether it's Old Bridge or whether it's Trust, we have no problem with the offering or even with the portfolio manager because they've got a clear proven track record. Now, coming back to flexi cap funds and the size. Are we worried about the size of a flexi cap fund? The answer is no, and I would like to put some perspective to it. The markets themselves broadly have actually grown quite a bit. If you look at the mutual fund industry AUM at over 50 lakh crore has grown, and therefore you are bound to have some funds which have got track record and performance to be large funds like these. It cannot be that the AUMs are growing and funds will not become big. Now you also add another layer of perspective that even the market capitalization of many of our stocks have gone up significantly. Now you take the largest flexi cap fund, let's say 60-70,000 crores, and you take the largest holding in that, let's say another 6,000 to 10,000 crores. Now that 6,000 to 10,000 crores in a large cap stock, which has got, let's say 5 lakh, 10 lakh, 15 lakh crore market cap, really not a cause of worry. Now, the good thing is that these funds are also becoming large on two reasons. One, they're performing well, therefore the size is growing. Also, they're getting a lot of inflows because of good performance and good track record. So as long as you have those things working for you, whereas where the market is growing, the market capitalizations are growing, the fund is delivering, and the portfolio manager is able to meaningfully add value to incremental monies and manage the existing investors' money well, I think there's nothing to worry, and flexi caps are here to stay and will do even better.
Okay. Okay, fair point. So both of you are on the same side of the argument. Saloni, I'll just ask one question, and this comes in because there are a few people who are saying that, if I have a limited amount to put in a flexi cap fund, and I have existing SIPs into those large funds, but there are these new fund houses with very attractive fund managers with a very attractive track record in the past, should they be looked at? And in some sense, the small size might just help going ahead. I mean, if the AUM for, let's say, an HDFC would double from here over the next 5 years versus some of the newer funds, then the outperformance possibilities might also change. Is that a valid argument or not quite?
I don't think that's valid. I think, the point that we've made, there is a lot of room in the flexi cap funds, even the current funds, given the current AUM to grow, there's a lot of room there. So even if one were to continue the SIPs, I think there's a lot of room. So it, just size is not the only determinant of whether a fund would do well or not. I would give some of these new fund houses maybe a couple of years to see how their strategy pans out before investing significant amounts in them.
Fair point. So just for the benefit of our viewers and before we take that break, Santosh, so if I were to ask you from the funds which have traditionally done well, and I think there was some graphics which showed how PPFAS or some of the others have had a very nice track record for a number of years now, but it's not the only one. I mean, whatever else out there, from amongst the flexi cap category, which are the ones that you like the most? It not be an exhaustive list. It's effectively a representation or two from the many that you might be liking, and why?
So yes, Parag Parikh on the terms of size or HDFC flexi cap, all these have done well, and any flexi cap I think that's got over a 5 to 10 year track record is good, both for keeping the funds and for continuing to hold in them. Now, when one looks at the whole flexi cap as a space, and we need to understand that this was birthed out of the need that when SEBI scheme recategorization happened, you had this one large multi-cap category where you had to really put them into a particular basket, and that's when flexi cap as a category came, gave the fund manager the ability to navigate between large caps and a certain bit of mid and small cap. So therefore, Flexi-cap as a category is now become our good old OG, which is the diversified equity fund category. So without being biased with any name, anybody with a 5 to 10 year track record is a straightaway go-to.
Okay, Saloni, would you be able to tell us what do you like as an example or an illustration within the flexi cap category?
I think currently, of course, PPFAS is one fund that has, over a period of time demonstrated. I think 361 focused equity is also a good fund to look at in that category.
Okay. Well, those are some examples, and thanks both of you for breaking this notion in some sense. I was trying to play the devil's advocate, but clearly both of you believe that there is not a problem there. So viewers, if you're listening into this conversation, whether on TV right now or on digital later on, let not the size of the flexi cap fund at least bother you. I think Saloni made an interesting point that for a small cap fund, this argument could still be valid because of liquidity, so on and so forth. For a flexi cap fund, I think there's still some room to maneuver. So some of the well-performing funds might still be the go-to funds to look at. We need to take a break, of course. We'll come back from the break, talk about the other topic, which is debt funds versus FDs, if you will, at the current rates. And time permitting, we'll try and take some queries as well.
We as professionals understand the importance of making informed decisions and often are advisors to our clients. Voting is no different. As citizens of this great nation, we have the power to shape its future. And one of the most crucial ways we can do that is by casting our vote. It's not just a right for every citizen, it's a responsibility. A responsibility to ourselves, to our communities, and to our country. So, I urge all of you to exercise your right to vote. I always ensure that I fulfill this duty to our country. Let's show the world the power of our democracy, the power of our collective voices. Together, we can make the difference. Together, we can build a better tomorrow.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Back with the Mutual Fund Show right here on NDTV Profit. A couple of very interesting queries. And Venkatesh, let's start off with the queries actually first, and then we'll move on to the second topic. Venkatesh has a query. Venkatesh Miriyala is aged 39 years. His goal is to buy a house. He's saying that I've been investing 50,000 rupees a month since the last 1 year in mutual funds. My goal is to buy a home after 20 years, and the house currently costs 1.2 crores. Will I be able to achieve my goal without a bank loan through these investments, or do I need to change my strategy? The current SIPs are in Quant Small Cap, ICICI Prudential Blue Chip, 10,000 apiece, HDFC Flexi Cap, HDFC Top 100 and Quant Midcap. Well, that is his bifurcation. The timeline is long. Santosh, can I ask you to advise Venkatesh?
I think this is a good thought, a brilliant approach to begin with. Now, the straightforward answer is you don't need a home loan. I think you're well sorted with this. Now, there are just one or two assumptions that I have to make for you, Venkatesh, to give you this answer. Is that number one, you also have to consider that the cost of home, which is 1.2 crore today, 20 years from now, will not remain the same. Of course, you have to take into account inflation. And therefore, with that assumption, I would think that the cost of the house will be between 3.5 to 4 crores in a 20-year time frame. Now, let's look at your SIPs. What are they going to achieve over the next 20 years? Now, I'm not going to disturb your choice of funds. And I think the most important aspect is the fact that you've chosen a good bunch of diversified equity funds, and you have a 20-year track record. Now, just the corpus that you will accumulate will be about 1.2 crores. Now, if that were to grow at 10 or 12 or 15, the numbers will be between 3.8 crores or 5 crores or 7.5. Now, in this perspective, in a 20-year period, your corpus would be, even at a 12%, over 5 crores. Now, using that money, you will very comfortably be able to buy your home without a loan. And as an added bonus, you'll have some money left over, which could be a portion of your wealth or something else that you can fund yourself for. But this is a nice way, and I'm glad you asked this question. It is possible. You will actually do better for yourself than taking a loan right now and struggling through the 20 years. But at the end of 20 years, you'll have a brand new home at extra savings also left for you.
Okay, so that's one advice. And Venkatesh, I hope this answers your query. I'll ask Saloni to give a response on the second query because time is short. And the second query is from Rahul Das. Goal is a retirement fund. And Rahul Saloni says that I'm quoting him, I'm planning to invest around 75,000 rupees a month for the next 10 years. I'm ready to take moderate to high risk. Please suggest 4 or 5 funds to diversify my investments. Do you reckon you can advise Rahul Saloni?
Sure. So Rahul, prima facie, it's difficult to recommend the right asset allocation without knowing, your risk-taking ability and age. But I assume that, you're relatively close to investment because you mentioned a 10-year horizon. So I think the way you could split the 75,000 is look at 30% in maybe 2 good flexi cap funds. You could look at PPFAS or 361 focused or any other good flexi cap fund in the category. You could invest another 30% in a mid-cap fund like Kotak emerging equities, and maybe a 10% in a small cap fund of your choice, maybe a Nippon or SBI or Axis. So I think that is how I would look at investing for the next 10 years.
Okay, sound advice, I'm sure. And Rahul, I hope this helps you. I'm sure it will. Thanks for that, Saloni. Okay, now the other topic, which might be a slightly broader topic and not necessarily a query. And Santosh, I'll start this conversation with you. There are people in my office who are asking that FDs are giving a particular rate of return currently. Debt funds are giving a particular rate of return. Why should anybody invest in fixed income instruments via the mutual fund route currently when fixed deposits are giving the kind of returns that they are? If they're willing to hold on to the fixed deposits for over 5 years as well, then there is some tax benefit that comes in too. So could you tell what would you do, Santosh?
Well, the debate is across the board, not only in your office, but all over the place. The investor community have this notion in their mind that when you have the FDs at an attractive rate, and I'm sure all of us have been getting those teaser SMSs from some of the banks that how if you take it for 13 months or 25 months, they give you some good rates. Now, straightforward, the answer is that they are on par right now. When you are able to get a good issuer at a good rate, I think then the clear answer is, if that is the point of convenience for you, you should go for it. I've for long maintained that anything more than 7.5% gross yield for an investor is great, because we know that right now that long-term capital gain benefit being stripped away from the debt funds, right now you're on par, and therefore your choice will be largely dependent on the yield and also the convenience at which you can make this investment. Now, we also have to keep in mind, for a lot of investors who are still not, even to this date, comfortable with mutual funds, or especially fixed income mutual funds, because of the little bit of varying degree of difference in returns that they see, for them, FD becomes like a de facto choice. So therefore, I would say, choose your convenience. At 7.5%, 8% or 8.5%, or even 9%, if you can get a good FD from a bank that you're comfortable with, go for it. Mutual funds do have their place, maybe for hybrid funds, maybe for savings funds, and maybe even for the longer term aggressive equity investors. But clearly, the answer is choose convenience and choose the yield that works for you. And I think 8 or 9% yield is lucrative to make that decision.
Okay. Thanks for that, Santosh. Saloni, how do you think about it? And your answer could be completely different, which is fine, but would love to hear.
So I think FDs are definitely a great option, especially if you know the exact duration and don't need to break the FD. Also for senior citizens who get a 0.5% higher interest in most banks. But I think one thing that people should be aware about FDs is that if you break the FD, you could be charged a penalty. And secondly, you also get a lower interest rate for the premature withdrawal. So for example, you have a 2-year FD, but you break it in 6 months, you will get the 6-month interest rate and not the 2-year interest rate. And most of the higher interest rates are usually at the longer term, or 2 years, 3 years, 5 years kind of a horizon. Liquid funds have given a similar return and can be a good option for shorter term needs. So if you need funds for within 1 year period, or you're not sure exactly when you may need the funds, so this could be a good option because there is only a 7-day lock-in, so it can be redeemed anytime. And the return that you would get would be similar, whether you do it for 1 year or for a shorter period. The return that you look at would be similar in that sense. Of course, there is no guarantee of fixed return as there is in FDs. And the benefit is also you pay tax only on redemption, unlike in FDs where you have to pay tax every year on the accrued interest. So even if you have a 5-year FD, you're still paying tax every year. I think another good option that people could look at is arbitrage funds, especially because of the tax arbitrage. They've given a return of around 7.6% on average in the last 1 year. So say if we were to assume a 7% return on an arbitrage fund after 1 year, that means a 6.3% post-tax. Whereas if you were to look at any other debt mutual funds or FDs, that would be a return of 4.9% post-tax. So I think that is also one option that people could look at.
Okay. Well, and the tax arbitrage still exists, at least until this budget. Let's see if there are changes thereof. So that's to be kept in mind, but pertinent point. Great. Take a moment to thank both of you, Saloni as well as Santosh, for joining us and giving us your perspectives. Must admit, both sets of the answers are completely different than what I had thought it would be, and therefore it's great to have such a conversation on the show. Thanks for your time and your advice.
Thanks, Neeraj.
Thank you so much, Neeraj.
All right, that's our guests with their views. I hope this show was helpful to both our viewers who asked for the specific query, but on two very pertinent topics, at least to my mind. Thank you for tuning into this leg of the Mutual Fund Show, but stay tuned to NDTV Profit for more news and updates.
Hello everyone. I urge each one of you to exercise your right to vote. Your voice matters and all our votes shape our collective future. Let us make democracy stronger by going out and exercising our franchise. Jai Hind.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
Or
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and every kind of volume buzzer. I'm your host Mihika Barre. But before we take a look at what the buzzing stocks we have in trade today, let's just take a look at markets and how they have fared in today's trade. Well, the benchmark is in the green, up 0.6%. And when you look at the counters that are contributing to the gains, we have something like an Eicher Motor up 3% in trade. We have Tata Consumers and BPCL up almost 3%, as well as the Axis Bank and Hero Motor. And when you look at the advance to decline ratios, we have 41 advances in the Nifty 50 and 9 declines. And the ones that are lagging behind are NTPC and HDFC Bank. And the lag in HDFC Bank comes post their Q3 earnings. But when you look at the broader markets, they're clearly outperforming. The Nifty Midcap 150 up about 0.8%. And we had the Nifty Small Cap clearly outperforming the broader markets and the Nifty Midcap up about more than 1%. And when you look at the counters that are contributing to the Nifty Small Caps gains, we have something like an ITI, which is up 11%, a Sterling and Wilson up 10%, and it is to note that their earnings did come out on the 20th of April. Then we have a Triveni Engineering, which we will be talking about in trade today, as well as the Jupiter Wagons and Action Construction and a Whirlpool that is up 5 to 7%. If we take a look at the stocks that are reacting to certain kinds of news flow, we do have a GSPL. It hit a lower circuit at 20%. It's come off, it's up down 16% nonetheless. We also have an IREDA, strong quarter numbers. The company posted its highest annual profit ever. Hero Motor Corp up about 3%. And we also have an Ultratech, which is up 2%. Now, this was on back of a brownfield expansion, and they've spoken about an investment of around 500 crores. We also had the likes of an Oberoi Realty, as well as a Wipro that have, reacted positively to their Q3 earnings. Let's just take the sectoral indices. All the indices are in the green today, and up top we have the PSU Bank up 2.4%. We have the Nifty Realty as well as the Pharma. Yep. And up first, let's just take a look at the large trades that we do have in focus today. We have something like a Bombay Burma Trading Corporation, Gujarat State Petronet, Persistent Systems, as well as Heikel and Triveni Engineering. But up first, we have GSPL. Now, the stock did hit a lower circuit at 20%, and this was on the back of the Petroleum and Natural Gas Board cutting its tariff by 47%. Now, volumes were over 13 times its 30-day average, and the stock did see two bulk deals, a block deal volume of 0.21 million shares at a price of 314 rupees, and we also saw a block deal of 3.2 million shares at a price of 105.06. But we do have a guest joining us, and that's Harshvardhan Dole, who's the Vice President at IIFL Securities. Good afternoon, Harshvardhan.
Hi, good afternoon.
Yes. So up first, a 47% tariff cut is a drastic variation to the price that was suggested by the company itself and the previous price. What were your expectations, and how would this impact the company's earnings in FY25 as well as 26?
So, this 47% steep cut in the tariff has come as a very negative surprise for us. We were expecting a marginal, maybe 10% reduction in the tariff, and had believed that GSPL management will be able to, defend the tariff proposals, quite effectively in front of PNGRB. And that's how we had forecast our earnings for FY25 as well as FY26. And to that extent, this 47% steep cut in the numbers or the tariff has come as a rude shock. So subsequent to this kind of, cut in the tariff, we have downgraded the standalone earnings by about 50% and the consolidated earnings by about 35 to 38%. For FY25 and FY26. And to that extent, before today's fall, we saw the stock fairly expensive, and that was the reason for us to downgrade this particular name. So as of now, we have a sell recommendation on the stock, and I think the risk reward is now gradually turning favorable, but not fully. I will be more happy to buy the stock towards maybe 250 or so.
Thank you, Mr. Dole. But before I get into specifics for Gujarat State Petronet, I want to get this off the hand. How will this impact Gujarat Gas, which in the company has a 54% stake, if I'm not wrong?
So strictly speaking, this tariff order is only for GSPL and not Gujarat Gas. Although reduction in the tariff should generally benefit all the users who are connected to the gas pipeline. And in general, there will be reduction in the pooled tariff, which is what PNGRB calculates for the system as a whole. And to that extent, there will be some marginal reduction in the gas input price for Gujarat Gas. But frankly, that benefit is not so material that it can prompt us to change the earnings materially for Gujarat Gas.
Noted. So very marginal gain for Gujarat Gas, but nothing substantial. Now, the PNGRB, their volume estimate was 22% higher than what was stated by Gujarat Gas itself at 31.7. Is this attainable for the company? What are the volume expectations that you have in the near term for Gujarat State Petronet?
So from a volume ramp-up perspective, we are fairly upbeat, simply because the LNG prices have come off the cliff, and the outlook on the LNG prices is fairly weak. And to that extent, on the macro basis, there is every reason to believe that the gas consumption, particularly in well-connected areas like Gujarat, should improve over the next 2 to 3 years. So I may not be able to specifically comment as to why the management was guiding for 25-26 MMS CMD volume versus 31-32 MMS CMD taken by the regulator.
And we also spoke to a member of the regulator, and he stated that some of the assumptions made by the company in terms of Capex and OPEX were very escalated. Do you feel like the OPEX and Capex numbers were justifiable?
See, it will be unfair for me to say whether those numbers are overstated or understated. However, I can fairly comment on this part with certain accuracy that if a company submits a tariff proposal to a regulator, it should be able to defend it much more effectively. So, in fact, that's what we have written in our note, that perhaps it's a failure of Gujarat Gas, my apologies, the GSPL management or the operating cadre for not being able to defend the tariff the way they should have. And if one glances through in the what has happened in the past 12 months or so, there have been key exits at the group, which perhaps has weakened the management bandwidth, for which the tariff proposals may not have been fairly defended as they should have been. And to that extent, I think the only respite that they have is now go and appeal to the higher authorities for perhaps a revision in the tariff order which has been passed.
And do you think there would be a revision if the volumes, the actual volumes were different coming this year?
I may not like to comment on that because it all depends on how they present the petition and how the regulator or the higher authority, how they view it. All that I can say is, based on the current tariff order, at least the near-term earnings trajectory doesn't look upbeat, for which the valuations are certainly expensive.
And I'll just ask one last question. Going forward with this tariff hike and pressure coming on Gujarat State Petronet, are there any other stocks that do seem more favorable in terms of gas distribution or pipeline distribution?
So prior to today's fall, GSPL was trading at a substantially higher premium to GAIL, and depending on how you value Gujarat Gas, maybe at par with GAIL. But in my opinion, both these stocks are now trading higher than their intrinsic value. And I actually don't see a great merit buying in either GAIL or essentially GSPL. I probably would like to correct them a lot more for the annuity pipeline business.
Last question, Mr. Dole, because you mentioned GAIL and they are expecting, their tariff, maybe this year. Do you think that this drastic cut was a one-off, or we could maybe expect something similar to what for GAIL itself?
See, one should not extrapolate what has happened with GSPL may necessarily happen with GAIL. It's a function of how you present the tariff proposal and how well you are able to defend it. I'd like to stress that GAIL has been able to get nearly 35 to 40% tariff increase a year and a half ago for all of its key pipelines. And again, so to that extent, you actually have two different cases. One large entity is seeing a substantial increase in tariff, and the other entity seeing a substantial reduction in the tariff. So the regulator is fair, they follow a certain process, and it all depends how effectively you are able to present the proposal and defend thereof. So we'll have to wait and see as to how GAIL presents the proposal and how well or bad they're able to defend it.
Yes. Thank you so much, Mr. Dole, for giving us that insight, and it was wonderful having you. But for viewers, just a quick context in terms of how the assumptions were different from like the regulator's assumptions and Gujarat State Petronet's assumptions. We'll have a table up here right now. Now, if first key reason was lower Capex, now Gujarat State Petronet suggested a future outgoing Capex of 3,400 crores, whereas the regulator claimed 1,800. And the main difference different was the last mile connectivity, which is mainly Capex that is used to connect the last leg of distribution that will go to the end consumers. And the board has stated that because CGD licenses are in play, you won't need as much as Capex needed. Next thing was lower operating expenditure. Gujarat State Petronet stated 5,000 crores, while as the Petroleum Board stated 2,600 crores, as they have factored in lower selling unit gate costs as well as lower transmission loss. And transmission loss is basically the loss of natural gas volumes while transportation in the pipeline, and this is due to friction. And one of the other counters was higher volumes. Now, they have estimated higher volumes at 31.7 million metric standard cubic meters per day versus Gujarat State Petronet's 26. And lastly was the FY24 gas price. Now, Gujarat State assumes a 12.01 per million metric British thermal unit, whereas the PNJRB assumed a lower gas price of 11 million metric British thermal per unit. But now it's time to slip into a short break, but do stay tuned as we have lots more lined up on the other side.
We as professionals understand the importance of making informed decisions and often are advisors to our clients. Voting is no different. As citizens of this great nation, we have the power to shape its future. And one of the most crucial ways we can do that is by casting our vote. It's not just a right for every citizen, it's a responsibility. A responsibility to ourselves, to our communities, and to our country. So, I urge all of you to exercise your right to vote. I always ensure that I fulfill this duty to our country. Let's show the world the power of our democracy, the power of our collective voices. Together, we can make the difference. Together, we can build a better tomorrow.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back, viewers, to NDTV Profit, and you're watching Large Trades. Before we move on to the stocks that are buzzing in trade today, I do want to highlight Suzlon Energy. It's up almost 5% in trade today. We had multiple large trades in hand. One was 1.61 million shares traded in another bunch, and we also had 2.26 million shares traded in another bunch. But moving on to our first volume buzz of the day, and that's Bombay Burma Trading Corporation. Now it's off some of its day's highs, but it's up 4% nonetheless. And Puneet joins us with key details on the same.
Yeah, thanks for that, Mika. So, as rightly said, the stock is down from its intraday high of roughly 9.5%, which it hit this morning. Now, let's talk about the company a bit. It is involved in a confluence of businesses such as tea and coffee plantation, as well as has auto components and dental products under its gambit. Now, this is a Wadia Group company and is trading on high volumes today of roughly 11 times its 30-day average. Now, if you look at the auto component business, which comes under the standalone revenue, it's called Electromax, which is in switches, sensors, as well as slip rings and other auto component products. They have currently 4 manufacturing facilities in and around Chennai, which is the auto hub in India, as well as it caters to domestic customers such as Bosch, TVS Motors and M&M, and has roughly 30% of these products exported to clients such as Delphi, Borg Automotive, as well as NCR. Now, if you look at the standalone numbers for the company, they don't paint a very good picture. It's roughly 254 crores of revenue for the 9 months of FY24 versus 245 crores, not much growth. But on the EBITDA level, it is actually a loss-making company coming in at negative 47 crores of losses versus 38 crores of losses last year. While the net profit picture is positive, that is on the back of an other income component which the company received. When you look at the consolidated, here is where the difference is. They have revenues of roughly 17,000 crores, which was up roughly 10% from the last year, of coming at roughly 16,600, while the EBITDA as well as the PAT margin is positive. We are coming in at 15% versus 10% in the previous year. The key thing here is that the consolidated revenue is driven by the company with its stake in its food as well as dairy arm called Britannia, which is very well known in the FMCG space. Now, roughly 12,000 crores of its consolidated revenues come from this stake in Britannia Industries, which forms roughly 80% of the consolidated revenue. Investments also is one of the other components of the company. Roughly 1,200 crores of the company is of revenue comes from its other investments, which had erstwhile companies like GoAir as well as the other companies. The stock is up roughly 59% in the past 1 year, and that's all we have on the company right now. Back to you.
Thank you so much, Puneet, for giving us those key details. Up next, we have an IT counter, and that's Persistent Systems. Now, it's been feeling the pressure since the start of day, down almost 10%. And we have Rucha joining us on the key details and the triggers for this downturn.
Thanks, Mihika. So, Persistent System reported its results last night. However, the call was scheduled today morning at 8 o'clock. In terms of volume, Persistent is trading at 4.6 times of its 30-day average, while the stock is down nearly 10%, as rightly stated. Now, what is there in the numbers? Revenue was up 4% and net profit was also up 10%. But where is the disappointment? It is in the margins. The margins were down 8 basis points at 14.5% versus expectation of around 19%. Now, this was due to largely due to the higher travel cost and the lower utilization, as the company mentioned that it had to bring on laterals on board as the freshers were utilized already due to the revenue growth stated. The attrition has come down to 11.5%, while the management has guided for a flat EBIT growth in FY25. This is again a disappointment for the street, which means that the management will have to struggle to maintain its margins. Now, the management also stated that it is trying to achieve 200 to 300 basis points increase in terms of margins over the next 3 years. However, it also will maintain 14.5% margin for the next year, which implies that the FY26 and FY27 will likely see an uptick in terms of margin. Now, in terms of headcount and attrition, the management did not mention anything specific about the fresher intake, but it also mentioned that the EBIT margin will be easier to maintain than achieving the revenue growth by stating that there is still pressure on discretionary spends due to uncertain macro environment.
Thank you so much, Rucha, for those key details. Speaking of the IT sector, our colleague Neeraj spoke to ICICI Securities' Vinod Karki, who talked about the long-term growth prospects of the IT companies. Do listen in.
Valuations for any company, in my view, are triggered by three factors. One is, in the near term, how are the earnings upgrade, downgrade happening? So clearly there is no question that there is any sign of any upgrade over there. Second is you give a benefit of doubt to long-term growth prospects, basically. So you say, okay, in the short term you have some pain, but long-term prospects are brilliant, and but there's a question of this, what AI can do to tech. The IT services company especially. Obviously, tech as a sector will only flourish in an AI environment. But currently, the way our companies are working, there is a bit of question mark, which several people have talked about, industry experts, about is there a disruption coming from AI towards such companies? So there is some amount of doubt about the long term also. But the third important thing which is to be noted is that contrary to earlier times, which is pre-COVID and after COVID for some time, we have moved away from ultra low interest rates in the developed markets, which used to keep such companies, the defensives, long-term growth companies, long-term prospect companies at higher valuation. People are now realizing that the US interest rates are going to be higher for longer. So from all this perspective, I don't see any, trigger. Either, let's say you make a case that, okay, from a long-term perspective, because AI is coming and things like that, it's going to be high growth for these companies. In the short term, we are having some problem and all. Or you say interest rates are going to go down, and therefore these, where you go extrapolate earnings into a long-term, the long-term growth value keeps rising. Or in the short term, you have some kind of upgrade, which you are seeing the cyclicals of this. The cyclicals is obviously facing these things. Basically, their short-term outlook is improving as we speak. Obviously, their valuation will get impacted by higher rates, but long-term growth can be anybody's guess. So at least one thing is moving for them, which is near-term growth outlook. We don't see that in IT right now, and valuations are at higher levels. The 5-year average is kind of a misnomer because post-COVID there was a big spike in the multiple. Pre-COVID, I think it was not at these levels. So you have to keep these things in mind.
Well, those were the key prospects or counters that you need to take a look out for at the IT sector. But up next, we have a pharma and specialty chemical stock, and that's Hykel. It's maintained its gains up 7%, and it also reaches 52-week high at 331.2 rupees per share. But we have Varsha joining us, giving us more insights on the stock.
Well, thanks, Mihika. So yes, Hykel is in focus on the back of volume. So if you see, volumes are over 10x its 30-day average, while company has seen an intraday high of almost 11%. Now, this company provides active ingredients to agrochemical and intermediates to pharma companies. So basically, they provide products which are used in agro and pharma companies. Now, what's working for the company is their diversified presence in pharma, crop protection, and animal healthcare. Now, the pharmaceutical segment contributes almost 60%, while rest 40% is contributed by agro, but they are also increasing their presence in animal healthcare segment, wherein their new plant at Panoli for the animal health vertical was commissioned in December 2023. Now, they are also expecting revenue and margin improvement in H2 FY25. So these are the good things that is working for the company, but we'll see the risk also. So Hykel's margins remain vulnerable to competitive pressure in the industry, along with volatility in raw material prices. This was evidenced. If you see in FY23, their margins were almost 13% versus historical levels. Margins have been around 17 to 19%. Now, this is because of rising cost of key raw material in the pharma segment. for which it depend on China. And lastly, if you see, there have been increased scrutiny of its operation by the Maharashtra Pollution Control Board, wherein they were levied fine of almost 17 crore on against which they are seeking, appropriate legal remedies. So these are all the things we have which is actually working for the HYCL, and what are the risks involved in it.
Thank you so much, Varsha, for those insights. Moving on, we have the sugar sector in focus. Now you'll see various counters like a Sri Renuka Sugars or a Dalmia Bharat Sugar and Industries, or even a Balrampur Chini that have been up in trade today, gains of 1 to 3% for all the counters. But we do have a Triveni Engineering, which has been the key gainer. It's up 9.5% in trade today, and we have Anushi joining us to give us key insights on the stock as well as the sector.
Hey Mika, so you rightly captured the theme of the sugar stocks being in focus today. Now over here, if you have to look at specific sugar names, Triveni Engineering, as you see, is leading this sugar stock rally again, 10.25% of an intraday over here, while the volumes traded at about 13 times its 30-day average. Other key names which is seeing this kind of a spurt today is Dalmia Bharat, about 5% gains, followed by Sri Renuka, about 6% gains. Now what's happening in sugar industries is like the change in ethanol procurement policy had been in one in the focus earlier in the year. Now this is expected to be one of which will create a near-term hiccup for the financials of this business going forward. But in H2, there are trends that we are seeing with the normalization and improvement in the financials with the ethanol blending program, which will lead to an improvement over here for the company going ahead. But again, coming back to Triveni Engineering, if you have to look at 6 months return, that has remained flat, while the 1 year, the company has seen about a 25% gain. If you have to look at the analyst recommendations, about 4 buy calls and 2 sell calls with an upside potential of 3.5%. So again, we will continue to watch out for reasons or fundamentals on why the sugar stocks are buzzing in trade today.
Thank you so much, Anushi, for those insights. And with that, viewers, we're completely out of time, but do stay tuned to NDTV Profit, India Market Close, coming up next.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Not a bad day if you're a bull and you're looking at what the markets have largely done per se. It's been steady. This could well have been the intraday line for the Nifty because we started off 0.5% higher and we are about 0.5% higher. There's been virtually no change. Small gyrations here and there, but the markets have largely stayed steady in the session today. Nifty Bank about 0.5% too. The broader markets started off well, nearly 1% for the small cap and about slightly less than 1% for the mid caps, and the mid caps are still there and the small caps are still there too. Frankly, it's been a day with less volatility. You have to look at it. I mean, just look at the intraday of any of the indices, be it the mid caps, be it the Nifty, be it the small cap, and they've largely stayed steady. So that's part one. It's been a steady day and a steady start to the week. As you can see, hardly any gyrations there. Now, get the heat map up on the screen. The components and the winners and losers, that has changed. So obviously, HDFC Bank was the sole culprit at the start of the trading day. It's still down about 1.5%. And NTPC has now joined those ranks, 2.5% lower for that one. So those two are the key culprits when it comes to the losing side. Sure, some of the commodity names, steel names, Tata Steel, JSW, etc. have pulled back, but nothing alarming. Then a rising tide, which has taken a lot of boats higher. So auto is active, BPCL, HPCL, IOC by virtue of oil prices coming off are active. There is strength in Tata Consumer ahead of the numbers day after tomorrow. There's strength in L&T and Ultratech on news for Ultratech for sure. And some of the pharma names too, the likes of Dr. Reddy's and Divi's have come back. But this is effectively the market rising in tandem and taking all stocks along with it. Not the case in the broader markets, wherein too the markets have risen, Tamanna, but a lot of stocks moving around on news and some of them correcting very sharply on news too.
Sharp corrections seen in some counters which have had negative news flow, Neeraj, or even poor results.
Yes.
And just to add to the point you were making about HDFC and Wipro, HDFC was expected to be better. People were happy with the numbers, brokerages were happy, stock is down. Wipro, the complete opposite, and stock has responded well. I would say the same also with a Persistent or a GSPL. Let me start with the GSPL in one of the stocks that should be on your radar this afternoon and has had quite a tough day, if I do say so myself, over 19% down. So it's started with the authority cutting their authorized tariffs to transport gas. And we've had an interesting conversation with Atul Tiwari on this, who's representing that authority who decides these tariffs. And the big question really is, how did the company have such a different and divergent assessment of what their operating expenditure was? The authority, of course, has a much lower one, nearly 50% lower, and which is why they have authorized quite a steep tariff cut. Downgrade by a host of agencies, of course, has resulted in what you're seeing with GSPL today, 19% down, continuing to hurt. I was talking about Persistent Systems. On the face of it, top line, bottom line, better than expectations, but in their con call, the management has guided for lower margins than the street was expecting. That stock is 10% down, really hurting. Vodafone FPO is the other one. Vodafone is the other one I would talk about. Third day of the FPO. Nearly 3 times subscribed, as we were flashing last on the screen. Quite a bit of interest from QIBs. The retail book is not yet quite full up, and we'll be asking our experts as well whether the Vodafone FPO is still giving you an opportunity there. Nevertheless, stock is about down 3.5%. On the upside, I'd like to point out a Sterling and Wilson, something we talked about in our trade setup this morning as well. 10% up now on the stock, and staged quite a turnaround. What the management is telling investors and analysts after the numbers are out is that they're expecting an order book of about 8,000 crore rupees. They've basically swung in the pendulum from EBITDA losses to EBITDA profits and better margins. So Sterling Wilson is doing well. Voltas, and we'll talk a little bit more in detail on Voltas as well through the show. Good UBS note on Voltas with an upside of 40% is what they see. They've set a target price of 1,800 rupees on a UBS. It's up about 6.5% now. And the other one that we've been tracking today would be Zomato. They've increased platform fees. You and I will be paying them. The increase by 25% from 4 rupees to 5 rupees. and the stock has, of course, responded well, up 2%. So if you've, I suppose, Neeraj, made money on Zomato stock today, you won't mind paying a little extra on that platform fee. And they've gone up consistently from 3 rupees to 4 rupees to now 5 rupees. So they're not shying away from doing that. Now it's on par with Swiggy, though, which is 5 rupees as well.
Yeah, well, and maybe this is just the start, and who knows what might happen to some of these platform fees as well. Restaurants may not be complaining too much because their businesses certainly have gone up as a result of this delivery pieces. But anyways, that's a conversation for another day. For now, let's talk about markets. Ruchit Jain, CMT lead research analyst at 5paisa Johnson right now to talk about the technicals and the derivatives as well. Ruchit, great having you. Thanks for taking the time out. Ruchit, I'm trying to understand, how do you think about today's move? Because it's largely been stuck at this 0.5% uptick for the Nifty and the Bank Nifty as well, despite HDFC Bank doing what it is doing. Is there some cue that you can take which will enable you to make a trade on either the Nifty or the Bank Nifty?
Yeah, hi, very good afternoon, Neeraj. So Neeraj, if you look at last 1.5 weeks move, initially we saw that very sharp decline from 22,750 to almost 21,750, which was in a span of just 6 trading sessions. And generally, whenever we see such down moves without any meaningful pullback move in between, the momentum readings goes in oversold zone. And that's what had happened on last Friday when we opened gap down. The RSI readings on the lower time frame charts were too oversold, which led to this bounce back move. Now the question is whether this is a resumption of the uptrend or just a pullback move. Now the data is not that optimistic as of now. If you look at the FIS data, before the start of this correction, they had around about 57-58% positions on the long side, but they have formed very aggressive short positions in this last 1 week of correction, where their long short ratio has now declined to 35% only from 57%. So I think only 35% long position, 65% of the positions on the short side. As of now, no signs of that short covering in spite of this pullback move that what we have seen. Of course, we need to see today's data, which will come in the evening. But for now, since because of these short positions, we are thinking that markets can go through some corrective phase in the near term, which could be a time-wise correction, if not price-wise correction. And markets usually stops this up move around the retracement levels. So we have completed the 50% retracement mark today of this entire 1,000 points correction, which we saw. That 50% levels was around 22,280. Right now we are trading around that 50% mark itself. Even if we surpass this, then we could see another 100 points up move, which would be 22,400, which would be 61.8% retracement. So I think it was a good trade to go long on the index on Friday, where we were oversold. But right now, today, after this 140 points up move, I think the risk reward ratio now is not that favorable to create fresh longs in the index. The good thing is that the small cap index, if you look, has not corrected much comparatively. Generally, whenever the market tends to correct, small cap stocks correct no more. But this time, the small cap stocks have shown a relative outperformance. The index is also in last 1 week was during last week was only 1% compared to 1.5 quarter to 2% in the Nifty index. So I think this is an indication that you might get good stock specific trades if you are a short term trader, but index should be traded when it comes around the support. Right now, if it has already seen a pullback move, we are around that 50% mark. Even 61.8% is just 100 points away. So that risk reward ratio is not great to create fresh long index. So we are advising to go trade with more of a stock specific approach here rather than taking any directional bet in the index.
Ruchit, good afternoon. Let's begin with your picks in this market. It's, I think, rewarded those who had some faith and patience on Friday. But what would be your top picks today, this afternoon?
So a couple of recommendations on the long side, but I would be more look for stocks which are a bit of low beta ones. One is a buy call in HUL. So a bit of underperformance has been seen in the stock in last few quarters. But if you look at right now, the stock price has already seen some good correction. Trading around the support, and there's some positive divergence in the RSI where the price has formed a lower low, but RSI has formed a higher low. So we are anticipating a pullback move in HUL in the near term. Short-term traders can go long over here as the risk reward ratio is favorable. Keep stop loss below 2150, potential targets around 2380 to 2400. And Raymond is the second pick, which is a breakout trade. On Friday's trading session itself, we witnessed a consolidation breakout, which was supported by very good volumes. So this should lead to a sustained up move in Raymond. So one can go long over here as well, with stop below 1930 for potential targets of 2240, followed by 2300.
All right, that's as far as Raymond is concerned. One of his picks, one of Richard's picks today. Pankaj Pandey also with us. He's head of research at ICICI Direct. Very good afternoon to you, Pankaj, and it's turning out to be a good afternoon indeed. I just wanted to start by getting your view on the Vodafone FPO. Finally subscribed about 3 times, which is not half bad for an FPO this size, for an issue this size. Your QIB interest was pretty decent. For those who still see an opportunity coming in, do you see worth it betting on a Vodafone, or would you prefer to do an Indus Tower play?
So hi, good afternoon. Thanks for having me. I think the challenge for us is that one of the key competitors is in our restricted list. So directly, indirectly, I wouldn't want to sort of comment on this because again, it would sort of imply some kind of a directional bias. So I'll sort of refrain from giving a comment on this particular question.
Understood. No issues, Pankaj. Just wondering, Ruchit, what do you think about Vodafone?
Technically, the trend is not much positive for Vodafone Idea. No, we have seen that in recent correction also that 14.5 was acting as a resistance. But on the lower side, good support is there around 11.5 range. So I think it's more into a consolidation phase. We need to see a breakout above 14.5 or 15 levels for any kind of sustainable rally in the stock. Otherwise, I think there would be some volatility. You would see some buying interest whenever the stock approaches that 11.5, around 11.5 range. And at that higher side around 14.5, you would see selling pressure again.
Okay. That's as far as the Vodafone story is concerned. But the stock of the day, and not for a very positive reason, but one way or the other, is Gujarat State Petronet. The stock has hit a lower circuit, and the reason's not far off to look at. Regulatory concerns now at 19.37% down. It's lost 73 rupees just today. So the regulatory board for the space has cut their pipeline transmission tariff by 47%. Why has this happened, and why has the stock reacted so negatively? Mihika is joining us with more.
Yes. So the Petroleum and Natural Gas Regulatory Board has cut the tariff of one of the key Gujarat pipeline networks of Gujarat State Petronet by 47%. Now the authorized tariff is at rupees 18.1 MMBTU versus 34 rupees previously, and this is also much lower than the 51 rupee tariff that GSPL had claimed. Now in terms of impact, while it could lead to lower end user prices for both household consumers as well as industrial consumers, it could put a pressure on Gujarat State Petronet's profits. Now, the reason why the difference between what was asked and what was actually authorized is because the Petroleum Natural Gas Board's assumptions when it comes to volumes, Capex and OPEX is very different. When you talk about the Capex, Gujarat State Petronet claimed a Capex of 3,400 crores, while the board only allowed 1,800 crores. In terms of volumes, in terms of future volumes, while the company assumed 26 million metric standard cubic meter per day volumes in the future, the board approved much higher, 22% higher at 31.7 MMS DMD. And then after this tariff hike was announced, all the brokerages did turn negative on the stock. Now we had Nomura, which downgraded the stock to a reduce from a buy previously at a target price of 320, which implies a 15% downside from the previous close. They've cut their FY25 and 26 EBITDA and EPS estimates. EBITDA estimates were cut by 37 and 42% respectively for FY25 and 26. And they did say, however, that the tariff would be renewed next fiscal if the actual volume show considerable variations from the board's assumptions. And then lastly, we had Kotak, which downgraded the stock rating to reduce to at a fair value of 360 rupees, which implies a 22% downside. They believe that a 20 to 30% tariff cut was due, but the actual tariff cut was much above expectations. And they've also cut their FY25 and 26 earnings estimates by 28 and 37% respectively. And they expect the return on capital employed to decline sharply to 11 to 12%.
All right, so that's the big downer for JSPL, which is why you're seeing that stock reacting so negatively. But to understand exactly what the issue is, we spoke to A.K. Tiwari, a member of the Petroleum and Natural Gas Regulatory Board earlier today, and we asked him about the mismatch in the expectations of GSPL when it comes to what their OPEX is going to cost, what their expenditure is going to cost, and what the authority sees. And that's one of the reasons why there has been a variance. What is the context of this? Listen in to what he said.
At present, I can say that there will not be any much variation, but it depends upon the scale. We have recently concluded the integrated tariff, so that we have already trued up. Based on the EIL capacity which are there and the other things, we will come up with public consultation and then we'll do. So I don't think, I can't commit that way.
Yeah.
But that will not be a variation.
So on an average or typically or ordinarily, you don't see such a big variation. Would that be safe to say?
Yeah.
All right, that's the PNGR, remember, and it has had some repercussions for GAIL as well. Okay, those are a few stocks at the start of the show. There are a clutch of others which we will talk about. We'll need to slip into a quick break, but up next we'll be joined by Mantesh Sabaran on the other side of the break as Vodafone Idea's FPO sees the full subscription. Talk about the impact of that in the moments from now. Stay tuned.
Hello everyone. I urge each one of you to exercise your right to vote. Your voice matters and all our votes shape our collective future. Let us make democracy stronger by going out and exercising our franchise. Jai Hind.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. Well, market's looking good and all eyes on Vodafone. So the FPO has been subscribed about 3.5x so far. This is as of Q3 today. But the retail subscription is about 61%. QIB seem to have shown the most interest, 8.93 times subscribed in this segment. Is the Vodafone FPO a good idea? Remember, the company is trying to raise about 18,000 crore rupees, no small feat, for a player that has long been just about surviving. Mahantesh Sabarat, independent expert, joining us now for his take. What would you advise to retail investors who are watching, Mahantesh, and who would still now possibly get an allotment in that category?
See, Vodafone is not a stock that will run away with great upside. Between the current market price and the available offer price, there seems to be not much of an difference for any retail investor to take the bite of the bullet. What essentially is required is once Vodafone uses up these 18,000 crores kind of amount, what is it that they will be able to do in terms of network expansion, growth in terms of subscriptions, 5G introductions, etc. will matter more than really anything. Mind you, the overall debt on the company is quite substantial, including the AGR dues.
Mahantesh, what Vodafone has said so far, what the company has said so far is that from these FPO proceeds, they'll use about 12,500 for network expansion, 5G, etc. Some goes towards the AGR dues, of course. Do you think that's the concern that you're seeing in the market and in the stock price today? Whether there is going to be enough gunpowder to actually get into that telecom battle?
I think Vodafone has been steadily, improving its financial conditions. For that matter, the telecom industry has been battling out well in terms of ARPUs. The key metric to look at is the ARPU metric for all the telecom companies, and we have seen there is a consistent rise in the ARPUs happening. With 5G coming in, there will be a jump up in terms of the overall ARPUs. Vodafone is not escaping that trend. It's not as if that the ARPUs of Airtel and Jio are rising and Vodafone is dipping. That's not the case. So from a fundamental direction, the improvement of financials is happening because of the ARPU improvements. And then you have this great infusion which helps them at least sustain growth ahead. Hitherto, Vodafone has been losing subscribers. But the recent phenomenon has been that there is the gross additions have now overtaken the subscribers leaving the network, basically attrition. So when you have the gross additions going up over the attrition numbers, they will start reversing the trend in terms of overall subscribers. So overall subscriber growth will come in, better network will be there, and there will be rise in ARPU. That tells me all three things put together, the financials of the company will improve. Now, whether they will be in a position to pay off those AGR dues, which are lumpy payments due next year onwards, that remains to be seen. But at least for the current time being, the company is doing really well in terms of the core financials, like any of the telecom players.
Okay. Mahantesh, just one quick question really. A lot of people arguing about whether Vodafone remains the better entity to bet on versus an Airtel or Jio. And one of the arguments is that the quantum of 2G subscribers, which will move to 4G in the case of Vodafone, much higher, and therefore the beta in ARPUs much better for Vodafone vis-a-vis the others. But there is a bloated equity to contend with as well. Looking at both of these, what becomes a better bet?
See, irrespective of the dilution that happens in a company which is already having a weak balance sheet, negative net worth, making losses, and having a huge debt overhang, the dilution factor doesn't really matter, because dilution factor comes into the picture only when you have a company which is healthy in its balance sheet, profitable, paying dividend. Then you start worrying why the upcoming dilution will actually make my share of profits lower as an investor. That's not the question which is uppermost in the mind of a Vodafone shareholder right now. What the thought Vodafone shareholder right now, is the company headed towards better financials? Will it become healthier as we go forward? Dilution doesn't matter in the interim. If that equity infusion overall helps support the balance sheet health, so be it, irrespective of the dilution.
All right, thank you for that, Mahantesh. Mahantesh there on the Vodafone stock overall, saying that too much of an upside is possibly not something that investors can hope for anytime soon. Having said that, it's off its losses of the day and down about 2% now. Day's low is at 12 rupees 10 paise. The FPO price will be out shortly, but remember the range was between 10 and 11 rupees. So anyway, a discount to current market price. That's the Vodafone story for you, but so much more happening in the markets today. And we'll come in a bit to detail of what's happening with the tech pack. But one stock that I really wanted Pankaj's view on is HDFC Bank. Now, Pankaj, we've been talking about how HDFC Bank numbers in Q4 were better than expected. It's a strong quarter usually, and seasonally supposed to be a strong quarter. Deposit growth, etc., was decent, but the stock has reacted fairly negatively. What would you do with an HDFC Bank right now?
So on HDFC Bank, we have marginally increased our target price from 1800 to 1850 at 2.4 times book value. Largely, our sense is that the NIM improvement is going to be sort of a bit slower. From 3.44 to 3.6 is what we are sort of looking over the next 15, 18 odd months. And I think overall growth parameters are going to be okay, but I think the excitement element is sort of missing, and which is why probably the stock is not reacting the way one would have expected. And I think banking in general has taken a sort of a backseat, largely because of the strength of US data which is coming out, and that is sort of pushing down the expectation of further rate cuts, and which is a sort of a macro challenge for even domestically also in terms of the expectation of rate cuts. So I think a combination of these is sort of weighing on the stock. Otherwise, I think our sense is that last quarter was steady, and I think the next 1 or 2 years, the company is expected to sort of deliver a steady set of numbers. No major challenges on the asset quality side, and whatever healthy provisioning they have done, I think no major sort of negatives have sort of come out. So no major negatives, but yes, excitement also is a bit missing.
And Ruchit, is there any value right now in HDFC Bank? Do you see any upside on the charts? I mean, I've seen all kinds of target prices today, one at even 2100 rupees, I think, one of the brokerages. So there is that optimism there, but what are the charts telling you?
During last quarterly results, when we witnessed that correction, the stock had corrected very sharply from about 1700, 1650 zone to 1350 kind of levels. But if you post that last 1.5 months, we have seen a pullback move. But this seems that the price-wise corrective phase is over. But it might go through some more time-wise corrective phase in short to medium term. So not expecting any significant run-up rally in HDFC Bank immediately in next few weeks or couple of months. But I think the stock would tend to trade within the range of 1600 to 1400, 1450 on the lower side. So in right now it's trading just around the center of this entire range. So in case if we get any kind of dips towards that lower end of the range, 1450, 1400, then I think that could be the range where one should look for buying opportunities, where the risk reward ratio would turn favorable again.
1400 is where the buying opportunity exists today. HDFC Bank, one of the top losers, and actually because of that, I mean, if you didn't have a HDFC Bank sulking today, you might have seen an even greater upside on the Nifty. NTPC, HDFC Bank, top losers on the Nifty. Very quick break. On the other side, we bring you a preview of the big numbers which are out after market hours today. Reliance Industries, and also all about the IT space. Remember, you have a reaction to Persistent, Wipro, and we get you a comparison between Infosys and TCS. All of that on the other side.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
or
Right, back with India market close. Some stocks which should be highlighted by virtue of the move that they're making intraday. So Phoenix Mills, and let's get the intradays of each of these on the screen. Phoenix Mills has just come off quite significantly from the intraday high that it made. It's just 0.5%, but it's trading at the lowest point of the day. Birla Corp should come up on your screen as well. The intraday of Birla Corp, and 3.5% lower. Again, a stock which is trading at the lowest point of the day. Similarly for Cyient, which was actually doing okay, but not quite now, and trading at the low point of the day. And Persistent Systems, which has been a big newsmaker today. You'll hear from the management tomorrow, of course, but 9.5% lower. It's a case of a stock which has done so well and priced so much to perfection that disappointments, if any, tend to bring about that. And I think the margin, flattish margin guidance, maybe the guidance around FY25, and we'll talk about that a bit later on, putting paid. On the flip side, just one stock, Lloyds Engineering, just want to mark that. And let's look at the move today in Lloyds. It's 18% higher, 64 and counting. Big mover, really, it's Lloyds Engineering. You heard from the management a couple of weeks back on the channel about what their plans are and what could happen. This is a serious move in Lloyds Engineering on very high volumes, I might add. Richard, very quickly, Lloyds Engineering or Lloyds Metal.
I think Lloyds Engineering certainly looks attractive because the kind of volumes that the stock is seeing, even after the significant uptrend that we have seen over the last few years, but still no signs of reversal. RSI post the corrective phase has again given a positive crossover. So according to retracements, we should see levels around 73, 74 in the short term.
Okay, well, we'll ask Pankaj about Reliance, but before we go to Pankaj about Reliance, let's get in my colleague Mihika, who tells us what's to be anticipated, because the expectation is that the profit will rise about 14%. Mihika, what are the key monitorables?
Yes, so I talk on a consolidated quarter-on-quarter basis. Now, revenue and profit is expected to rise. However, the operating margins could take a hit. Now, revenue and profit would grow on behalf of strong performance across all the three segments, which is oil and gas, retail, and telecom. Now, according to Bloomberg estimates, revenues may rise 5%. EBITDA, however, may fall 4.5% on a sequential basis, which could lead to a 180 basis points margin contraction. However, net profit may rise 14% to 19,727 crores. When you look at the segment-wise expectations, first we talk about the oil to chemicals segment, where Morgan Stanley expects the EBITDA to reach the peak in Q4, and this is the highest since June 2022. And this peak EBITDA comes despite this still sluggish margins in the chemical segment. And they also expect the gross refining margins to rise above the $12 per barrel mark, and this is despite the Russian crude discounts that India enjoys. When you talk about Reliance Jio, they expect strong numbers which are likely to be led by higher subscription additions as well as improved average revenue per user. Now, UBS expects strong net subscription additions at 10 million, and they expect a stable average revenue per user at 183 rupees per month. And lastly, it's the retail segment where a boost in revenue and operating numbers, which will marginally and largely be driven by the store expansions. Higher footfall will also be a factor that will contribute to better performance. And according to UBS, they expect margins to rise 7% quarter on quarter, and they expect revenue to rise 22% year on year and 1% sequentially, and this will mainly be driven due to the store expansions that have been seen in the last 2 years.
Okay, thanks for that, Mihika. Pankaj, can results be a mover for Reliance Industries? It's not done too badly, shy of all-time highs, but can it do more?
So, Neeraj, I would sort of suspect that because the overall expectation is that the margin pressure, especially in oil to chemical segment, is going to be there for some period of time. Unless that trend sort of reverses, probably things may not really sort of change much. I think potential trigger going forward could be another trigger, could be a positive trigger, could be if we get to see tariff hikes on the telecom side. So I think that could be a trigger, but I think that is unlikely to happen till elections. So I think post-election is what one can probably anticipate something.
Okay, so nothing much post-elections. Ruchit, wanted to know your take on RIL. Any position you take ahead of the numbers?
I think the broader trend still remains positive. We have seen last 2 or 3 weeks, the stock has gone through some time-wise correction, but none of the important short-term supports have been breached. Also, the price declines in between which we have not seen any kind of volume-based selling coming in the stock. So it just seems to be a time-wise correction within an uptrend. So better to stay with the trend if one has to take any kind of fresh positions in this. 2800 positionally becomes a very strong support for the stock. Since the month of November, the stock has not breached its 100-day exponential moving average, which is right now around 2800. So if any existing point long position, they should continue to ride this trend till it is above that support. Even fresh longs could be done selectively with limited quantity with same stop loss placed below 2800.
So selective fresh longs on our RIL. Of course, we'll see numbers later this evening. Now, talking about the results that we've been seeing so far, a bit of focus is warranted on the IT space. And we saw some interesting trends. Persistent Systems, for example, on the face of it, good numbers, beat on top line and bottom line. But post a management call, the stock has been showing heaps of pain, down about 10% right now. Likewise for Wipro, where it seemed very negative, but stock's doing okay. So what's going on? What is bothering investors? And breaking down all of these key results and more is Rucha joining us now. She's tracking, of course, IT for NDTV Profit. Rucha, hi, great to have you on. Let's start with Persistent. So what was it in this con call that has spoke to investors?
So, as we all know, Persistent reported its results last night, and revenue and profit was up. But what really upset investors is the margin. The company reported a margin at 14.5% versus estimate of 19%. even above that, in the commentary, management mentioned that it will have this kind of margin at this levels even in the coming year at 14.5%, which is lowest in last 8 quarters. Now this is because the travel costs were higher in the current quarter, and they have a lot of lateral hires as the fresher which they had already deployed. All the bench were utilized in the second quarter in itself. So this flat EBIT guidance is what has upset the street, and I think that is why
it's being described as a freeze, as a guidance freeze, because
exactly.
It's just exactly the same.
Yes, it is a freeze for the next year. However, the management also mentioned that there will be a 200 to 300 bips increase in the margin over the next 3 years. So this essentially means that the next year will be muted in terms of margin, but the company has to pick up in the next 2 years, that is FY26 and 27. So this is the take from the earnings call which happened this morning.
Okay. Sorry, did I hear you say that the margin expectation was 19%? EBIT margin expectation?
Correct.
Was
yes.
19%?
Yes, and it came out as 14.5%.
Okay. Okay. So that's the disappointment for Persistent.
Yes. Yes.
Okay. The one thing that you would want to know from the management is the reason why the margins are being guided to flattish levels.
Yes.
Okay,
yes.
cool. Okay. So that's one. Wipro, on the other hand, as Tamanna was saying, while the results may have been whatever, the stock has come out smelling like roses. Why so?
So Wipro, I think that the street largely expected a negative revenue growth, but the company has reported a flat revenue growth. I think that can be a small reason why the stock is doing well today. And apart from that, people are really excited about what the new CEO Srinivas Pallia has to say, right? So during the call, he mentioned about the 5 key focus areas, and that hovers around the large deal wins and, you know, strengthening relationship with clients, and then focusing on industry specific such as BFSI, which was again strong for the company.
But nothing new, na?
No, nothing new. The guidance is again muted.
So all the management commentary is pretty much the same with, I would say, AI ka tadka. Because now everything is about AI. But is this in a sense a honeymoon period for Srinivas Pallia? He's just come on board, expected that he will do new things, and maybe stability because he's an insider. Is the street basically reflecting confidence in now maybe some stability in this company?
So I think people are giving him that opportunity which people didn't give to Thierry, I think, right? That people are waiting, you know, what can be new that this CEO will bring, which Thierry didn't. So I think people are just waiting and, you know, just waiting for what this CEO will do for the upcoming quarter. So it's just, you know, maybe no positive, no negative is also a positive. So I think that is what is playing out for the stock as of now.
So that's the story with Persistent and Wipro, but you know, we're also still breaking down what's happening with Infosys and TCS, and you have an interesting take on how you compare the two. Tell us about that.
Sure. So these were the 2 major clients which you know, kicked off with the IT earnings this season. So firstly, we'll look at the FY24 performance on a consolidated YOY basis, wherein TCS clearly outperformed Infosys in terms of revenue, EBIT and net profit as well. But here are a few points which might turn out to be in favor of Infosys going ahead. We'll move on to discretionary spends. So discretionary spends, as we all know, is under pressure across the industry. But what might work out for Infosys is that it has higher exposure to such spends than TCS. So in case there is a revival in discretionary spends, Infosys will have a more room to go up as compared to TCS. And in terms of valuations as well, Infosys is trading at a lower than its 5-year median PE at around 22, while TCS is near its 5-year average PE. This again states that Infosys is a cheaper stock than TCS. Moving on to looking at the 1-year stock performance of both the companies, TCS is largely at par with Nifty IT. However, Infosys has underperformed by 10%. This again means more upside than TCS. Now, what the brokerages are expecting across the street? For TCS, 58% of them have a buy, while 66% have a buy for Infosys. In terms of sell rating, 21% have a sell rating for TCS and 19% have for Infosys, and the balance have a hold recommendation. And lastly, in terms of upside, the consensus target price implies a 9% upside for TCS and a 14%, almost double double the upside which TCS has. So I think the street themselves are very much bullish on Infosys as compared to TCS.
Thanks a lot for that, Rucha. Clearly showing in the way some of the IT majors are behaving post numbers versus others. Though for both of these names, post the results, the reactions were muted to marginally off, but Infosys currently about 1.5% higher. Pankaj, there are no compulsions for a retail investor to buy between a TCS and an Infosys, really. You can go out and buy all or none of the names or options out there. Is there an IT option that you're buying into?
So Neeraj, between say TCS and Infosys, we are valued at 23 times. So we have got a target price of 1650. So it's a sort of a buy according to us. I think TCS, if we sort of even if give a premium compared to Infosys, I think the TCS even at 27 times is offering an upside of only 9 to 10 odd percent. So which is why that makes the stock hold. And I think overall, when you sort of look at the results which have sort of come about, I think persistent, I mean, even if you sort of look at current prices, it's still trading at 35, 36 times 2 year forward. So even if you were to sort of bring the multiple down because growth rate is expected to be lower from say 14, 15 odd percent to 12, 13 odd percent, I think at best it can sort of become a hold, and that is where the challenge lies for stocks, which is sort of priced well. But Wipro, I think probably what is sort of getting picked up, or what we are sort of looking to sort of explore more, give more weightage is especially
Have you been struggling with your personal finances? You're not alone. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
investment rate is on the verge of breaking out of the previous high of around 34% of GDP. Which was made in around 2011-12, and this time with better ICOR, so which is the productivity of capital is improving, and that I can substantiate that macro number by the ROE of the Nifty, which is getting into value creation zone of more than 15%. Now, when you talk about an investment rate of 30% plus, which you're effectively talking about more than 100 trillion rupees worth of Capex, because the GDP is around 300 trillion. So when you break it up, what does government contribute? Nothing. I mean, it's just 8-9 trillion from the center and 7-8 trillion by the state. So it's 15-16 trillion. So where is the rest, which makes up more than 100 trillion coming from? That's what I mean. If you look at the GDP print every quarter, it is showing that the gross fixed capital formation is leading GDP growth, which means that a large part of the GFCF, which is made up by real estate investments by households and corporate capex, must be moving. What we know anecdotally and from data is that real estate cycle is almost in the second year of its expansion, while the center was doing pretty well. Now states have started to contribute from this year, and they're growing faster, I think, than the center. And corporates, I think, are just about starting to pick up, in my view. Right. So if you look at the evolution of this investment cycle this time around, the first move was made by the center in terms of expanding its investment. Real estate followed on its own in terms of animal spirits somehow rose and people started buying houses, and it's continuing. Typically, these cycles last from 5 to 10 years. And now states, because their revenues have started rising, they're getting better stamp duty, GST and things like, they have started contributing. Corporates, I think, have just started to bottom out and started to rise. So there is this biggest lift may come from the corporate side in India.
Got it. Okay. Well, the other aspect, of course, is what's happening to specific pockets and, by virtue of this Capex, what PSUs have done. Actually, speaking of PSUs, just before I get to Vinod on that, can I get in my colleague Mihika? Mihika joins in right now to talk about a big development that's happened in terms of a policy decision really. And it may be an isolated instance, but Mega, GSPL is a stock firmly in focus today for all the wrong reasons.
Yes. So they have gotten a 47% tariff cut from the Petroleum and Natural Gas Board, and this is for their key high-pressure pipeline network in Gujarat. Now, the authorized tariff is at 18.1 rupees per MMBTU versus 34 rupees earlier, and this is also lower than the 51 rupee tariff that was originally sought by Gujarat state. Now, in terms of impact, while consumers could see lower prices both on households and industrials, for Gujarat State Petroleum, it puts a pressure on their revenue and their profits, as because this is a cut on the price they can charge to transport the gas via their pipeline. Now, there were many reasons for why the Petroleum and Natural Gas Board did cut the tariffs so drastically. One is higher volumes. Their volume assumptions, while Gujarat State Petronet assumed 26 million metric standard cubic meter of gas per day, the board assumed 31.7. In terms of Capex, their Capex assumption stands much lower. Now, Gujarat State Petronet claimed a Capex of 3,400, while the board considered 1,800 crores. And in terms of low operating Capex, the PNGRB approved 2,600 crores of Capex, operating Capex, while the company stated 5,000 crores. We also had certain brokerages that did go negative in terms of rating and their price targets. We had Nomura, which downgraded Gujarat State Petronet to a reduce at a 320 rupee target, which implies a 15% downside to the previous close. They've cut FY25 and 26 EBITDA estimates by 37 and 42%. And last we had Kotak, which also reduced its rating to a reduce at a target price of 360 rupees, which is a 22% downside.
Got it. Mika, thanks a lot for that. And that clearly makes GSPL the stock of the day today. And Vinod, PSUs seem to have shrugged off this cloak of what could happen if there is an action X or action Y taken. Periodically, some regulatory action on PSUs or private companies, but impacting a lot of PSUs companies comes to the fore. Just trying to understand, for gas companies or for PSUs in general, are you constructive or would you approach them with caution now that they are no longer at dirt cheap valuations?
So if you look at broader economic cycles, what we observed is that, see, PSUs, why are they performing? You have to understand it is coming from the way the color of the economic expansion is happening. As I said, investment rate is leading the GDP growth. So what happens in this environment is that companies which grow by growing their balance sheets and investing, they do well. And bulk of the PSUs are in the capital intensive sector. So what will happen is, as the investment rate is expanding with better productivity of capital, generally these companies will show better than expected growth. And that is what the market cares about. I mean, one or two instances where because of regulatory reasons, you will have cut in estimates and things like that. What the investor has to be cognizant of is that stocks perform wherever there is growth surprise, So we continue to believe that in the way the economic expansion is happening, bulk of the companies which are related to the investment side of the economy, they will continue to show better than expected growth in general. I mean, you'll have cases where regulatory concerns will dilute the picture, but in general, that's the thing we think will show up. In fact, disappointment is continuously coming from the outperformance of the previous cycle, which is the defensive sectors, be it IT or even FMCG. And in general, FMCG is getting into a situation where the broad-based consumption, the low-end rural consumption and things like that continue to struggle. While the valuations, if you see, if I were to put a PEG ratio, PE to G ratio, they look pretty expensive. So do IT, which we have been saying. Obviously, at some point, they'll get into a good zone and growth will kind of bottom out and start looking better. But for now, the growth is firmly on the side of the cyclicals, which, as I said, FPIs, DIIs, they continue to be positive on, continue to buy these stocks.
Well, what's the view on IT? Actually on IT, maybe what we do is, just take a quick break, because we need to take a scheduled commercial break. Just take a very quick break, come back, talk about IT. In fact, maybe try and get in my colleague Rucha to just make a quick comparison as well. But talk to Vinod Karki about IT, and then talk to him at length about cyclicals. Where is it that he finds favor? Stay tuned. We'll be right back.
Presented by Patanjali Kesh Kanti Oil and Shampoo, Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right, some
Back with Talking Point right here on NDTV Profit. Our guest Vinod Karki was talking about IT. Let me just very quickly get my colleague Rucha to talk about there are three IT majors that have come out, but the two which give a guidance of sorts, TCS and Infi, and what's been the standout there, and then we talk to Vinod about the valuations. Rucha.
Thanks, Neeraj. So quickly comparing TCS and Infosys, number one, in terms of FY24 performance on a consolidated YOY basis, TCS has clearly outperformed Infosys. However, in terms of discretionary spends, yes, across the industry, discretionary spends are under pressure, but Infosys has a higher share of revenue coming from discretionary spends, which naturally means that in case there's a revival in such discretionary spends, Infosys will have more upside than TCS. Now, in terms of valuations, TCS is trading above its 5-year average median PE, while Infosys is clearly trading lower, which again means that there is more room to for Infosys to go up. Now, in terms of 1-year stock performance, TCS is at par with Nifty IT. However, Infosys has underperformed Nifty IT. In terms of brokerage views, 66% of the brokers on the street have a buy recommendation on Infosys, while for TCS only 58% of them have a buy recommendation. In terms of sell recommendation, 19% have a sell recommendation on Infosys, while 21% have a sell recommendation on TCS, which clearly means that the street is more bullish for Infosys as compared to TCS. And lastly, in terms of upside, the street is expecting around 9% upside for TCS. However, for Infosys, this is at 14%.
Okay, Rucha. Thanks for that. For people who are compulsive between the two, well, this is a very important set of points to watch out for. But Vinod Karki, before the break, told us about how IT may not necessarily be on the minds of the investors currently. Vinod, I'm just asking you, I heard you say that at some point of times, it could get into a buy zone. They're not in a buy zone currently, according to you.
See, the valuations for any company, in my view, are triggered by three factors. One is, in the near term, how are the earnings upgrade, downgrade happening? So clearly there is no question that there is any sign of any upgrade over there. Second is you give a benefit of doubt to long-term growth prospects, basically. So you say, okay, in the short term you have some pain, but long-term prospects are brilliant. And so, but there's a question of this: what AI can do to tech. The the IT services companies especially. Obviously, tech as a sector will only flourish in an AI environment. But currently, the way our companies are working, there is a bit of question mark, which several people have talked about, experts, industry experts, about is there a disruption coming from AI towards such companies? So there is some amount of doubt about the long term also. But the third important thing which is to be noted is that contrary to earlier times, which is pre-COVID and after COVID for some time, we have moved away from ultra low interest rates in the developed markets, which used to keep such companies, the defensives, long-term growth companies, long-term prospect companies at higher valuation. People are now realizing that the US interest rates are going to be higher for longer. So from all this perspective, I don't see any, trigger. Either, let's say you make a case that, okay, from a long-term perspective, because AI is coming and things like that, it's going to be high growth for these companies. In the short term, we are having some problem. Or you say interest rates are going to go down, and therefore these, where you extrapolate earnings into a long term, the long-term growth value keeps rising. Or in the short term, you have some kind of upgrade, which you are seeing in the cyclicals. Obviously, cyclicals is obviously facing these things. Basically, their short-term outlook is improving as we speak. Obviously, their valuation will get impacted by higher rates, but long-term growth can be anybody's guess. So at least one thing is moving for them, which is near-term growth outlook. So we don't see that in IT right now, and valuations are at higher levels. The 5-year average is kind of a misnomer because post-COVID there was a big spike in the multiple. Pre-COVID, I think it was not at these levels. So you have to keep these things in mind.
Yeah, that's an important point. 5-year averages might actually become a bit of a misnomer. But speaking of valuations, Vinod, cyclicals are seeing buying, there is earnings growth, etc. Our valuations started to creep up. I look at a clutch of these cap good names, for example, and the valuation seems sky high.
Yeah, so that is the challenge. So you see, you have to look at from a PEG ratio perspective. If you are having higher PE, then you better have higher growth. That is the only way stock can kind of, support. So let's say something like an L&T, just an example. Let's say it is trading at something around 30 PE, but it gives, let's say, 25% earnings. So you are at a PEG ratio of just above 1, right? But you have something like a technology company, an IT services company, which is at 25 PE. Growth is it is a single digit or something like that. Then the PEG ratio is more than twice, basically. So that's the thing. But now, if some of these capital goods companies are 60, 70 PE, then it becomes very difficult to kind of go out and buy them aggressively. So I think that is the challenge. You'll find lesser and lesser high quality companies in this space where growth is picking up. But you should get P of around 25, 30, that kind of a thing, because growth will be in their 20s, the way the GDP is expanding. So that's the work of the investor, to find these companies which are around 25, 30 times or around that kind of a ballpark, and showing you 15, 20%, 20, 30% kind of earnings growth.
Vinod,
with positive surprise.
Right. Vinod, we are out of time completely, but quick 30-second answer if you can. Would you therefore believe that some of these price to perfection MNC cap good names could actually correct despite ongoing capex because of valuations? Quick 30 seconds.
Yeah. So it is very simple in my mind. So suppose you are at 60p, right? And if you get earnings surprise, then market can keep you at 60p and your earnings space would have expanded by 20%. So you can still expand. So the question is, the valuation contraction happens when you get a miss.
Got it. Okay.
Like IT is, yeah. So that's a very simple thing. So these high valuations can be maintained.
Okay. High valuations can be maintained, but if there is a miss, then some of these expensive stocks could correct very, very swiftly as well. So bear that in mind as you look at investing into some of these. Vinod Karke, always lovely talking to you. Today was no different. Thanks for taking the time out.
Thank you.
And that's the view from on today's Talking Point, viewers. Thanks so much for tuning in today.
Presented by Patanjali Kesh Kanti Oil and Shampoo, Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with
Benchmarks gain for the second straight day as the market extends Friday's relief rally on the back of some respite in geopolitical tensions. ICICI Bank, L&T and Infosys lead the rally. Yes Bank in talks to bring new international investors via a majority stake sale. Sources say Emirates, NBD, Mitsubishi UFJ Financial Group and Sumitomo Mitsui Banking Corp are the likely frontrunners. Bankruptcy proceedings start against Z Chairman Subhash Chandra as NCLT accepts the Indiabulls application. Vodafone Idea FPO oversubscribed 6.2 to 4 times and retail subscription at 0.8 to 2 times as on 3:45 p.m. Repolling held at 11 polling stations in Inner Manipur Lok Sabha constituency after incidences of firing, intimidation, destruction of EVMs at some polling booths and allegations of booth capturing were reported on Friday. D. Gukesh becomes the youngest player to win candidates chess tournament, holds USA's Hikaru Nakamura to a draw in the final round. Hello and welcome. You're watching The Reporter on NDTV Profit, and as always, the show aims to bring to you market headlines along with national and international news. But before we move on with the show, it's time to see how the markets performed. My colleague Neeraj Shah joins us to share all the intraday action. Neeraj, over to you.
Solid day for the markets. It's a great start to the week, and the large caps too participated towards the end. They were up 0.5%. They were ended about 1% higher. So very strong intraday move towards the close of trade. Banks participated. HDFC Bank reduced some of the losses, and the mid caps and the small caps were up about 1% or slightly more than that. In the case of the small caps, slightly more than 1%. So good going there. Bring up the heat map for the Nifty, and you will see broad participation from a BPCL to a Tata Consumer to an Eicher to an L&T to a Shriram Finance. You had everything from FMCG to auto to cap goods and construction to finance doing very well for themselves. Reliance ahead of the results was in the green. IT participated today. The only thing which was in the red, I mean aside of NTPC of course which was down 2%, was HDFC Bank, the top contributor on the losing side. So this is as far as the Nifty goes. The broader end of the spectrum had even more pronounced moves, and some newsmakers had some terrific impact. So bring up the contributors list and you will see this. So Tejas ahead of the numbers, up 17%. Sterling Wilson after their con call was up about 10%. GSFC gained about 8%, UBI about 7%, and KEC about 6%. But on the flip side, Gujarat State Petronet, because of the ruling from PNGRB, down 19%, persistent on the margin concerns, down about 10%. There was weakness in Anupam Rasayan, E-Clerks, as well as Brigade. So some of these stocks which have run well, particularly Brigade in the last few days, also came off. And Midcap IT, I think, by virtue of what Persistent did, was under a bit of pressure. But a lot of stocks flew around in trade. Some newsmakers, there is an NDTV Profit exclusive that Patel Engineering might launch a QIP soon, and that stock was up about 6% as well, and ended as one of the key calls from ICICI Direct. So watch out for that one too in trade in the next few days, and watch out for some of the result makers. We're going to see results from Piccadilly Agro by end of close of trade, as well as Tejas Networks, and I think the street will be watching out to know what happens with Reliance, Piccadilly, Tejas, and a few others in the session tomorrow morning.
And in light of the general elections, the RBI has sent a letter to non-payment bank system operators or PSOs to monitor high-value or suspicious transactions via electronic modes of payment. Now, in the letter that's dated April 15th, the RBI stated that various modes of electronic payments can be used to transfer money to influence voters or to fund participants in the ongoing Lok Sabha elections. This development comes after the Election Commission of India raised similar concerns and recommended taking action if necessary. Moving on, the National Company Law Tribunal has accepted Indiabulls' personal insolvency plea against Zee chairman Subhash Chandra. My colleague Charu Singh joins us with a detailed report on that. Charu, over to you.
Hi, Pallavi. So, the National Company Law Tribunal in New Delhi has admitted Indiabulls Housing Finance's plea, insolvency plea against the Entertainment Enterprises Chairman Emeritus Subhash Chandra. This was a long drawn litigation which started way back in 2022. However, a decision is coming only now because there was some halt in the hearings because of challenges to some legal provisions. So let's dive into the case head first. What happened was that a personal guarantee was given by Chandra in relation to a loan that was given to Wipro Infracon Private Limited. The loan amount was 170 crore. This loan defaulted, after which the proceedings were initiated by against Chandra because of the personal guarantee that he provided. Now, what happened was that in 2019, there were some rules in IBC that said that these insolvency cases can be filed against, personal guarantors as well by the resolution professionals. Now, what happened was that this was challenged in Supreme Court around the same time, and Supreme Court halted all such proceedings in different tribunals. And in November 2023, a Supreme Court ruling came which allowed such cases to take place and allowed tribunals to hear these cases once again, because of which NCLT again started hearing this case. Now, because of this default of 170 crore rupees loan, this case was filed, and now the NCLT has itself admitted this insolvency plea that was filed by the Indiabulls. So that's all we know for now. Let's see what happens next in this case.
Thanks a lot for that, Charu. Now let's shift focus to some sports news. D. Gukesh scripts history by becoming the youngest ever world chess champion contender after he drew his final round encounter with second seed Hikaru Nakamura of the United States. Now in this process, Gukesh became the second Indian after Vishwanathan Anand to qualify for the world title match. He will take on the reigning champion Ding Liren of China. NDTV spoke exclusively to the star champion. Let's listen to what he has to say about achieving the milestone.
From the start, I knew this was going to be a high-pressure event. The candidates is one of the most challenging events in chess, and I was very much ready for the pressure, and I think throughout the event I handled it very well, and I managed to stay in good spirits. So I'm quite happy about how things are.
You're also the youngest. You're also the youngest to achieve this feat. You're only the second Indian after Vishwanathan Anand. What does this feat really mean to you and to Indian chess in general?
It means a lot to me. I've always dreamt to be play the world championship and win the world championship. And this was a huge step towards achieving the dream. So, I've seen myself in my dreams win the world championship a lot of times. So I'm happy that it came true.
And Vodafone Idea's FPO has been fully subscribed on day 3. My colleague Smriti Chaudhary joins us with more details about this FPO and the subscription. Smriti, over to you. Yes, Vodafone Idea FPO is fully subscribed now, and we've seen a good demand in terms of how QIBs have bid in this FPO. You look at the QIB demand, it's subscribed over 17.5 times. You look at NII, non-institutional investors, they have subscribed four times approximately. However, the undersubscription still lies in the retail segment. That's still subscribed about 85% of the retail portion. So there seems to be clearly lesser demand in retail as compared to QIBs and NIIs. But this subscription essentially means that the FPO is through. They have gotten the minimum demand that was required for the FPO to sail through. So that's an important point. However, the issue price is yet to be decided. The board is set to meet today and will approve the issue price for the FPO. The price range is 10 rupees to 11 rupees. The anchors had bid at 11 rupees a piece. Now, Vodafone Idea FPO had mobbed up about 5,400 crore, which is 30% of the 18,000 crore FPO. Also, the maximum limit that can be raised through anchors, and that's fulfilled. So we'll see what the issue price is, and we'll bring you more updates on that. That it's time to slip into a short break, but stay tuned. On the other side, we discuss Ola's recently announced IPO plans.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. You know, we are the, in many ways, we actually are the generation which is going to build the country. You know, our parents spent their whole life building roti, kapda, makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which
Welcome back. You're watching The Reporter on NDTV Profit. Yes Bank is planning to bring in new international investors. Sources told NDTV Profit that investors will be brought in via a majority stake sale. Pragati Oberoi joins us with more details on this. Pragati, who are the front runners in the stake sale?
There's some sort of conversation happening there where international investors want to come in and buy some stake or rather majority stake in Yes Bank. So what we have gathered so far is that Yes Bank in fact is looking to bring in new investors because whichever investors are there right now, some of them might be eyeing an exit here. So far Yes Bank is just in talks with the international investors. We are getting a sense that they're not interested in having domestic investors. They are just looking at the international investors in order to have their stake given to them. Next, they're also saying that three main investors are currently as the front runners and they have submitted their preliminary expression of interest, and these are Emirates NBD, Mitsubishi UFG, that is the MUFG group, and the Sumitomo Mitsui Banking Corp. These three are likely to be in the race to acquire a majority stake in Yes Bank. Now, what the understanding that we are getting is that so far only these three are standing as the front runners and only the preliminary expression of interest has been submitted. The final bids are yet to be awaited, and they will only approach the RBI once things are more finalized. But yes, what we are getting the sense is that once these investors or one of these investors comes on board, the transaction may lead to State Bank of India exiting Yes Bank. So far, as per our knowledge, State Bank of India holds about 26.13% stake in Yes Bank. So if either of these investors, international investors, come in, that could potentially lead to an exit of State Bank of India from Yes Bank. That's all that we are gathering so far. We'll come back to you with more updates as and when we have them.
Thank you so much for that, Pragati. And as she's mentioned, we will come back to you with more updates on that. But now, moving to an update from the FMCG space. After the Singapore Food Agency, Hong Kong's Centre of Food and Safety has banned the sale of popular food spices produced by MDH and by Everest. Now, this ban comes after alleged detection of carcinogenic pesticide ethylene oxide. Singapore has recalled Everest fish curry masala last week after ethylene oxide was found beyond permissible limits. Hong Kong's Centre of Food and Safety, through its surveillance programs, discovered ethylene oxide in MDH's 3 spices: Madras curry powder, sambar masala powder, and the curry powder. And moving on, food delivery platform Zomato has increased its customer fees by 25% in select cities. With this, the platform fee now stands at 5 rupees per order. My colleague Rishabh Bhatnagar joins us with more details on that. Rishabh?
What we're seeing from Zomato is a very, very phased hike in the platform fee that they've been levying from users. Now, this started sometime in 2023, and now coming up to 2024 April, it has been hiked to about 5 rupees per order. Now, what we're seeing also is that Zomato has steadily increased the number of orders it delivers. So as of FY23, its CEO, Rakesh Ranjan, food delivery CEO, did inform that they delivered about 65 crore orders. Now, if one were to assume a standard rupee 1 per order hike in the platform fee. That's an additional 65 crore rupees that Zomato is making for the FY. So that is substantial. And going ahead, we have commentary from Elara Capital, who maintain that Zomato could levy about an 8 to 10 rupee fee per order, and that could again lead to a very, very strong growth in terms of the revenue and at the operational profitability level. What we're also seeing is that this fee could be very, very important for Zomato, because they do see some negative impact with the gold program that they have that does offer zero delivery charges. What we're also not very clear on is which cities this sort of fees is being levied on. So it could be only very select metro cities, top metro cities that are seeing this, and not the other tier 2 or tier 3 towns where Zomato also operates. Coming on to competition, Swiggy also, last we checked, about a 5 rupee fee that they also levy per order. And this is also in line with what other quick commerce players are also doing in terms of platform fees. So a Zepto or a Blinkit, they all now have started levying a very small 1 to 2 rupee fee per order. So this is the larger trend that we're also seeing in the quick commerce and the food delivery segment.
All right, and green financing markets in India and abroad has not quite picked up. Deloitte's global financial services leader Neil Bowman spoke to NDTV Profit about some of the challenges. He advised senior executives from the financial industry to be adventurous, bold, and to not be gun-shy in their efforts to reduce carbon footprint.
I think it's just complicated because it's massive global change at a scale, and if you're running a financial institution, understanding how to, as I said, calibrate how you do that it's just hard, right? It's going to take time to go through a process of experimentation and understanding, how this all works out. And let's just be honest, influencing customer behavior is hard. Yeah. And everyone around the world is learning as consumers. You and I are learning around what this means. We're learning to calibrate our beliefs around the future we want for our children and how we want to live day to day. And there's, as you point out, there is rather significant asymmetry between different economies that have different start points around, their carbon footprint and the complexity, the capital needed, and the change shock with shifting to that, the global south that's much often talked about, for example. So I think it's just really hard and it's complicated, and unfortunately it's going to take some time to get some patterns around that.
And let's shift focus to some political buzz in the country. BJP is set to open its account in the Lok Sabha polls even before counting, after the candidate wins Gujarat's Surat unopposed. Now, the cancellation of Congress candidate Nilesh Kumbhani's nomination, along with the withdrawal of 7 independent candidates, has paved the way for BJP's Mukesh Dalal to be declared the Member of Parliament. And after Manipur, now election panel orders repolling at 8 stations in Arunachal Pradesh ahead of incidences of violence and EVMs damage were reported during the first phase of Lok Sabha elections. The fresh polling is scheduled on 24th April from 6 a.m. to 2 p.m. The ECI takes proactive measures to mitigate the heat wave impact during the general elections as well. The ECI held a meeting with the IMD, NDMA and Department of Health Research. The meeting was chaired by CEC Rajiv Kumar and ECS Gyanesh Kumar and Sukhbir Singh Sandhu. A task force was set up to monitor heat wave impact during the election period. Also, in a big blow to Trinamool Congress in Bengal, 25,000 teachers were fired as the Calcutta High Court cancelled the 2016 recruitment process for government-sponsored and aided schools. The court has said that the teachers were recruited illegally after submitting blank OMR sheets. The court has also asked them to return their salaries within 4 weeks. Moving on, cab-hailing company Ola is planning its IPO. The IPO will be held for $500 million. Let's go across to my colleague Saloni Kothari for an update on the IPO. Saloni, what are the key highlights about the IPO?
Right, Pallavi. So what we've gotten to know from our sources is that Ola Cabs is planning about $500 million of an IPO with an valuation of $5 billion. Now, this is coming after Ola Electric already had filed its DRHP in December, but it is yet to get the SEBI nod. So even for Ola Cabs, the talk is in a very much initial stage, and they are yet to finalize the lead bankers who will eventually process with the IPO process. And they are likely to be finalized in the next 2 to 3 weeks is what we've gotten to know from sources. And the DRHP is aimed to be filed within the 3 months. Now, the possibility is that the Ola Electric IPO may happen before the Ola Cabs filing. That's what the aim is. And also, they are aiming for the listing in the festive period. So now, after this, both Ola Cabs and Ola Electric will likely be listed this year, which is what the aim is. Just talking about the financial metrics here of the ride-hailing business, which is the Ola Cabs, the losses have narrowed to about 1,000 odd crores in FY23 from 3,000 crore in FY22, while revenues have risen to around 2,000 crore from rupees 1,200 crore. We are yet to get our hands on the FY24 numbers, but this is an IPO we'll definitely keep a track on.
Thank you, Saloni. Now let's shift focus to some international news. Israel's military intelligence chief resigns over October 7th Hamas attacks. The Israeli military has said in a statement that, quote unquote, Major General Aharon Haliva, in coordination with the chief of the general staff, has requested to end his position. The chief is the first high-ranking official to step down for failing to prevent the attack that has shocked Israel and the international community. That's all we have on this edition of The Reporter, but do stay tuned to NDTV Profit for more news and updates, along with our non-stop coverage of the general elections 2024. But before we go, we're leaving you with these visuals where Defence Minister Rajnath Singh can be seen interacting with the armed forces personnel at the Siachen base camp.
Hello everyone. I urge each one of you to exercise your right to vote. Your voice matters, and all our votes shape our collective future. Let us make democracy stronger by going out and exercising our franchise. Jai Hind.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. You know, we are the, in many ways, we actually are the generation which is going to build the country. You know, our parents spent their whole life building roti kapda makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June, so I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What?
Good morning and welcome to NDTV Profit. We're now tracking Talbros Automotive as the joint venture company Murali Talbros Chassis System Private Limited has secured a landmark multi-year 1,000 crore contract